Good morning, everybody. Give me 1 second, please. Good morning, good morning. Today is December 16th, 2025. We're live from Princeton, New Jersey. What we will do in this live stream is best analyze the intraday stock market using cyclical analysis, time confirmation, fundamental analysis, technical analysis, and more to find the wind direction, trend direction. Time is 9:26 on the board. Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only, and it is not legal advice.
We're going to get right to our next guest here to talk markets, the economy, the Fed.
Good morning, Meet the Car,
M&A,
Scott,
AI,
Chris,
healthcare,
Zach,
and so much more.
Love Monkey. Good morning, everybody in the WhatsApp group. Good morning, Harry, Shakima, Sandra, B. Turner, D. Robinson, Donna, Ali, Brian,
your finger on the pulse
Ethan.
of the corner office of businesses around the world.
I don't know this guy because he has the emoji on his name. Good morning, Kevin. Good morning, She. Good morning, Syed. Good morning, Vinny. Good morning, Ron. Good morning, Edison. Good morning, Chris. Good morning, Lovely.
I think things are good.
Time is
Confidence is
9:26. The market is opening here in 4
in which the
minutes.
U.S. economy in particular is increasingly.
We have a bunch of news coming out overnight.
So the AI parts of the
Tesla
economy are
stock
booming,
broke out,
and
but
the
this
rest
long-time bull decided to take profit. Apparently yesterday, Cathie Woods and ARK continues to take profit at Tesla
is
on
filtering,
Monday
cascading
with
through the rest
$60
of the
million.
economy, or do you think it's genuinely concentrated? I mean, there's sort of two views. One is, yes, the money is concentrated, meaning coming through the system, but it's actually making its way through the system, or not really?
Not really yet. And I think the way this bet will play out just simply is either it'll work or it won't. If it works, top line growth is probably going to be okay. But I'd say we probably will have a jobs crisis because labor markets deal well with small problems that happen fast or big problems that happen slow. They do not deal well with
yes
big
is opening at the
shocks
top
that
of the
happen
gray box
quickly.
here, area of conflict.
Well, if the AI hedge pulls off, pays off, I would
Yesterday's
probably
4
put my
p.m.
money on
close
that.
below.
The alternative is this is all
is below the
overhyped.
4
We're going to
p.m.
wind up
close
with
of
the
yesterday's
equivalent of an
close.
inferior version of dark
IWM is at the
fiber,
bottom of the purple
and
box
then even top line growth.
Good morning, everybody. Good morning.
I mean,
good morning, Vinny. Good
There
morning,
has to be a
Jordan.
third
Good morning,
option.
everybody.
I want a third option, right?
But by the way, you're investing even inside Lazard in a lot of AI. Do you think it's changed the jobs
Opening in a minute,
inside of
2 seconds.
Lazard itself?
Not yet, but I do think it's going to allow us to take the analysts and associates and even the VPs and upgrade their skills more quickly. And then the question becomes, how are you training the next generation of managing directors?
But is that less? I mean, one of the things we're seeing is kids out of college are actually having a much harder time getting a job. And is that a function of some of these white-collar jobs where folks in your role may say, you know what, maybe we don't need as many analysts as we used to have?
Not really at Lazard yet. It may be true in professional services. There definitely are anecdotal reports of that.
Last week at the Goldman Sachs conference, there was a figure, you're going to increase productivity per managing director by $1 million. And is that AI? Like, how do you do that? Like, what does that
was very specific. I mean, we've already increased productivity by more than that. So I just finished 2 years as CEO of Lazard. By the way, more than 80% TSR, total shareholder return. So we're off to a great start. Very excited about the future. That was very specific about what happens when we bring a lot of new managing directors on, because we've been doing that.
So just training them
and as they ramp up, you get a productivity benefit because the first year or 2 or 3 on the platform, they tend to be less productive than once they get settled in.
How do you think about that, though, when you overlay AI on top of that?
Oh, I think there's a lot of opportunities. If you think about it, if we could have our bankers walk in.
Just straight up, is there somebody you'd prefer?
I know both of them well. I think they're both more than qualified. I think the key question is, how do they perform in the job? They are both perfectly capable of being a...
Fuck this shit. Wow. Bulls are trying on SPY and QQQ on 9:30. Let's see. I haven't left the Tesla. I was thinking about how market open, but I mean, hell yeah. Hell yeah. CNBC says stocks slip after delayed jobs data paint a weak picture of the economy. Hell yeah. Tesla, 470 from 480 yesterday. Hell yeah. Okay, I'm out on this Friday. Tesla puts 9.1K. I'm riding next week's Friday on Tesla still. Hell yeah. Wow. Hell yeah. Hell yeah. Come on. Hell yeah. IWM at the bottom of the purple box. Bouncing trying. QQQ. SPY all at 4 p.m. close. Tesla's the only thing now. Hell yeah. Bottom of the purple box. Testing. Trend line testing. Trend line testing. Fucking Tesla. Tesla hearing. Market is bounce trying. I mean, we had 2 red days consecutively, but if Tesla, wow. Well, that's great. Wow, they're going. I don't care. I left Friday already on Tesla. December 26th Tesla puts is 1.6% down right now. Let's see what happens at the end of the day. Nvidia, 175 minus 0.4%, 0.04% dog shit. SPX opening at a new floor. This is the 3/3. Alright, cycle extending now into the 3/3. This could be the floor, but I mean, for now, at least they're going lower, so. Alright, this fucking chart looks fucked. We'll come back to this shit later because I want to redraw this later. Q. Nothing's bearish except Tesla. That is amazing. Nothing's fucking bearish here except fucking Tesla. This Cathie Woods fucking news coming in crazy to help, right? The news helps the setup. That's literally what's going on. Look at this shit. On Monday, Arc Woods Innovation, blah blah blah, sold combined, blah 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 blah. This is some bullshit. I love it. It's some fucking bullshit. I fucking love it. Oh my god. Fucking setup. News helps the setup. Some fucking bullshit. But I fucking love it, man. At the fucking tippity top, 482. Some fucking bullshit news coming. I love it. It's news though. It's not bullshit. It's like setup news, real news. Right, but people do not like ARC ETF at all. They do not. It's like fucking.
Let's begin though with market reaction to the delayed jobs data, Jim. Once again, it's basically education and health services that are doing the lion's share of the work.
Yeah, we don't want that. That's the old days.
IWM. Let's see how this does. Purple box. And most important thing is this bottom of the purple box.
Yes. In which you were quoted, or at least referenced.
It was quoted, I think, during an interview we conducted,
yes.
Carl. So it's nice to know that we don't count at all.
Yes.
You drove right down to the heart of what I was going to say.
SPX open down below.
No, I just think that there's one of the problems, I think Mike would tell you this, we don't have, there's a mismatch. Like, we don't have the people who can do those jobs. They can't pour the concrete, they don't know how to put the rebar in, they don't know how to move the racks in, but we do have people who can do healthcare. And it worries me. Because
3K profit
no
on
that.
Tesla,
like putting so many
almost.
People to work. Michael Intrader sitting down with lots
fucking
of good people,
near done.
Trying to change the
including my December 26th.
If I were President Trump, and I think we get to be
fucking near done crazy work.
Setup of our show. I'd say
this shit was at 470 fucking 7 yesterday, bro. 4 fucking 77.
Yeah, triple that.
People don't fucking realize.
How do we do that?
We're at 468 now, man.
1%. So you're now in agreement with the president that we need.
I said all day yesterday, right? Tesla's the only thing holding. Tesla's the only thing holding. Tesla's the only thing holding. If they let go of Tesla, market gonna go, and they did it overnight.
Mr. Hasser, would you lower rates?
That's fucking some wild shit.
Be a little more creative than that.
That's actually some wild shit.
I am saying that all the time.
Oh my god.
Judge and The Apprentice.
Bounce trying on SPY. Let's see if it breaks the HOD here.
You don't do. That's not going to fly because that doesn't fly.
This is morning cycle. There's an algo range at 9:30. Floor and the roof. The market is deciding what to do at. Well, I can't even call the wind direction north or south yet. It's just all I can say is the market went red 2 days in a row, yesterday and the day before, and it's trying to figure out how it wants to form any sort of bounce, but a confirmation or not.
Joining us now for more on the market.
Sorry about that.
Markets and jobs, Joe Amato, President CIO at Neuberger Berman. Joe, great to have you with us.
Good to be here. Thank you.
It's interesting to get the
470 Tesla, man. This shit is, God bless, open anyway.
I think the data is really important. I think the state of the labor market
lower
is
than
one of the
pre-market
critical
low.
issues
What
in
the
terms
fuck?
of determining what the Fed path is.
That is crazy.
You know, our sense is
I was gonna be happy with fucking
to see
475,
a
470,
labor
but this shit
market,
with fucking
and that,
466.
the
Oh
Fed
my
to
god.
be more dovish
I don't.
possibly than the markets even expecting right now.
That is so
what do
fucking
you,
crazy
how
fast.
do you think about the Fed in 2026 and the impact on equities, but in particular on rates? And I'm wondering because even if we get a new Fed chair, that doesn't happen until after May. There's a confirmation process. It seems like everything is very back-end loaded. And
wolves are playing on
somebody
Tesla,
to believe that there are a lot of cuts
Tesla's
in store.
the most important watch of the day today.
In succession,
the second half of along with QQQ and IWM.
Our base case is you're going to see one more rate cut. The market's right now pricing in
IWM rejection trying. SPY is testing the roof of 930. There's an algo range at morning open. Wind direction is now not north or not south. It's just deciding what to do.
Lead the Fed to be accommodative, but
getting people involved that morning
watch
open.
The pathway here based on what the what the short-term data shows. We think the short end's going to come down, the long end's going to stay reasonably stable. I think you've got sort of return to the carry trade to a degree, which will keep the long end stable. So we think fixed income is going to be somewhat more boring next year than you saw over the course of the last year.
So even with central banks around the world,
people should come into the day mentally prepared. Is what I'm trying to say today.
The BOJ is going to be meeting.
Have a positive outlook.
That's not going to be pulling up our
life.
I do think you've got a divergence of monetary policy for sure. Whether it's Australia, Japan. But at the same time, I think
nimbly not stress people
in China, and I think you'll have accommodative policy in the U.S.
Being stressed and being negative
right now is this tug of war between what's the state of economic growth, labor market, and what's going on with inflation. That's why you saw last week with the Fed votes, you had a pretty big divergence.
35.
You had some people not wanting to reduce rates, others wanting to reduce rates a lot.
We had
and I think that's where we're at this
U.S.
and that's why
jobs
the data
data
so
come out today.
What we're seeing right now, what we'll see in the coming months.
So how does this set up for 2026 in terms of the equity picture?
IWM.
I think the equity picture is
testing
constructive.
the bottom of the
I think
purple box.
We expect an increase in nominal growth in 26, which
got
should continue to help boost earnings, which have been strong over the last couple of quarters.
QQQ looking strong because the Tesla right now or something
over the course of
strong as in this small tiny cycle 935 to 940 at the minimum.
You've got
SPY and IWM is rejecting here, so one of them is faking out. We'll about to find out which one.
Purposely so, right, in the context of the political environment that we're seeing. And you've got deregulation, which has been kind of bubbling in the background, that we think is going to be helpful in boosting confidence.
So the fiscal stimulus is, what are the main things? I mean, is it the tax refunds? It's R&D expensing?
I think it's incentives
Look
for
at Tesla reverting right now.
On the consumer side, you've got some level of tax rebates that you're going to see, which is always helpful to the consumer.
Maybe.
But I think the more sustainable issue is incenting companies to invest more aggressively in CapEx.
Insane.
And I have to ask you about the Fed chair.
Is this a trap on Tesla? Is this a trap on SPY? SPY wants to go south. I don't know what's pushing SPY so goddamn south right now, but maybe IWM. IWM's not even down here, so something's kind of weird.
Is an important determinant of the pathway. And having a credible, independent view from the Fed critical
crazy.
to keeping the bond
market
stable,
crazy
right?
doing this shit with 2 days red day in a row, and they're going bearish, man. I'm not going
lost
on this
for some
PX. They're going crazy.
Reason and the long end of the curve gets unanchored, then I think all bets are off.
3 days in a row.
Are any of the candidates, do they concern
Oh
you?
my God.
All the candidates are very credible. I mean,
3 days fucking in a row. I'm not chasing this shit. Oh my God.
So,
so you fucking
and I don't think Fed independence is something that is like a light switch on and off. I think it will, either grow over time or
I don't know.
not.
I'm going to watch.
The leadership of the new Fed chair is going to be important.
SPY at the minimum. We have a downward trend on QQQ.
Thank you.
But they're really just showing morning south, like, bro. I am not inspired QQQ. I'm watching. I'm on Tesla next week, Friday, so I'm watching it. I was low-key thinking this mentally, too. I was like, what if they showed 3 literally red morning rips down in a row, and, like, this is some fucking crazy shit. I highly doubt it for some reason, but, I mean, here they are, fucking going south. It's fucking crazy. I'm rejecting the purple box. I mean, the setup's there. Setup definitely there. The thing is definitely in a downward trend line, not in a fucking upward trend line. QQQ is definitely in a downward trend line showing, so maybe they go down here and then they U it up and then, I don't know, trap and then turn green or something, but I don't know, we'll see, man. Time is 9:42. 9:42 is the LOD on SPY. 9:42 is the, I am not chasing this shit, but they're going south. From 9:35 into 9:40 on QQQ here. It's fucking so, I mean, honestly, you gotta think about it. The environment is QQQ is bearish right now until it's not. So that's what the news is doing too. They might be just bearish off the shit, off the rip, going south right now. Bears are in control here, off morning rip. This is the 3/3 bearish cycle. There's going to be a cycle that happens, basically, even if they go lower here or not. It's just... Sorry about that, folks. Man, they're talking bullish on things like Google. I said Google was bearish 3 to 4 days ago. Google, Meta,
we mentioned the Google 60%. Most of that move was in the second half of the year.
Starting. And
it's
Google
sort of
and Meta went down 1% respectively overnight.
It's no longer a top pick because of the recent run, but you still think it is
time is 9:45.
In the buy
they want to go south still for another candle or two, maybe, or another cycle or two.
15 times earnings to almost 30 times earnings in a
coming
6-month
bearish,
period.
RSI going bearish.
I think the real opportunity was it was so oversold.
This has to be
sure
3/3.
It's overbought. I don't think it is. I think it kind of hold its multiple. It's kind of at the high end of the Mag 7 in terms of the multiples. But I think it can hold it, and now it's a compounder, which means I think they can grow 20% a year. So the stock's
so make sure we all hit the likes on
it's
the
not
live
dramatic,
stream, folks.
But you know, it's a name that you want to stick with because they've kind of proven everything they sort of needed to prove, which is that they're successful up and down the tech stack. What else could get much better about Google? I think that there's a chance for a re-acceleration in revenue at search, at YouTube. Waymo's still building out, and cloud's going to be north of 40%. I think that kind of growth next year. So I just like the fundamental setup in it. If you're a long-term investor, you stick with the Google.
How do you see Gemini 3? I mean, part of the upswing in Google shares is a perception that Gemini 3 is doing so much better. How does that play out into 2026 in terms of trajectory? What do you see in terms of uptake and other monetization?
I think actually that's one of the risks to Google because this is going to go back and forth. And, you know, the ChatGPT 5.2 came out. I'm not sure it overwhelmed anybody, but you know, the models get better and better.
Oracle,
so the idea that Gemini
Tesla,
can be the leader of
I don't know what the fuck
language
this shit
model
is.
board for the next year.
I don't know what the fuck that shit is, but I mean, they're ripping it down south today in the morning.
Meantime, I think you're going to get a new ad model at
no
some point.
goddamn joke. This shit
You're
is
just going to get an ad model coming out
bear
of ChatGPT. So
in
there's going to
fucking
be
control on this
real
mode. No motherfucking, they ain't fucking playing
We
around.
haven't seen it yet, but it's coming.
They ain't
It's one or
fucking
two
playing
pending
around.
negative catalysts. I don't think it takes the stock down a lot, and if it did, it'd be a great opportunity to leg into the Google stock.
Do you think, though, on the large language model front, that it's about the model itself at this point? Or I actually think the models are almost
what did I say
so
on the live stream on FOMC, right? I said, hey, these people could be doing this shit with the what? Top of the FOMC. What did I say? Meaning, with the top of the FOMC, right? What happened at the last top of the FOMC? October 29th, 2025. What happened at the top of the FOMC? They're ripping this bitch down, bro. They fucking deleting calls at the fucking tippity top.
If they could productize things that actually, really texted you back and really gave you an email to return and really
AVGO, set up Oracle, set up Tesla, set up like this is not coming down. In all of it, there's NVIDIA. In all of it, there's Google and Meta. That's the entire fucking market. Like, fuck you talking about Tesla's gonna go rip up and it's gonna stay off the market? Like, no, fuck out of here. That's the entire fucking market. Like, bro. Oh my lord, what I say? IWM, right? What the fuck did I say? IWM at the top, Tesla at the top.
If it got the leading model, it had more monetization opportunities than anybody else because it could roll the
amateurs
large
and
language
fake
model. It could
gurus
roll
and
Gemini,
fake traders,
which they did very quickly, into YouTube, into Gmail, into Google
That's all fucking. That's all it is. Some fake ass shit is done for.
Into YouTube, into across all of their assets. So could they monetize it? Absolutely, they could. ChatGPT is not going to be able to monetize as well unless they build.
All right, let's see what happens here. This is a 3/3. Right? This is literally 3/3
users there. That was always Google's advantage. The question is when would they really turn on
it could bear trap off
and
this.
It helps that you had a lot of great competition from ChatGPT.
Doesn't mean they have to go lower. I think it literally trap it here and then cycle.
Long term is, are people going to go back and forth between the
shit.
ChatGPT
I use
and
it
a
at the
Gemini
market cycle
or
and then
some
go
other
on.
service? Or
Momentous moments. This is literally market cycling, but the beginning of
product that people then stay there. Or you could argue a flip side, which is the sort of persistent memory
9:45 bounce
right now ChatGPT
at the last minute at 9:45, 9:46 into 9:50, ripping it.
Arguably,
POC.
Knows you better in terms of.
This is what I was talking about, though. They were literally showing morning rip down, and then now they're bear trap trying. So
reporting in through APIs into
that's the reason why I didn't chase. But wow. Market is moving.
I would hope that people would
Tesla
kind of use both and maybe other large language models.
470, 473, but I mean it's not moving crazy in terms of the bigger picture.
2 or 3, maybe 4
but it is moving
large language
volatile
models.
Does that mean that the whole business is commoditized?
NVIDIA is shithole.
And therefore, then is there the value prop?
Shithole yesterday, shithole today. Maybe
is
something gonna happen later.
Or OpenAI worth $1 trillion? Is that possible?
I guess if I felt like there were going to be 20 large language models,
all these bears trapped off of 9:45 now too. All these bulls trapped at 9:30. Bulls and bears trapped.
Large companies, the
market deciding what to do.
Are going to have a data personalization advantage at some point, and consumers are only going to reach out.
Zero
and businesses are only going to reach out and
but
use
Friday expiry on Friday.
Models. So I think there's going to be
into 9:35. They should reverted $10 up. It fucking reverted $10 up. Oh my god. I'm not feeling the pain that much because I'm literally next Friday now. But I mean, while I think if I was into this Friday, it would have been fucking crazy because that shit really went from 6K to 9K when I sold. So I ain't gonna lie. That is a huge move. I think they might have gap filled here. Let's see on Tesla. They're going for the gap. Looks like at 475.49 already. Off the rip. Off this morning rip.
Of that number is Laura Ulrich.
Talking about jobs data like crazy today.
Good morning to you. We're going to talk about what you're seeing in the jobs market, but before we get to this number a little bit later, is there anything you think we could possibly even take away from this number?
We're showing one direction north on Tesla right now. Gap has been filled here.
So many
4 p.m. gap has been filled. Play is done.
One-time items in it that we almost have to just look away.
1 minute
Thanks for having me this morning. I think this data will always need an asterisk by it because the methodology is different. And to your point, it's going to be quite different than the normal jobs report we expect. However, I'll take whatever data we can get right now, and I'm really looking forward to seeing the data that we do receive.
Could be bouncing on the trend line. I don't know.
And what's your expectation given what you know about the market through all the data that you look at?
Yeah, absolutely. Based on the data we have at Indeed and other things I'm reading, I'm expecting relatively sluggish reports for October and November. I would be surprised if the number, if we hit it out of the ballpark in those 2 months. But in our Indeed data, we're seeing kind of a continued cooling, but it's leveled off some.
QQQ looks I mean, Tesla looks maybe trying bullish, but SPY and IWM looks kind of scary as hell to me, this coiling action. Could revisit down here again and then bounce up, creating some sort of weird-ass V-shaped tube, and it could rip up and then reject. But
given the data that you see, is there any new look at that?
Yeah, I'm not playing.
Yeah, I think, in many sectors
Too much. Bear trapping off a morning open. That was my deduction as they were going lower, but I don't want to play this shit either. Like, what the fuck is this?
Sectors right now, and so in those markets, we wouldn't expect to see strong wage growth, right?
945 to 950, ripping crazy.
Excess labor supply, but there are still some fields. Healthcare.
Look, I didn't trust the fucking rip down, and now I was like, I don't trust the rip up, and like now.
I wouldn't expect to see it pick up as long as the labor.
They doing it though. It doesn't matter if I trust it or not. They're fucking moving crazy.
If it's as sluggish as if it ends up being as sluggish as you think it is.
477, 477 to 480 going higher. So this shit is insane already.
I think AI is having an impact in certain sectors, specifically in tech. And also some other sectors that we believe are heavily impacted.
Back to yesterday's highs again.
But honestly, at this point,
that is insanity.
That there might be more of an impact from the anticipation of what AI can do.
466 to 477.
Right now, if that makes sense, right? Companies are investing very heavily in AI. They've shifted.
And you just think they're holding off on, and therefore holding off on hiring, or just moving their
now it's counting as a 1.7% minus
and then
on Tesla at market open. And then it's now positive by 0.4%, so it ripped up 2%.
Could you ever imagine a moment where they say, you know what, this is
Tesla ripped up 2% just now to the HOD 950.
Yeah, I mean, you hear about that some, right? You have heard some companies come out. There have been some.
I'm so fucking glad I left my Friday expiry. Holy shit!
Holy
shit, that's crazy.
Here is really important. Wow. AI is going to transform the labor force, but the moment in which it actually does that and actually has the capacity to take over jobs people are doing may not time
cycle too, but that's crazy. This shit from here to here is 2%. Minus 1.7%, and then it literally just went to 0.4%. So
okay, we're gonna leave it.
I actually want to draw that shit. That's crazy.
Thanks.
Minus 1.
No matter what's on your plate or on your mind, the UPS.
All right, this shit is now positive 0.04%. That's a 2% rip up real quick. Time is 9:55. 950 is rejecting back into the algo range to cycle or something. See, my deduction was either they reject it here to this algo range and then go up, or they bounce it up and then they reject and then figure it out. But that's literally what they're doing. The latter looks like. Man, they're moving crazy. This is
today. Ether drops.
Morning market move.
Joining us this morning with some reaction first from the White House is the National Economic Council Director, Kevin Hassett. Kevin, good morning. Good to have you.
It's great to be here.
A lot of information that the street's trying to absorb. How do you characterize both October and November?
Yeah, I think it's best to sort of combine the two. And if you do that, then you're looking at private sector gains of about 120,000, maybe 121. And then we dropped about 160,000 government workers.
Who wants Kevin Hassett as our Fed director? Say
we began that program in the spring
Kevin,
and gave people to the fall to
if you do not want Kevin Hassett as our next Fed director, say
it's just about what we've been getting all year. It's solid upward trajectory. The president's
Kevin, I say.
Since he took office about 700,000 jobs. And so I think that, like the vast majority of the Bloomberg people polled were surprised on the upside, and I think that we were surprised kind of not at all. We think it's about on trend is what's happening.
All right, so Kevin, Jim Cramer, I understand exactly what you said, but I want to be like the president. 64,000 people got a country of 347 million people. He calls you up for dinner. You come over for dinner, and he says, "Hey, listen, that's unacceptable. I need rates down to 1%. I need them now because we got to put more people to work." What do you say to him?
Well, my conversations with the president are private. I spent about an hour and a half.
Yeah, I don't think anybody feels
over a whole number of topics, including today's jobs numbers. The bottom line is that the president thinks that interest rates could be lower, and I think there's a lot of people that share that point of view. And the reason they can be lower is not just mumbo jumbo. It's because instead of getting growth out of a big demand push, printing money, having Congress mail checks to people, we've got a supply push. We've got dozens and dozens of new factory plant openings. We've got huge construction employment in these numbers. And so we've got a supply side shock just related to the big, beautiful bill and the trade policy. And when that happens, it puts downward pressure on prices and upward pressure on growth. And that's what we're seeing. And so he's right. And I think a lot of people agree that there's plenty of room.
5 minute going bullish on QQQ.
And frankly, if you look at central banks around the world,
in a
they're looking at the same kind of things that I'm
I don't trust this shit.
The Fed's rates
the way they're doing this shit, the cycle's coming in super fast. It's coming in really fast. Maybe this is really trapping every single bear from yesterday and today too, but I mean, I don't care. I'm not really going here. What is this?
Welcome to the ARK Venture Fund.
Right, I am seriously dumb, you two, because I'm missing something here, and I was missing it with Goldman's, I was missing it with Zoe, and I was missing it with every single guest here. Every single person we are hearing saying is we're really constructive on the US economy. We're constructive on the fiscal position, on the amount of money coming from tariffs,
I don't even
on
have
the
any
labour
thoughts of
market
doing
levelling out,
big
and
either.
actually, as you say, no higher, no fire.
I'm literally up 3K
the stock market. What's the S&P at the moment? Down 1% from its record high? It is down 1.5% from its record high. The Dow's down 0.96 from its record high. So there's no wobble per se in the equity market. It's not coming from the equity market. There's no great tension in the bond market as well. They're constructive on the underlying economy, and inflation is pottering just above level. So no great impetus for aggressive cuts there potentially. Why does everyone think that we need rate cuts if inflation's where it is, the economy's where it is?
Back in volume's bullish, but look at the candles just stacking and stacking and stacking, getting ready to fucking dump on Tesla.
Absolutely the dumbest person in the room.
Weird.
I heard you say that, by the way, out there. Am I the dumbest person in the room that can't see the reason for rate cuts if everything is hunky-dory?
Do I get to pick up on this? It's the dual mandate, isn't it? It's the jobs. There is enormous concern that the labour market is weakening more than anticipated. I mean, looking at some of the expectations that the payrolls likely increased by 50,000 last month. But if you look at some of the other views out there, BNP Paribas saying penciling a drop as much as 100,000. So I think it is the view. Are we looking at a slow-moving train that could pick up speed in the labour market? And that would be very hard to stop if you are seeing a loss of jobs, maybe fueled by the AI momentum as well that's taking away from the jobs picture. So I think they are concerned about that other side of the mandate.
I'll go with that, because I think you're absolutely right. We should be worried about the bottom leg of the K. But if that's the case, why is the stock market being called
we can't go higher anymore? Like, what the fuck is this shit?
2026, when the valuations by CAPE valuations, by any of the traditional metrics, I know this time it's different, but any traditional metric are not cheap as well. Why are we
I was thinking about re-entering into Tesla on Friday into this week, but I don't want to
Well, if you have a weakening U.S. economy triggering
my shit went back to break even on next Friday, so I'm just gonna fucking wait if they go back as whatever.
Growth stocks being surely that would
they moved from 477 to somewhere again today, I guess.
Not saying it will play out, but that would be the logical thinking on it.
I think you also have the potential for fiscal support to come through. And when you look back at the Trump administration's communication,
they're trying to show 480 right now, 482.
That's running a deficit of 6.7%.
You've got President Trump floating the idea of $2,000 dividend checks going to U.S.
These
consumers.
candles trying to be like, oh, bullish.
In terms of sentiment, that's certainly a positive. And I think that you can't underestimate this administration's creativity when it comes to coming up with new measures that help from a sentiment perspective. And I would just say, when you look back at the communication from the Trump administration, they've been very clear that the first leg of their three-pronged policy agenda was going to be focusing on tariffs, on trade. The next leg around deregulation.
Something else really worrying all of you here. And that is, everyone is telling us the same thing.
For 10 minutes.
Every commentator who comes on CNBC pretty much is saying the same thing. And I feel really nervous about that. I quite like being the one who's not at the top of the bell curve distribution.
What do you say? What is the same thing they're all saying?
Oh, we're constructive on the US economy. We're constructive on interest rates coming down 2 to 3 times in 2026. We think the market's going to rally higher from there. We don't think the AI trade is going to burst.
I would disagree that that's what we're hearing from everybody who comes across this desk. I think there is a reluctant bullishness on the market, but
we
had a strategist coming on yesterday who says we don't think the Fed's going to cut it all next year.
That's why I explode and just steam. Reluctant bullishness is still bullishness. If I say to
that
you,
is insane.
I don't want to drive 200 miles to see the in-laws over Christmas, but
like
I'm
almost
going to
nothing
do it.
going on, or one side's about to win. But I mean, they might be doing nothing. They might be showing super bullish on QQQ and Tesla, and they might be showing bearish on IWM, and they might just not do nothing. Or one side might win a little bit here, but that is weird as hell.
It was Europe first, United States again. We could
That's
be
something
shaping
to
up
be
if all the
cautious of,
voices
take
in
note
your
of.
view are saying the same thing.
Being at the
Does that set the
tippity
scene
top,
for momentum to
running
the
for
upside
15
yet
minutes,
again?
just
And
like
to
how
me,
it
if you look at
dropped
the
for
numbers we've seen
15
on the
minutes.
markets, it's
9:30
been
to
a slight
9:45,
correction. It's not been a
9:45 to 10
large-scale
a.m.
sell-off. A little bit of healthy digestion
It's the
doesn't
low
do
of the
any
day
harm
and
for
the
the
high of the
markets
day, and
after
we're
what has
drawing
been
out.
fever in certain areas. I mean, AI fever, defense stock fever, financials, bank financials in Europe, for instance. There have been parts of the market, I mentioned resources a moment ago. When something goes up in this market, it really moves fairly aggressively. I mean, Tesla, another example. You've had some stocks that have moved very, very swiftly, so a bit of digestion doesn't hurt here and there. So maybe we are setting the scene for a good 2026.
But if you're Warren Buffett or Mr. Combs, or who's leaving now, or anyone who's a
Cathie playing
long-term
both
investor,
sides on Tesla, huh?
you look at companies
Cathie
over a
play
long-term
up,
period, and that's exactly
out,
what you have
Cathie
to do.
play down, out, Cathie
I
play up, huh?
On my Insta now, all I get
Woods.
is Warren Buffett stuff. I must have looked at him a couple of times, and every time it makes sense.
This shit is pumping crazy now.
Yeah, well, exactly. They pick up, don't they?
480. Can you fucking believe it? I don't believe it. But holy shit! I mean, it's literally fucking crazy.
It's a great company.
Look at the MACD on Q. Look at the MACD on Tesla right now. This shit is.
It's come off.
It's literally fucking on a rocket. Elon Musk rocket, I guess.
It's come off.
I guess.
Why? Well, you're
big ass rejection.
It's come off. Look at it on a 1 year forward, but I mean, Karen made the point earlier in the show. This is a long-term story. So if you look at it on a 3-4 year forward,
still pumping with Tesla.
On defense procurement. Have you looked at the history of BAE Systems who were overrun on price on Nimble, overrun on price on frigates, overrun on price on submarines, overrun on price on aircraft carriers, delivering munitions on a long-term basis when you've got fixed price but variable costs? It's tortuous.
But you could say the same thing about Amazon. Take that stock and go back 10 years. Have you seen how badly retail stocks have done for the long term? Anything that is consolidating a whole ton of items, retail stocks do terribly.
You're right.
I mean, you know, the cloud services business,
right.
what is cloud?
So I'll tell you what I won't do. I won't buy
Look
Amazon,
at that run
I'll
on
buy
QQQ from
Walmart.
9:45 to 10 a.m., bro. It's no fucking joke. Look at that pullback. Look at that fucking trap at the top. Oh my god.
Just carry on in the same uniform.
You just got to look out to the horizon. That helps you sleep at night.
If you live in a New Jersey zip code,
I'm not gonna lie, that is crazy. Now they're fucking ripping it from the HOD again to the midpoint. This is my deduction here, man, that they're gonna go up and do this shit, but holy fuck, to actually see this shit is insane. Look at Tesla right now. This shit is crazy right now. Oh my god. It's moving insane. It's moving fucking insane. Oh my god. I wanted to re-enter Tesla again, but I'm chilling the fuck out. It's crazy. I wanted to enter here, but thank God I did not. They ripped up $3 more like nothing. Rip up and down like fucking nothing. Too. Yeah, literally almost everybody fucking just thinking. Oy, oy.
Just watching your money. Joining me now is 248 Ventures Chief Investment Strategist Lindsay Bell. Also with us is Mitch Rochelle this morning. Great to see you.
This is no joke.
Welcome
this
back.
is the 0.5 Fibonacci.
Yeah, thank you for
Bulls
joining
and
the
bears are
conversation. I want to
fighting
get
here
your take
with
on markets and
every
the macro
single bull and
story
bear
as
trap.
we look ahead.
Every
Futures
single
this morning
bull and bear
indicating a
trap
decline
at
at the start of
9:45,
trading.
10 a.m.
Fractional moves pretty much across
No
the board.
confirmation,
But of course,
nothing.
this is on top of a loser
There is
yesterday
no
as well.
confirmation,
All major
nothing. Market is
indices
deciding what to
lower
do with
yesterday,
everybody.
led by AI stocks. Another sell-off there. The Nasdaq was down 137. You had Broadcom, Oracle, CoreWeave sliding. Investors worried about
Tesla
all
day.
the spending
Just
on
like
data centers
yesterday.
and this build-out and how
Near
ultimately it's going to be
goddamn
financed.
so
Will we see a return on
fucking
investment here?
powerful.
Meanwhile, the Trump
IWM too,
administration
but
unveiling a new
near
U.S.
goddamn
tech
so
force,
powerful
hiring
to
about
whatever
1,000
Tesla
engineers
doing.
and specialists to
Every
build
single
AI
time Tesla
infrastructure and
bounces, we'll
modernize
see
federal
market
systems.
bounce. Every
The
single
two-year
time
program
Tesla
brings
goes
together
lower,
tech
we'll see
giants
market
like
go lower.
Amazon, Microsoft,
Every
Google,
single
and
time
NVIDIA
it does
to
something,
boost
it'll
US
stop the
AI
market from doing
capabilities
other
and
shit
compete
too.
with China.
Just like how the market does
Lindsay,
the
where
same
do
thing
you
on the
see
Tesla
tech
too.
at this point? How do you want to allocate capital here in the new year?
Yeah, I think tech is still going to be a very important component to the markets in 2026. It's going to be the key driver of earnings in 2026 as well as margin expansion, which is expected to support markets going forward. If you guys think HOD is going to break,
say I think HOD is going to break. If you think LOD is going to test, say LOD is going to test. If you think it's going to chop and do fucking jack shit, say it's going to do nothing. I really think is that
this is going to be the year that the AI technology broadens out into the rest of the economy, and it's going to support economic growth across the board.
The most safest opinion is to think nothing's going to happen.
That corporate America is going to be spending big
We're just going to do it
as well. It's not just the hyperscalers. But I guess the question is, do you look at this AI revolution the way you looked at .com?
Insane candles, right? This is literally just candle pulls almost at this point.
The Amazons of the world and Googles of the world doing
This is like opposite day candle pulling. I just realized that. This is nothing. This is a market sentiment. Two people voting HOD, one person voting LOD,
I think there's going to be winners and there's going to be losers, but the fundamentals of the hyperscalers, which are the key drivers right now
in the WhatsApp group, Benny says LOD, Mike says LOD.
Positive.
Down day today, that's crazy. 3 down days in a row is hard.
Excluding Meta,
Scott says chop chop. It's like unhealthy to see that actually.
Versus 29% CapEx growth in 2026. So there's a lot of
we could go LOD too and revert up
the CapEx spending not coming through. But I think that
I'm going to send the SPX put to call ratio here. 3 people voting HOD, 1 person LOD.
This is sort of a moment in time where it's going to accelerate broader economic growth, Mitch, and I wonder if you agree with that. And by the way, did you see Tesla hit a new all-time high? First time we've seen a new all-time high this year for Tesla. Elon Musk, CEO, confirming that driverless robo-taxi testing is underway in Austin, Texas right now.
You got to see the SPX put to call ratio right now.
On public roads with no one in the vehicle, a key step toward fully autonomous ride-hailing. Mitch, you think we're actually going to see these things on the road?
Well, I was just in Vegas. I saw the Waymos. They're all over the place. I'm not getting in one of those things.
I
don't. If it's on a track, like in an airport,
maybe
I'll get in it. But like, it's just right on the road.
There's a lot of
Here's an interesting thing about
here.
Tesla. 75% of Tesla's revenue comes from the automobile business that they have. 25% comes from services and energy. Okay, and here's the great thing: their revenue growth from autos is down 10%. Their revenue growth from services, and I don't know if this driverless car is going to fall into services and they're going to be competing with Uber, is up 23%. Their energy business is up 43% in terms of revenue growth. You have to look at Tesla, not like Ford, not like GM, not like what used to be Chrysler. You have to look at them as a technology company and a completely diversified organization that's solving problems for the next decade and beyond. Their energy business is really a big piece of their business growth, and that's why I think the business is up.
We can see a rejection here too, just like how we saw a bounce at 10.05. There's a lot of calls up here, so there's a lot of fucking puts down there too, and they're just, oh my god, man, I don't know. I just want to see here. I want to let the cycles build here for a couple of minutes.
Mitch, we're getting some data out this morning. We're getting the highly anticipated jobs numbers, of course, this morning at 8:30 a.m. Let's take a look at interest rates this morning and where the 10-year is, because we've been watching rates go up. Right? We're sitting at 4.1% on the 10-year, and we'll get the November jobs report and the October retail sales report out this morning at 8:30 a.m. Eastern. The jobs report will also include October payroll figures, which were delayed by the government shutdown. Economists expect 50,000 jobs created, with the unemployment rate holding steady at 4.4%. What's your take on the macro story right now?
I think the jobs market is weak. And has a lot of cracks in it, and it's not, we talked about AI, it's not because of AI. I think it's because of corporate overhiring. But this jobs report, the delayed one, the October-November, I think it's going to be stronger than they expect, and we'll find out if I'm right in an hour and a half, because I think all of the holiday jobs were there. Retail sales in stores were up big, and I think that, and I saw, help wanted signs in brick and mortar retailers. I think you're going to see
there's a fuck ton of calls here,
and those are two big job drivers. So I think we're going to see those job reports strong, but that's seasonal work.
Fuck ton of calls. Fuck ton of calls. Fuck ton of calls. Holy shit!
Needs to continue to cut rates.
Just like they're burning everything basically.
I mean, I feel like things feel good, but jobs, I'm not sure. What do you think, Lindsay?
Yeah, I think it's at best a stalled jobs market.
They're dropping or fucking chopping at the
minimum.
Is
you're
my
seeing
opinion.
less and less hiring, right? And the permanent unemployment rate is becoming a bigger contributor to the overall unemployment rate. So I do think that is going to be something that we have to watch going into the new year because while
Tesla
I'm optimistic about the market in the new year, I am a little bit worried about the consumer. The consumer has been quite resilient.
That is not a lie.
I think the retail sales number that we're going to get today is going to be good. The question is, can that continue? I think they will get the benefit from lower oil prices.
There's a lot of fucking bears down there. That's the thing. They get fucking LOD test trap, LOD hope trap, everybody, or fucking even midpoint trap here.
I think there's going to be some fits and starts because wage growth.
No volume. There's a fuck ton of puts down there too, just like there's a fuck ton of calls. This is no joke. SPX is going up and down like no joke.
In manufacturing, that I think in the year ahead, you're going to see new jobs. I mean, in 2026, you'll need more construction workers and more electricians and more plumbers and more, people working on what is in
They're
that
deciding
big
what to do.
bill.
It's 50-50. It's 50-50. It's not bearish, not bullish market deciding what to do. It's bullish and bearish.
In the year ahead.
There's a lot of people thinking everything too.
Because of the really big increase in productivity, I think we could be looking at a 4% productivity increase next year, given how much acceleration there is in AI.
There's too many puts down there. They could chop it like crazy.
What happens is that workers are able to produce as much stuff as the firm needs.
At one point, there's way more calls up there too, but I mean, they went up into 10
we're seeing that recent college graduates are feeling stressed right now. But our expectation is that this is something that's going to work out quickly. The AI economy is moving much faster than the dot-com economy of the 90s. And the coaches that AI is producing are going to help make a lot of productive workers a heck of a lot of money. And the bottom line is that we're seeing that real wage growth is really high again this year after being down $3,000.
Tesla broke yesterday's high for sure. So
all
that's
this
why I'm saying
productivity is putting more money in people's pockets.
So what do you think, Mitch? Because when I say I'm worried about jobs, I'm talking about longer term, the impact of AI. In the year ahead, I think jobs are going to be plentiful. What do you think?
I'm not worried about long term in AI. I think AI is just going to make
let's see. The MACD volume is the most important here.
And more efficient. What I'm worried about is, to the point that Kevin Heston made, recent college graduates with the right degrees can't find jobs because those employers, consulting firms, accounting firms, Wall Street, they overhire.
Going south.
And they're just, working through the staff that they have. That's a problem when we have disenfranchised, swaths of people that can't find jobs.
But you're bullish about 26?
I'm bullish about 26.
Confirmation rejection at 10-10. I'm not chasing this shit. It's 10-15 in 5 seconds.
Trouble down the road.
You want to buy stocks going into the new year?
Yeah, I think next year is going to be more cyclically oriented. So industrials, materials, financials. But you got to be in tech too.
Yeah, all right. Lindsay, great to see you. Thank you so much, Lindsay Bell. Mitch, you're with us all morning long. We're so appreciative of that. Stay with us. We'll be right back.
Throw it as hard as you want. Go on. Watching it zip away feels like it might just keep going, right? Nope, here it comes.
Sorry about that. Algo range trying. This stupid percent guy keeps coming out.
Kevin Hanks, CBOE pre-bell playbook, live there. Good morning to you, Kevin. We're going to get to this jobs report too. Your thoughts this morning. Good morning.
Good morning, Nicole. Yeah, we've got a lot to go through, a lot of data, some of it meaningful, but I think if you look at the data, it's actually not as bad as everyone thought because there's... But let's get to the data. The non-farm payrolls for November, 64,000. That's higher than expected, 40,000, but you mentioned the October number. The 162,000 jobs
they went lower
lost by the federal government.
Here's an
Remember what this was, Nicole? It was, this are all the deferred resignations hitting in October. That's why that number looks so big. It's a little bit different if you explain it like that. Remember, these were the people that took the deferred resignation earlier in the year. They stayed on the payroll till October. So that accounts for the big number. Now let's get to the rest of the numbers. Unemployment rate. The official number, 4.6%. The real number, 5.73%.
Set up.
Rounded up to 4.6. We got private payroll, 69,000. A nice beat there. Again, here's where it gets really interesting. The wages data. Wages data month over month up 0.1%. Year over year, it drops from 3.8 to 3.5%. So you've got a little bit higher levels of unemployment and a little bit lower inflation data. So that should set up the Fed for more interest rates coming in the future. And like I said, that scary number for October, if you look at it like this, Nicole, the federal government in November lost 6,000 jobs.
Bettish,
resignations. Now, that means since the January peak, the federal government has lost 271,000 jobs.
I want to go lower.
There's the numbers that show the weaker than expected labor market. It's really interesting what's going on here as the Trump administration continues to shrink the numbers from the federal government. Now, you look at the wages, and
they want to go fucking
lower levels of employment. Remember, we've been
fuck.
seeing that through some of the ADP data, that the wages data was coming down. So here's the gainers.
Look at the 5-minute turning bearish. QQQ turning bearish. IWM already bearish. They're fucking bearish.
Social assistance up 18,000 in November.
LOD
Transportation and
test
warehousing
incoming.
down 18,000.
LOD break
and again,
maybe
the
two.
big numbers from the
945 was a
federal government.
crazy bounce. 945 crazy bounce into 10, 15 minutes, and they bull trapped everybody at fucking 10.
It's neither
10,
terrible nor great.
Pump formation rejection into 10,
exactly
15.
where
10,
people want
15
it,
is
because
testing the
within
floor.
story,
10,
as you
20
just
is here in
broke it
10
down,
seconds.
There are details. Unemployment
Shut
rate
your ass up, Charles Schwab. Time is 10:20 here in 4 seconds. We're about to find out what happens with these time confirmations. Time is 10:15 and the bulls are fucked and the bears are in full control in the 3/3, testing the floor now into 10:20 now. Bears are in full control here, showing time cycle confirmation to everything. 10, 10, 10. Time is 10:20. They're getting fucked on, and the cycle is now saying they want to test the floor. I'm saying fucked on as in the cycle time confirmation here. Floor is testing and evaluating.
I'm Nicole Pedalini.
Time now for Options Corner. We want to bring in senior options contributor and co-host of Fast Market, Tom White, for a breakdown. So it has been quite the recovery in Tesla. A lot of that this past month. What do you notice in this chart, Tom?
Bears are crazy.
Yeah, Diane, it has recovered nearly back to those levels that we saw last December when we hit all-time highs. We had a rough patch there in April, along with everything else. In the overall market, but we've seen a steep
bearish as fuck
tick here now with the stock up about 10% so far in the month of December, as we've seen some reacceleration. Everybody's banking on the fact that, hey, this isn't an EV maker, which sales have been
People
falling.
are not caring about
this
IWM
is more of
and
a
IWM.
robotaxi slash
Tesla
humanoid
and
robot
many things have
type
set
of
up.
company. You
They
see
are
those old
taking
highs
lead on
above
a
488
lot of things.
last December. And
Look
now
at
we're back
IWM
near
today,
those
purple
levels.
box,
Stock
hovering,
looks like
and
it's
then
going to open up here about 472 here. Now we're back above the 50-day moving average.
This is floor testing now. Let's see what happens. Whether the floor breaks or not.
That 200-day moving average, this is the biggest gap that we've seen since
I literally
last
said
December,
5 minutes ago, 4 minutes ago in the WhatsApp group. LOD floor testing, LOD hoping coming right. This is the LOD testing, LOD hoping.
Price target
Look,
hikes
it's
out
about
of
a cycle
Mizuho
here.
today. Yesterday out
I
of
said that
Dan
at
Ives.
10:16,
So
10:15, right? At 10:12, I've been saying this shit. Actually, look at the fucking WhatsApp group. Literally, look at this shit. There's maybe 10 or 15 people that I've watched that have saw.
And where some maybe support levels are in the near term here. You see that 1-year chart from those April
10-12 turning bearish. MACD volume needs to build. Watching building southward. 10-12, 10-15 IW is bearish. SPY at QQQ bearish at 10-15 higher time frame. 10-15, 10-16 they want to go lower. LOD
some support
hope
in
test
those
incoming.
areas, and then you've got that 200-day
That was
moving
way
average, which is
before,
also acting
right
as
here.
a big area of support.
10,
We're
15,
actually in
10,
an
16,
area of
10,
no man's
12.
land up here to the upside
And now
as
they're
we've
at the
recovered
3/3
to
deciding what
those
to do
levels
with
that
the
we
floor.
saw last December. RSI down below here.
Candle traders
about
are
the
fucking
65
done for in
level.
this
So
century,
not
man. In
overbought
this
by
fucking
any stretch of the
environment, in this
imagination.
fucking
We've got to
world,
wait for that to hit about
in
the
this
70
time,
level till we're
roaring 20s,
overbought in
2020s.
Tesla
God
stock.
bless
But nice
yourselves.
recovery here,
Think
Diane, over the last several months.
Think your life and think your sons
so
and
what's
daughters.
the approach for an example trade,
Tell them you were literally
some of the volatility that Tesla can
deducting
have
through the
is
roaring
just
fucking 20s,
idiosyncratic
because this is going
to
to be
that
something
company. What's the
historical.
approach you want
We're
to take?
just going to find out 5,
Well,
10
this is
years,
that
15
bifurcated
years,
stock.
20 years
So
down
whenever I
later
look at
in our lives
strategies in
when we're
Tesla, I
a
want to
little bit
make
older.
sure I'm pretty tight as
Doesn't
far
matter
as
if you're 20
duration,
years old,
and
30
I don't
years
want
old,
to kind
40
of be a
years old,
hero
50
on
years
any
old,
of
60
this.
year olds
You gotta
right
stay
now
risk
is
defined
literally,
in this
it's
name,
just what's going to
because of the
happen.
added
Why? Because
volatility
it has happened
that
in
this
history, and
stock
history's going to
brings.
repeat itself.
Okay, so I looked
prepare
at a
yourselves,
strategy that
right?
takes
Prepare
advantage of higher
yourselves for
implied
something great
volatility
in your life,
levels.
or fucking
We've
whatever
seen
the
that
fuck,
kind
mentally,
of
spiritually,
steady,
or
even though the stock's
emotionally,
moving
or
higher.
educationally,
Implied
or
volatility
financially,
levels
or
still really
whatever. But that is literally
readily
what's going to happen.
robust at this
And that is
point,
what
just
is
due to the
happening.
fact of the way that the stock moves.
Speculators or
day-by-day
estimators or
basis
guessers
here.
and candle
So
traders
I
are
went out
all
to the January 2nd weekly
done
cycle.
By the
so
end
just
of this
17
shit,
days
they
to
would
expiration,
have
about
been
2.5 weeks.
the
If
roaring
you're bullish on this name, why
wave.
not
That would have
give
been
yourself
all
a
of fucking.
better
Literally, that would have been
probability of
liquidity every
success,
single day. So
on this without maybe
I thank
reaching
God for the
at these
system every
levels
day.
that we're
But
back
honestly,
to that we haven't seen since last
this is how it
December.
is.
Going to sell
every
the out of
day.
the money 450 strike put.
This is how it is every
and then
day.
we're going to buy the
And I'm okay
430
with it.
strike put. So a
Why?
short $20
Because I
wide,
do good,
neutral to
mathematically
bullish
speaking.
put vertical. That's out of the
5
money
out
to
of
the
fucking
downside.
7 days,
You're going to
5
collect
out of
roughly
8
about
days.
a $5
That's fucking a
credit. That's
huge
what you
number
can make
for
on
me.
this trade. $500 per
I can't lie, it
spread,
was never like
with
that. It was
about
like 50-50,
$1,500
maybe
of
45,
risk. That's
fucking
all the way
60,
below
point flip
the
maybe.
430 level.
But now,
if you collect that $5
yeah,
credit
fuck all
on this
that
neutral to bullish
candle
trade,
trading
that's what you
bullshit.
can make, right? But it takes your break even all the way
Scam,
down to
fucking
445
bullshit, all
to
that
the
fucking
downside.
well,
That's
I
about
can't even fucking
5.5–6%
describe it, but I love it.
below the current
The only
share
way
price. So we
people
talked
see the
about
shit, and
those
the only way
probabilities,
people
right? I've got a lot
understand
of
this
risk
shit is if
at
they literally see
$1,500
it
to make
themselves,
only
they
500,
literally understand it
but
themselves,
I've got that
and
better
they do it
probability of
themselves.
success because that
Right?
break
People
even
would just
is
literally
nearly
care about
6%
candles
below
up
the
until
current
then,
share
but I mean,
price
that is how
in
it is.
Tesla. The probability
Always.
that short 450
How it
strike
will
that
be
I'm selling
always.
in this
It is
strategy
floor
is out
testing.
of the money at expiration, which is what you want, right? You want
Tesla,
this to go out worthless.
rejection.
That's about a 67% probability of being out of the money at expiration. So high probability,
10,
neutral
20.
to bullish short put vertical if you're still liking this stock.
Today is
All right, thank you, Tom. That's an example trade
Tesla
there
day,
for Tesla,
or
which is
ETF.
shaving some
See what
ground
happens
today.
on Tesla. IWM rejecting lower, QQQ going lower, SPY going lower. Now they broke the floor. Wind direction is officially south. They're showing south on SPY and IWM. This could be fake. There could be a divergence or not, but
Let's bring in Kevin
they
Green,
want to
senior
go
markets
lower
correspondent,
here.
right away to help
Showing.
set up the action today.
Bulls are fucked here.
All right,
They've been fucked since 10, so
hope you
they
are
want to go
refreshed
lower,
and
lower,
ready
lower.
to
This
hit
is
the
still
ground
bearish.
running. So we got futures under some pressure. Yesterday, we had initially started higher, then we reversed course. Is this really all about just kind of wait and see
We're
the
in the
market hitting
3/3.
pause?
Things are oversold as fuck. There's a divergence
I
at
think
the
it's
floor.
more than that. Obviously, we have the remainder of this year where you are seeing a redistribution
Long-term,
and
medium-term
rebalancing for a lot
calls
of
are still in
institutional
danger.
traders and investors that are out there, which is probably
No
causing a
confirmation,
little bit
though.
of the selling pressure within the technology space. And then you also have some fears that maybe some of these technology companies might be a little bit overstretched when it comes to the AI trade. But we are seeing kind of this rotation trade under the surface here, and you kind of called out some of the names that were outperforming yesterday. You had
What
Tesla,
do I mean by they
Meta,
cucked the
things of
bulls?
that
They cucked
nature
the
here.
bulls
So we're not
1,
seeing the
2,
sell everything
3
type
days
of
in a row.
event taking place as of right now. But I would say keep in mind that there's a lot of mechanical things happening this week that we have to be mindful of. We have the VIX expiration tomorrow.
This is
probably
bad
see
for
a
bulls.
high amount of VIX options being traded today, which should actually push up VVIX or vol of vol. And that could also then kind of weigh in on the erratic behavior of the S&P 500. And then you're starting to see a lack of liquidity. A lot of institutions are rolling from those December E-mini S&P futures and the NASDAQ 100 futures, rolling those over into the March
every single
contracts
setup
as well.
has been
So a lot of
released
that
southward
activity does kind of cause a little bit of churn under the surface, and I think that's exactly what we are seeing now. From a technical standpoint, if you're looking at the S&P 500, you're really kind of focusing on that 20-day and that 50-day moving
shit.
average.
Divergence going now. Time is 10:25, and they want to break that fucking divergence on QQQ. Everything's going south.
In order for us to try to
IWM
and finish the year higher. But if we do see a failure there, then you could make a little bit of a question that maybe we do see
Look
this
at fucking ES right now, downward trend respecting absolute to the teeth.
So I wouldn't get too freaked out at this point in time.
Tesla,
yes, technology is weighing on us, Diane, but I think if you are looking at it from a dynamic of news flow, the less news flow that we have from technology is probably better for the broader market
telling
in
you, bro,
general. Because
the roaring 20s candle traders are fucking absolutely done for, dude. This is the extinction. It's basically extinction time. Right? You know how the dinosaurs got extincted by the motherfucking meteor, bro? It's gonna be like this fucking every fucking day. It's literally just the market doing what it does to kill fake candle, fucking fake scamming ass, fake fucking literal bullshit, fucking fake shit in life, man. That's all it is, man. Every fucking day is gonna be like this, and that guy fucking goddamn love it, bro. Holy shit.
I'm not too concerned.
It is so bearish. Tesla must be rolling on this.
Pull this market down, at least for this week, and then post options expiration.
Pre-market.
And then once we get past the Christmas holiday season, usually that's when we see that Santa Claus rally. The 5 trading days after Christmas usually is actually pretty decent for equity valuations here. But I think this is a technical
I'm out on
pullback.
SPX,
there's some mechanical things in nature.
I was scalping 2K when I was saying there's a divergence on the floor, but holy shit.
Is the when you kind of look at the state of the tech trade,
fucking insane.
Is that
I'm out for 2.8K right now. Fucking insane.
There, just because more of the waiting there and looking for that rotation trade here.
So fucking
I
bearish.
think a lot of the news has been priced in. If you kind of look at it, the last week and a half, 2 weeks, a lot of the announcements that we've seen around artificial intelligence and AI has actually caused more downward pressure than upward pressure. I mean, the announcements of deals being done is not really fueling the S&P 500 like we saw 6 months ago, 7 months ago. And I think that's kind of to show that the market is full right now of that trade, at least for now, and looking for other pockets in order to try to find alpha. And that's where we're seeing this rotation trade taking place. The industrial sector, materials catching a pretty decent bid, even though it's a very smaller portion of the S&P 500. There's alpha to be made there.
This red line is gap filled now.
And I think that trend is probably going to continue,
right? Those who watch the market update video, this is why.
Can actually be a fairly volatile
this is why. We literally called out this to watch out for, and we called out this red line to watch out for too. They have filled it.
Come back, retest some of these key moving averages, the 20-day, 50-day, even the 100-day moving average would actually be very healthy for buyers who really try to step in here. But I go back to say, the lack of news flow from the AI trade right now, I think is actually conducive for equities moving higher than moving lower, because every time we get an announcement, Diane, we're looking over our shoulders and saying, okay, well, who's doing the deal? Is it Oracle? Do they have enough money? What's their debt to equity ratio? How are they raising this cash? And that provides a little bit more anxiety for the market than positivity for the market, at least for now. But next year, 2026, I think it's going to be a different trade. This year was the year of announcements. Next year is the year of people putting dollars to work here, and that's where that broadening trade can actually gain a little bit more strength.
Oh, interesting. Great setup for 2026. Let's talk about the data today. We've got a slew of economic data coming in. How much does the jobs report matter? Is that the most important data point today?
Gap filled, folks.
I think obviously we're going to be focusing on the jobs report. It's a little bit messy when you're kind of looking at the reports that we're going to get out for our for economic data. So we'll have the jobs report for November. We will get a jobs report for October. It looks like that's what's being reported right now. I think we kind of discount the jobs report for October. Market's kind of pricing in either flat or even negative jobs for October, and then a gain of jobs in November here. Right now, the consensus estimate for non-farm employment change is around 51,000 to the positive side. Now, what I will say, be very cautious here, Diane. We are now post this kind of readjustment when you have the consensus data, the census data, and things of that nature, which will actually drag down that jobs report number by around 48,000 jobs, I believe. And that's really what ADP is reflecting right now. That's why you are going to see this discrepancy pretty much until about January or February of next year, where ADP probably will project a lot lower jobs being added for months compared to what the U.S. government's providing here. And then we have this big wild card about government jobs being added for the month as well. So we'll focus on it. I think if you have any bright sign that the January Fed meeting could also result in a 25 basis rate cut, that probably will be conducive for equities moving higher, especially when you're looking at mid caps and small caps. I would not bank on that right now, just based on the data that we have, but who knows? If this number comes in and a negative print for the November jobs report, that could also shake up the markets here, and you keep your eye out on yields. I think the yield story and the dollar story is probably also something that should be in focus as we lead up to the BOJ meeting and their decision for interest rate cuts here over the next couple of days. We could see maybe on an international front, people looking at the 10-year Treasury as a flight to safety, at least in the near term, maybe kind of holding these yields.
I don't know
around
what
this
people are saying. My gap has been filled.
4.1% level.
You can literally see it. So. I don't know.
Okay, quick thought on
people
oil.
that are saying, oh, gap is still
pressure
existing,
morning,
gap is not filled, they're going to be
barrel.
too late, gap is filled.
Yeah, so there's this optimism that the Ukraine-Russia conflict is going to
doesn't matter if you like it or not, but gap is literally filled.
Ukraine does appear to say that the U.S. is going to back a security guarantee, and that's going to be solidified by Congress. We'll see if that actually takes place here. And you are seeing the market kind of selling that off, that the event risk or the geopolitical risk is going to be taken out of the market. There's also the supply concern, especially looking at oil on water. There's some truth to that in some respects, maybe a little bit overhyped when you're looking at the news media, so we have to be mindful of that.
So they might go lower and then fill that, but I mean,
oversold. You get to that $55 level, you start to question, do we start getting down to $45 or so? I think at these levels right now, Diane, and this is just me, and a lot of oil analysts actually kind of look at this right now, below $65 is kind of signifying the fact that economic weakness is taking place in pockets of the market, especially here in the United States and on a global scale. So I think this is a big red flag for a lot of commodity traders here, but I do believe that it's also a little bit oversold. You're hitting some key areas of support. Let's see if some buyers really try to step in. The geopolitical risk that's also being priced in for Venezuela, and that conflict is actually relatively cheap compared to what the disruptions could actually look like on a logistics front over time.
You gotta imagine there's a fuck ton of bears here.
I think this is actually signaling more of economic weakness than the fact that we have supply glut taking place in the market, which is true, but a little bit more exaggerated when you're actually looking at the data sets from EIA, IEA, and some of the other oil agencies that are out there.
Okay, quick levels on your the S&P 500, your targets to the upside and downside.
Yeah, to the upside, 68.80. To the downside, 67.20. Downside skew when you're looking at the put action taking place this morning as well as yesterday here. So the market's kind of leaning towards a potential pullback, but pretty decent buy overnight there, Diane. This is one of those days that we kind of see aggressive action overnight. Maybe that leads to a green day today. Who knows?
Lack of volatility. I'm sorry. Look at this shit, though. I literally don't care about no fucking exact gap fill, but to me, that is gap fill set up, and I fucking left. I literally scalped from here and here, and I fucking left. And if I imagine if I didn't fucking leave, that would have reverted to me in the 3/3, bro. Fuck all that. Fuck all that gap bullshit. Price level target bullshit. I really only care about the primary factors: time, confirmation, cycle, wind direction, and momentum. Fuck the price target. Fuck the price target. I care about cycle analysis, time confirmation, wind direction. Like literally. Fuck literally being at the tippity bottom or the tippity top, caring about price targets. That's what they do. That's what they live off of. So time is 10:30. Balance is no joke too. It's literally the halfway mark of the drop. The market loves to go back to the 0.50 before anything. Market loves to go back.
My name is Adam Ferrari, Chief Executive Officer of Phoenix Energy. I look forward to you joining.
Welcome back. Well, we are now in the final days of the year. We are closing the books on 2025 soon, but there are still two major decisions that we are waiting on. The Supreme Court decision on President Trump's use of tariffs, foreign emergency, and the president's decision on who will be the next chairman of the Federal Reserve. Luckily, we have the perfect person to talk about this with right now. Joining me now in this exclusive interview is the Treasury Secretary of this great nation, Treasury Secretary Scott Bessent. Secretary, great to see you.
Maria, always good to be with you.
Thank you so much for being here. So these two major decisions, SCOTUS decision on tariffs and the chairman of the Fed, will we get these decisions before the end of the year?
My guess is we'll see both of them in early January, Maria.
Whoa, well, that is a real disappointment. I was expecting in the next couple of days.
Well, look, we gotta move at the right pace. And in terms of the SCOTUS decision, Maria, this is really a national security issue. When you think about it, the way President Trump has been able to use his IEPA powers for national security, if the Supreme Court goes the other way, it will be a loss for
guys,
the
I
American
do
people.
not do price targets. I do not do gaps. I do not do none of the things that I think that a lot of retail and non-professionals do. And I don't say that in a mean way. I say that because I used to do that. So I have changed my life around in a span of 2 years or a year and a half by deciding to do the things that I want to do and by making the rules that I want to make on the certain things that I do. But that's literally what I mean. Certain things that I do not do. Certain things that I don't care about.
calendar
And I
year,
guess everybody,
we are
you know,
going
we're all
to
human
shrink
beings,
the
so we care
deficit
about different
by
things, right? So
several hundred
all I'm
billion
saying
dollars.
is, yeah,
So
certain things
economic
I don't
security
care
is
about
national
because of certain
security.
things.
So this ruling is really a national security ruling, and if they rule against
Somebody posted
administration,
a
they would be
picture
ruling against
of
national
the
security.
Leonard
by the way, I
Corporation,
really like
maybe
the
that
idea
he
that
had a
President
positional
Trump's
bias in
agenda is
yesterday, and
locked in
I
national
just
security.
removed
I mean,
it
everything
because
he
I don't
does
care.
is about
I
national
always like
security,
that too.
from getting the
Right,
supply
I would have a
chains to
positional
America
bias
to
in
what you're
DR
talking about
Horn
in
or
terms of
something, which is a
fentanyl.
related company
If
to
the
Lennar,
decision
but
goes the
it's
wrong
not.
way, what are
It's
the
not
alternatives?
beneficial,
Will you
nor
be
is it
able to
reality,
make up
nor is it, you know, anything else
$300
but what
billion
you're,
in
what
tariff
I'm
revenue that
thinking
you've already
personally in
collected?
that
But again,
that
Maria,
time.
there are plenty
And I
of
realize that
revenue
things that are only
alternatives,
really
but they're
truthfully
not the
matters
national
are
security
big things,
alternatives.
big
And,
names and
as you said, with the
indexes like
supply
SPY,
chain, in
QQQ,
terms
and
of bringing those back,
IWM, and
what
major
we saw
setups.
during COVID
So
was the supply chains.
yeah, that's the reason why
these long
I only
supply
care about
chains were not
the major
safe,
economy-related
sound,
things.
and
I
robust
kind of
supply chains. And President
just
Trump is using the
have
IEEPA
my own
tariffs
rules and
to
do my own thing,
fortify
man.
our supply chains. So the IEEPA tariffs, the deals
You
that we've
have to
done
have
with a lot
some
of the
sort of
European
rules
companies
and some
or
sort of
countries, the pharma companies
wish
are
to
reshoring
do
in the U.S.
what
and that's
it
part
is
of
they're
the trade
doing.
deal, and that's all
You should kind of
IEEPA,
listen to
because
what
we get
people
a
are
huge
saying,
amount
what their
of
wish and
the
what they're trying to
precursor
do, and
chemicals
you can
and drugs
kind
for
of
our
tell if the person
pharmaceuticals
is a straight up
from
scammer, a
overseas,
liar,
and
or
that's
make
just
up
not
bullshitter or
sustainable. So
not.
it would be a loss for
Because
national
yes,
security.
that's
Do you
what
believe you
usually
can
what is
make up
going
that
on
revenue
online.
with these other statutes?
Yeah, again,
They
Maria,
just wanna
we make up the revenue,
fake pump
but
their
the national
bullshit
security
fucking business
loss
by
is a huge loss.
fake
All
lying
right,
to
the
people,
president also
having
said that he's
everybody
leaning
in a
toward either Kevin Warsh
happy
or Kevin
state,
Hassett
being
to lead the
brainless,
chairman of the
fucking
Federal Reserve job.
happy on
You said we're
candles,
gonna get
down or
both of
up,
these
lose,
decisions in January?
and then you know,
It's
I
at the
don't give a
president's
fuck about
pace
no bullshit.
that
So
he has been
I just
very,
call things for
very
what it is. I
deliberate.
expose them. You know, they're
We
literally
had
40-something years
an
old,
interview
streaming
last
on
week.
YouTube, and
We
they
may have
cry
one
because
or two more
a fucking
interviews,
kid makes fun of them
this
because of
week
who
and
they are.
next week,
It's not
and
my
then
fault because of the person who's who they
president
are,
has
but I mean,
been
it is
very,
literally what it is. But all I can
direct with
say
the
is
candidates in the
there's something
interviews in
mentally
terms
wrong
of
with you
asking them
when you
their
prey on,
views
when
Fed
you
policy,
target,
Fed
and when you
structure,
hunt
the way forward, the
desperate
economy.
people
So,
without knowing what
very
the fuck you're
interesting in one of
doing
the interviews,
based
the
on
president
fake
did as only he
bullshit
can do.
and
He
being
really
all
came to
negative
first
and
principles
emotionally
with one of
mean,
the candidates,
but
said,
also
"How many
being
PhD
like, oh,
economists
you
are
have to
there?"
pay
He says,
if
"Well,
you're an international
1,000
person to
to
be in my
1,500.
group,
What
and
do they
then
do all
being
day?
like,
When
oh, I
when
removed
do I
them by
get better
making up some
outcomes?
bullshit,
Like,
fake
how
bullshit.
do all
You
these
know what I'm saying?
people
People are gonna
help
talk
one
about you no matter
person
what,
or
and
the
it's
committee
just
make
you
a
a rat.
decision? There wasn't a good
You should
answer.
not be a
Well, the
rat.
president
You
told the
should
Wall
be a
Street Journal
human
last
being.
week that the
You should
next
want to love
chairman
life.
should
You
be
should want to
consulting with him
be
on
truthful
interest
on
rates
things
while signaling
and
that he
not
wants
be
rates closer
fake
to 1%.
bullshit, negative,
We've
all
got
bullshit,
some
everything
reports
fake, all
that
bullshit,
have
everything
people
bullshit,
pushing
everything
back
bullshit every day.
on, Kevin
And I
Hassett,
think
because
everyone's
he
gonna
said
be
he's
okay
part
with
of the
that, but
president's
I
inner
guess
circle,
everyone's okay with that.
that
But
maybe
I
he's
swear to
too
God, I think the
close to
guy
the
Algo
president.
bots at least
How do you feel
500
that
views.
these two
So
are different? Kevin Warsh versus Kevin
I ain't gonna
Hassett.
lie, bro.
Well, Kevin Hassett
Shit,
is
it's
an
fucking
eminently
liquidity,
qualified
right? Is all it is.
PhD economist with a
It's
great background.
liquidity. I love it, man.
Kevin,
Every day
Kevin
will be the
Warsh,
same day.
and
Every
I've
day
known
will
both
be
of them
the
for 20 years.
same,
Maria.
literal.
Kevin Warsh has been has a legal background. Has been
Bullish,
in
bullish, bearish,
financial
bearish on
markets as a
candles.
former
Love it,
Fed
man.
governor.
Love it. Candles
they both
are.
have experience at the Fed.
Love it.
Kevin Warsh as a governor.
Setups are everything.
Kevin Hassett as an economist. They are both very, very qualified.
QQQ,
And,
any
this
downward
idea
trend?
that
Yes,
Kevin
downward
Hassett should
trend.
be disqualified.
SPX.
If we if we go back and look,
did not gap fill
Janet
below.
Yellen was
We're about to find out how the market cycles here, and then goes and gap fills or not.
She immediately went to the job that Kevin Hassett has
I
now.
don't think,
So,
I'm not
you know,
relying on a
this
gap fill
idea
here, but I am just thinking a gap fill exists, and if they do break LOD, then maybe there's safety here for 1 or 2 minutes to gap fill is maybe what I'm thinking, but I do not hear sit and be like, oh, the MACD might be completely used to go the next 5 minutes. It could happen, yes, that's a 50% chance, but to literally sit there and be like, oh, the bears are going to be fucking amazing, golden, la la la, MACD bears going to be, is a huge fucking speculative amateur bullshit. Hope you guys fucking know that. I say this shit from the bottom of my fucking heart. Why? Because why do you think I'm fucking like this? You know what I'm saying?
It's lost its way in
Fucking just
monetary
literal.
policy, and all this big money on big
Man.
fancy buildings is just another.
There's a reason why I
indication.
say things when
Why
we're
does that
going
matter,
down too,
Maria?
right?
It
I'm
matters
saying the
because what
other
matters
side too.
most to the Fed
But
is
I mean, to be
credibility.
straight up fucking
The Fed
biased
has
on
to
one
look
side,
like a
bullish or bearish, is an
serious, sober
absolute fucking
institution.
mistake.
And if you
Absolute
look back to
mistake.
where we were last September,
Absolute.
the Fed cut rates 50
Right,
basis
floor
points
testing
before
time
the
is
election.
10:40.
Another
This
50
is up
basis
to
points
Tesla,
after.
man. Whatever Tesla does today, QQQ and SPY will follow. Will Tesla go to 480? Market will recover. Will Tesla go back down to 468? Market will fall down. Why? Because it's a huge range. 480 to 466 is market moving on Tesla, man. Big news coming out on Tesla too yesterday. ARK, blah blah blah. Blah blah blah. CNBC saying Tesla's all-time highs. Everything looking dog shit terrible except Tesla. So up to Tesla.
Because of
the video looking crap. No direction, momentum, jack shit. SPX, literally everything. IWM.
Then what happens is that workers
it's up to Tesla. Candles are following Tesla here. Tesla going green, Tesla going red. Candle turning green, candle turning red.
So we're seeing that recent college graduates are feeling stressed right now.
So live stream title today is
going to work out quickly.
Tesla. Cathie was U.S. jobs report. Okay.
Than the dot-com economy of the 90s. And the coaches that AI is producing are going to help make a lot of productive workers a heck of a lot of money. And the bottom line is that we're seeing that real wage growth
please, before you leave, hit the like and the thumbs up on the live stream. James said, amazing. Hey, see you tomorrow. Thank you so much, man. But yeah, please, before you leave, and everybody, do hit the like on the live stream. Thank you very much. And if you are a new watcher, a new viewer, please hit the subscribe button as well. Thank you very much.
My focus during the pre-interviews was how are
still very cold out, so stay warm, folks. I went out yesterday.
They are both thinking about what does an AI future look like? What is productivity in the U.S.?
That was going to be better because it's not snowing, but no.
What the Fed has done has been backward-looking. The other thing that both candidates have said and other candidates have said is that the Fed has to reestablish trust, but in my opinion, the Fed has trust.
God bless week, man. Since FOMC, though, fucking 3 days in a row. This is.
But also the American people. It is an unelected institution.
I don't want to push shit crazy, and I'm just waiting.
The American people when it let.
And if Tesla reverts up to 480 and closes today, I'll just leave.
Maybe the
next Friday expiry. That's what I was thinking. I don't really give a fuck here. I'll just take a loss on it a little bit, expiring at the Friday. But I mean, I did not take 466 on market, so I mean, I kind of want
all of these discussions about jobs,
at the minimum lower than 466 on Tesla. I just don't know how things are going to happen though. The market way lower, Tesla holding, and it's just it looks so
be focused on looking at for the macroeconomic story of 2026.
So we should think the 2025
looking different than Tesla.
2026.
Look at the MACD coming in bearish and the ES 15 minute.
If the Democrats don't shut down the government, because
IWM
they were unable to
trying
stop
to go
President
lower
Trump.
off the purple box.
They've tried to stop him in the courts. They tried to stop him in the media. Then they went to the extreme. We had the longest government shutdown in history. It was a hit to GDP.
Thank you, folks. People said like the live stream. Thank you guys. Thank you guys. Those that have not hit the like button yet, I please implore you to hit the like button. We are at 60-something likes. We have 150 people here. Thank you very much. We have like 80 more people push it. And SPX put to call ratio is being analyzed and set now.
Are doing very well.
The SPX put to call ratio says there's a lot of puts out of the money from 6735 to 6775. There's a lot of calls from 6795 to 6835. Let's look at SPX real quick. What is that? 6735 all the way to 6775 is filled to the fucking wall with puts below the red line. Above 6795 to 6835, 6795 to 6835 is filled to the wall with calls. What does that mean? The red box here.
No tax on overtime.
There's a lot of fucking calls.
For American
and
cars.
There's a lot of puts. This is literally all that means. We're going to send the SPX put to call ratio now in the group chat. That's what's going on. There's a fuck ton of out of the money calls, fuck ton of out of the money puts here.
Optimistic for working Americans, for for job growth, for capital formation, but we cannot let the Democrats shut down the government.
Well, I think this is really important what you're talking about in terms of
days
the
like
of the
this.
Big Beautiful Bill. What I've been talking about,
The SPX put the call ratio comes in fucking godly.
Things. I mean, we had people on the show earlier. Mitch Rochelle
market
said
is
he knows people
cycling
who are
and
expensing
going up, going down, extending, overextending, pulling back, overextend the other way, pulling back. So cycling at its finest, but this is the best thing.
In the Big Beautiful Bill.
Well, one of the best ways to increase productivity is to increase the after-tax return on capital, and we're building up the capital stock by doing that. So, Maria, you should just think of the
D4 hope bouncing or
expensing
something.
as
1,
pulling
2,
the
3
rubber
minutes.
band
Time
back.
is 10:40, so they went lower for 10 minutes, and
wasted a lot of money, whether it was the misnamed inflation
trying
reduction
to change something.
or there are other.
Well, it was $7 trillion in spending, sir.
And what do we have to show for it other than a mountain of debt that we at Treasury have to roll all the time? With the expensing, you are creating capital stock that will increase jobs, increase
changing
productivity.
around
so
to
you
show very fast.
Pull the rubber band back, and then it moves forward. So we're getting new, as you said, new cars, new trucks, new computers, and all that increases GDP.
Yeah.
That's what Kevin Hassett was talking about earlier. He said he thinks that there could be this big productivity boom.
Oh, Kevin. Come on, Kevin. Oh, shit.
It's Harbor Capital celebrating 4 of their ETFs, and at the NASDAQ, it's Newmark, a commercial real estate advisor. Jim, as the NASDAQ sort of hustling with the 50-day lately.
Burning all the puts, going up into the wall of calls again. Man, very mixed open looks like. They coming in choppy, but down, up, down, and then trying to chop to the midpoint. That is something.
All right, let's get to Rick Santelli. Hey, Rick.
Hi, Carl. Indeed, these are December preliminary S&P Global PMIs. On the manufacturing front, coming in light at 51.8, also sequentially lower than last month's final 52.2. That would be the lowest read since this summer, July. If we look at the services, 52.9. We're expecting 54 in the rearview mirror, 54.1. 52.9 equals where we were in June. To find a lower number, you're going back to April of this year. And finally, on the composite, 53.9 expected, 53 is what arrived, and 54.2.
Look at this candle on IWM.
So another one, all three sequentially lower. 53 would be the weakest since this
Squeeze
June.
candle.
But there is a bright spot here. All three are in expansion mode above 50, but they are all less than expected. We see the yield curve holding some of its steepness in this morning's jobs report as we continue to see some slight weakening in the labor market, which pushes two-year yields down due to Fed implications. But there's a lot of moving parts on the long end. Right now, we're hovering at 418, up 1 basis point in the 10-year.
And I feel like this could be the bounce to short on IWM. Looking at IWM at the SPY, but I ain't doing it. I'm just watching here. I want Tesla to go lower, but I ain't doing it on SPY.
U.S. adding 64,000 jobs in November as the delayed government data tops forecast, but unemployment did hit this fresh
interview with
Kevin
Hassett.
Joining us this morning with some reaction. First from the White House is the National Economic Council Director, Kevin Hassett. Kevin, good morning. Good to have you.
It's great to be here.
A lot of information
I ain't
that the
doing it, man.
street's trying to absorb.
I think
How
if
do you
Tesla goes
characterize
lower
both
here,
October and
LOD
November?
may be likely again, but I ain't fucking taking the
combine
risk
the
here
two.
on SPY
And if you
and
do
Tesla
that,
at the
then you're
same
looking
fucking
at
time.
private
Like, I'm
sector
relaxing
gains
on
of
SPY.
about 120,000, maybe
I mean, I'm relaxed on
121.
Tesla here,
And
so.
then, we
Tesla
dropped about
literally ran up
160,000, government
to
workers, federal government
yesterday's
workers,
high.
who are the people who
Came
took the
back down
buyout
into the
that,
purple box. This
you know,
shit
we
is
began that
big,
program
big,
in the
big,
spring and
big
gave people
moving.
to the fall to step aside.
Big,
and so I think that from the
big
private
moving
sector
today.
point of view,
Purple box
it's
and
just about what
at
we've
its
been getting all
finest.
year. It's solid
Look
upward
at the purple
trajectory.
box. Like, look at
The
we do
president's
realize this shit
private
before it's
sector
way
jobs
too late
creation
too.
since he took office
Like,
about
candle traders don't give a
700,000
fuck
jobs.
about nothing
And so I
when
think
it's
that,
green
you
candle
know,
is green candle, when it's red
like the
candle,
vast
when it's red
majority of
candle.
the
So do
Bloomberg,
realize
people
that too
polled
before
were
it's way
surprised
too
on the
late.
upside.
They
And I
don't give
think
a
that we were
fuck.
surprised, kind of not at all. We think it's about
Realize that.
is what's happening.
All right, so Kevin, Jim Cramer, I understand exactly what you said, but I want to be like the president. 64,000 people, we got a country of 347 million people. He calls you up for dinner. You come over for dinner, and he says, "Hey, listen, that's unacceptable. I need rates down to 1%.
Rejection trying on
because
SPY.
We got to put more people to work." What do you say to him?
This is no confirmation, nothing yet.
Well, you know, my
Correct, he is
conversations with the president are
maybe
private.
rejection
I spent about
trying.
an hour and a half
Let's
in
see.
the Oval with him yesterday going over
There might, I think there's like 75% chance rejection here.
The bottom line is that the president thinks that interest rates could be lower, and I think there's a lot of people that share that point of view. And the reason they can be lower is not just mumbo jumbo. It's because instead of getting growth out of a big demand push, printing money, having Congress mail checks to people.
75% chance that this shit is real for the short term or medium term foreseeable future. Holy fuck. Wow! Yo, what the fuck? Look at that on SPY. Look at that fucking rejection on SPY, bro. I'm telling you, bro. Fucking candle traders don't give a fuck about none of that bullshit, but I'm telling you, I ain't no fucking candle trader. Look at Tesla, bro.
He's right, and I think a lot of people agree that there's plenty of
this shit is set up and set up
rates.
alone,
And frankly,
bro.
if you look at central banks around the world,
perfectly aligning with right here. It looks like it should run. It looks like, right, but what? There's too many fucking what? SPX calls up there, and they're fucking what? Deleting all the calls and deleting all the puts. I just see the chart way better, man. This is literally. I've done this shit way too much. I've done this shit way too much too. See things for it, not other than what it is.
But I think that if you
it is
do
fucking
really
crazy.
Economic analysis,
it is
and
so
think about
fucking
the
crazy.
difference between supply and
There
demand
was a
jobs,
possibility that
then
it
you can
could
see that
run,
there's
but the
lots of
probability
room
said that
for
there's so
lower
many
rates.
fucking
And this
calls
is a
up
huge
here, and
mistake
they're going to
that
delete
Janet
them
Yellen
too,
made in
and
the
delete the
past, where they
calls
said
and the
that the
puts.
Tax
So
Cuts and Jobs Act
they're
was
chopping
gonna
in
be
the red
inflationary.
box. This
So
is
you
how I
go back
learned
and
how to
look,
use
we got
SPX put to
3%
call
growth,
ratio
then
too,
1%
because the shit moves
inflation,
constantly.
after a big
But you could
supply-side
see
shock, and I think
when
that's what
things
we're
are getting in the lunatic, you know what I mean? When things are getting a little bit lunatic,
Kevin, about,
all right, in the SPX put to
Supreme
call
Court
ratio crazy.
case
So
involving IEPA, the Parrot obviously
time is
issued tariffs.
10:50.
I'm just curious as to how you're thinking about that. Should
That is
not
literally
go
on
the
Tesla purple
administration's
box
way,
alone, man.
given
Nothing
the
else.
importance it's had,
Tesla
as
purple
you
box
pointed out,
alone,
in
and I
potentially
literally said
reducing the
IWM looks
deficit
like
and
this shit
obviously
could.
raising
This shit,
revenue.
I said this is a squeeze candle, and I said this looks weird.
Yeah, well, first of all, the deficit
Right?
news has been
That is
really
why.
fantastic.
That is
and
fucking
it's kind
why.
of funny
Because Tesla,
for the
perfect
longest
fucking
time, at
timing.
least like the
Purple
Democratic
box,
think
and I
tanks
literally
seem to be
zoomed out
telling
and
you
brought
only
the
thing that
purple
matters
box
is the
over.
deficit.
So
Well, if you
I did
look
not
at
have the
what's
purple
happened
box
so far
clearly
this year,
until
year
now
over
either.
year, by the calendar year,
From
we're gonna see a
yesterday, but I
deficit
did
reduction
draw the
of
purple
about
box
$600
yesterday
billion.
when it happened and as it was
Multiply
happening.
that
So
by 10 and let
the
there be a little
realist
growth, you're
watchers
at
of the
7 to 8
stream remember
trillion
how
in deficit
boxes are
reduction
drawn,
over the
when
decade
it is,
because of the policies
why.
we've adopted this year. About 1/3 spending cuts, 1/3 tariff revenue, and 1/3 Laffer curve-like growth. from
Cycle
from
happening
tax
here.
cuts.
We're
And
showing
so
bearish
with
in one
that big,
fucking candle,
deficit
and then
reduction, there's lots and lots of room,
cycle confirmation
for
trying.
inflation to go
That's
down,
all it is.
and
That is
so on.
wild.
And so my view
Looking
is
though.
that the deficit reduction is a key to the health of the economy, to lower rates. And if the Supreme
Why?
Court
Because they
were to
can't
do
even go a
something
little bit
about
lower
that,
and then
we've got
higher.
backup
Right,
plans,
there is
but
room
it
down
would be
here because there's
disruptive
so
for a
many
while.
calls,
Bottom
but then
line,
there's
though,
so many
is that
puts down
we're
here
highly
too. So they
confident
could
that
have went a
won't do
little bit
that.
lower and then
Because in the
chopped
end, there
here
are
and
two
went
questions
higher, but they're
before
doing
them.
it
One,
already.
is it an emergency, and how is it it not an emergency if fentanyl's killing hundreds of thousands of people?
Showing bulls maximum hope from 10:50 already. Time is 10:55. Algo ranging at 10:50.
Does the language that says that we have the authority to regulate trade mean that we can use tariffs? But how else are we going to regulate trade if not with tariffs? Maybe you would say, oh, you would use quotas, but if you take quotas and auction them, then that's like a tariff. So it feels like the Supreme Court won't have anything to point to toss out the case. We're pretty confident that it's going to go the way we want. But if it doesn't, we have backup plans.
You do, yeah. I mean, because there is a cogent argument that the other side has made.
This is what the other side is good at, scammers. Just fucking saying bullish, and then hoping that a candle or a cycle comes and it just bounces. And 50% of the times it's right, 50% of the times it fucking drops, and they're like, ah, look at that! Oh,
in fact, it's deemed illegal in terms of the powers that he's using right now.
Right. Well, there are things called 232s and things called 301s, and we have all these specific agreements with specific countries, which we could take those one by one without, like, if a country agrees to pay us a tariff, then that's not necessarily something that requires.
It's literally a fucking candle flip to be, oh, this is still bullish or bearish while it's pulling back. But I mean, it is literally, statistically speaking, yes.
But we don't think we're going to have to.
Good luck with that, doing that shit all your life. Looking for that all your life.
Uncomfortable with the way that he had to deal with Jay Powell, and Jay Powell being, listen, I'm very separate. I'm not taking any interest. I think the president's kind of a head coach, and if you got that job, you're a player. Now, if the head coach says, listen, you're going to have to go this way, and this way is to take rates down 200 basis points right now, are you going to tell him, no, coach, I'm not going to do that?
You know, the bottom line is that I talked to the president. When he says we could do this or we could do that,
the crazy thing is, I said in the WhatsApp group at 10,
you talked to him too.
10, 50, 10, 49, 45, 75% probability rejection possible.
If I were there,
and then for short term, medium term, and then they literally did it in 30 seconds, and then bear trap. So
is really, really important. And the voices of the other people at the FOMC, they're important too. And so the way you've got to drive interest rate movements is with consensus based on the facts and the data. And I would say that that's something that has been not really working so well for the Fed over the last few years. Like, you know, what are the facts? So when they made a mistake on this or that, then why did they make that mistake? What model got it wrong? That's the kind of stuff that becomes convincing over time, because you actually have a track record of getting things right, and when you get things wrong, you explain why and fix it. And so that's the way it moves forward. But the president is a seasoned observer of the economy.
That's a good one.
And if he
track
has a good
record.
Point, then I'm sure others will recognize it as such.
Track record, or throw rice at the wall and see if it sticks right.
And waiting for more progress on that front.
Manufacturing jobs November. Maybe he is a good Fed Reserve chair.
Do you expect that to reverse in 26?
Yeah, it's definitely what we're seeing is
maybe that dude is a good Fed Reserve chair.
We've been tracking groundbreakings of all these factories that have
maybe
come forward
this
from
dude is fucking real as shit.
Like the drug companies onshoring production.
Interesting.
For
that's an interesting
thought
to have.
And we're up to around 30 groundbreakings in September, and all those are going to create a lot of jobs moving into next year. So I think that we're.
I hate how he looks though in his glasses, but I mean, hey.
And don't forget that the government shutdown is a time of heightened economic
judge a person by its
where
cover.
A lot of people
can't
just
judge a book by its cover.
Hold off on this and that until they see that we're actually going to get the government up and running again. And so I think that the data that we're looking at now is partly colored by the government shutdown. And
I think only a fucking madman would short this shit at this point, or go fucking even think it's going to reject. So I'm going to either say it's going to chop or go a little bit higher here and then decide what to do. So I don't want to think about it up, down, up, down, up, down right now. My head is starting to hurt, so I'm watching a little bit.
GDP growth.
Why? 10:30, 10:35 rejection, 10:40, 10:40 bounce, 10:50, 10 minutes, 10:50 rejected, 10:50, not even 10 minutes, and then fucking bounce in 5 minutes. So market moving for sure. Up and down and up and down. Real quick right now.
It's maybe 2.5 to 3%.
It's just candle.
What's capital stock growth right now?
Would have said at 10.50 at the tippity top, this is bullish, right? It's going to flip VWAP, and the perma bulls are going to print hella money, and they're going to do good, and they're going to go live a good life. And I mean, that would have been a fucking lie. That would have been fucking dangerous. They would have got fucked on that. Why? Because the cycle has been set up and time confirmation alone.
Of all those data centers being built to power it. But there is this existential question, Kevin, that I'm sure you have to be thinking about, which is what is the impact going to be on employment, even if we ultimately end up longer term with more jobs. It could be a very significant dislocation in the labor force. How do you think about the impact of AI when it comes to the introduction of efficiencies that ultimately seemingly will replace many human workers, at least over some period of time?
I want to send the SPX put to core ratio now. I want to see what the wall is.
With AI have increased their productivity a lot, which gives us that productivity growth I was talking about. And they've also increased their wages a lot. you saw there was really a blockbuster wage growth in this employment report. And so that's a big positive. And the way I think about that happening is that every worker has like a really great AI coach standing next to him saying, hey, do it this way,
would
do
you guys
it that
like
way.
to take
disregard
part in
the
the second
advice
poll
of
of the
Kramer.
night?
And then, wow, their productivity goes
Poll
way
is,
up.
in your opinion,
time,
is the market about to
time,
fly?
Then there's a question of if I've got all these workers that are really productive, then maybe I don't have to hire a new guy because the guys who are here are already producing more than is demanded. But in equilibrium, what happens is GDP goes up, incomes go up, demand goes up, and we find positions for people who maybe move to a different factory or a different business that offers a different product. But that's the way it happens. Like electricity
all
was
the puts
positive
are
for
out of the
economy,
money.
internal
All the
combustion
calls
engine
are out of the
was
money.
Positive for the economy. The computer was positive for the economy, and AI will be positive for the economy, and it won't cause disruption.
You don't think it'll cause any disruption shorter term, though? I guess that's the question. And again, we don't know the longer term because when we have intelligence that exceeds our own, Kevin, I think all bets are off to a certain extent. But you're not concerned at all about even a short-term dislocation? I mean, the buggy whip manufacturers certainly had to find something else to do for a period of time.
Yeah, they had
probably
to find
were unemployed.
No, but think about it this way: the buggy whip guy had to find another job, and how did he do it? Maybe he had a newspaper with want ads in the back, but now we've got a person who might have to find a new job who can search throughout the whole country on all these websites that tell you where the jobs are, and the number of job openings in the country is in the millions and millions. And so moving people from one job to another has never been easier and faster, and AI and the computer makes that even just more an efficient process.
Kevin, earlier you attributed a comment to me. I think that was what's called a hallucination. She's got it completely wrong. I know that we have I think we have an emergency versus the Chinese. I think the Chinese are starting to get ahead of us when it comes to AI. I think that we don't have enough people that are building data centers. We don't have enough people. We don't have enough power. Can we do something, an emergency power, to catch up and pass the Chinese? Not unlike what we had to do with Sputnik and Russia.
Leaker says
because
chop.
I think we're falling behind.
I'm voting
It's our
reject or chop.
responsibility to pull ahead.
Dave says eagle.
Right,
So
well,
fly.
I don't think
3
we're
people
falling
voting
behind,
fly.
and we
3
definitely
people
have the
voting
president,
reject.
and his team has put together a plan to rapidly accelerate data centers, the power production that we need to power those data centers, to get rid of the sort of red tape that makes it so the permits won't let you build the power generation or the data
5
center.
is 11.
And so if you look at a 3 or 4 year ahead plan,
Cycles are
then you've
forming.
never seen anything
Small
like
cycle
it
confirmations
in the US.
are
And so
building long
I
and
think we're
up
going to
and
be
down.
totally
It's just
fine.
not
We've got the
breaking
best
certain
chips, the
levels.
best
It needs to
people,
break the
and a
candle
plan
up.
to deregulate so that we can get all the power that we
11:05.
need.
It needs
I
to
would say
break
that
the
if the
candle
Chinese
up.
have
11,
any
sorry,
advantage
10,
right now,
58.
it's that we inherited a situation where they really increased
10,
power
55
generation
more.
capacity
10,
under the Biden
58.
administration, and we're catching up on that, but we're catching up fast.
Yeah, the Chinese can generate an awful lot of power.
Tesla is
even if they're
chopping
behind
at
us
the
in the
purple
overall
box,
technology.
deciding
To come
whether
back to
to
the
fly,
overall number here
reject,
this morning
chop.
and sort of, where we started,
IWM is
Kevin, the total
IWMing.
number of jobs in the U.S. increased by 0.6% over the last year, and that is the slowest growth rate since March of 2021. And to come back to it, I would like to get your response to that and what your expectations are in terms of 26.
It's chopping somewhere
Right,
here.
well,
IWM.
again, if you look at the job creation that we had under Joe Biden, a lot of it you might remember was revised down. That it was for the most part an increase in government workers. And what we're doing is we're driving private sector job growth, and we've reduced quite dramatically the number of federal government workers. And so going forward, we've got the big, beautiful bill that was passed in July. That the last time we did it, it caused capital spending to go up more than 10% and give us growth more than 3%. If you add to that the AI productivity boom that we're seeing, then you can't be anything but like super optimistic about what's going to happen next year.
Kevin, story on our air yesterday. Hashtag
Fed
share candidacy
previous all-time
received
high,
pushback
regained
from
as well.
high-level people close to Trump, sources say. I don't think you commented on the piece, but I just want to offer you a chance now.
I think that's one of the great things about American democracy is that we move into jobs like that with a lot of discussion, a lot of inspection of the people, and that in the end is going to help everybody make a better choice. And so I'm glad when people speak up one way or the other.
All right, so Kevin, I'm the president. Could you give me the 30-second elevator pitch why you should get the job?
No, I'm not going to do that.
All right, that's fair enough.
I'll give you the 30 second. I'll give you the 30-second. I'll give you the 30-second elevator pitch about why someone shouldn't be denied the job. And the idea that someone isn't qualified for the job because they are a close friend who's worked well with the president is something that I think the president rejects.
I like that. That's not bad.
No, you know, on Wall Street there seems to be a feeling, and I don't want to make too much of it, that Kevin Warsh perhaps would be more of a favorite. Is there anything you want to sort of address to the Wall Street crowd, obviously, that we spend a lot of time with?
Yeah, I mean, I would just say that Kevin Warsh has a lot of experience. If he became the Fed chair would be in good hands. The president doesn't have a tough choice. He's got nothing but good choices.
Well, let's just kind of do a coda to Jay Powell a little earlier, but we can do it.
Bears are coming.
I think that there has to be a consensus within the White House that Jay Powell, picked by the president, tried to do his best. I mean, can we at least give him that? Can we stop name calling? No more name calling Jay Powell. Worked hard, good job, wish him well. How about that? Kind of a high road, kind of like, you know, the Pulaski Skyway.
Yeah, I think it's time to move on. It's time to move out of the Fed. And yeah, the president will announce his candidate soon.
No more. Good.
Is that close enough?
Goodwill toward them. Goodwill toward all. I like that. It's season.
The other thing, Kevin, that we've been pointing out last couple of days, is usually in a conversation related to housing, is that since the Fed began cutting last September, unemployment's up, what, 30 basis points? CPI's up 60 basis points. 10-year yield up 50 basis points. Does that all make sense to you?
Yeah, I think that what's going on right now is that we've got this productivity boom that's coloring all the data. And so for me, the thing that made the least sense for me about what the Fed's been doing over the last few meetings is that we had a shutdown that slowed things down a little bit, and we had inflation numbers that were better than expected. And somehow those two data items made the Fed less likely to move. And I never really was convinced that that was sound thinking on their part. I'm glad they made the right decision this time, but I still wonder about like what models they're using when something like that could be what comes out of their conversations.
Right. Are there contingency plans if in fact we get another shutdown at the end of January?
We always have to plan for everything. That's what we do, but we're sure confident that won't happen again. The bottom line, though, is that Republicans voted not to shut down Joe Biden's government every single time. There was never a shutdown under Joe Biden. I've been working with President Trump since 2017, and I've already lived through 3 shutdowns. And so were we to have another shutdown, we don't expect it, we don't hope for it, we wouldn't be surprised. It seems to be one of the Democrats' key strategies to slow us down is to shut down the government. And hopefully they learned their lesson this time, because I think there was a lot of pushback for what they did.
Kevin, appreciate it. A lot of time today covering a ton of data.
Thank you.
Jim?
Kevin. Barely any volume. Tesla's going higher and SPY is. There we fucking go. What the fuck is this shit though? Come on, one more candle. I'm at 2K from 1.75. Wow. I'm out. 2,050. Holy shit. Holy fuck, that thing going crazy now. Fuck it. Wow. Wow. Wow, I left fucking mad early. And that fucking, literally, right before that fucking big dump came in that 1 minute candle. What the fuck? Nah, that's sad as shit. Nah, that's sad as shit. Wow, it's at 2.3K already. What the fuck? Oh my god, they're moving so fast. I mean, today, candles are fucking humongous. Green, huge. Red, huge. Bounce coming. Wow. I'm telling you, this fucking huge candles coming in. Huge candles coming in. Huge candles coming in. Huge candles coming in. Like, this shit is absolute today. One side getting fucked and the other side getting. I'm telling you, this shit is humongous. No joke candles. Moving crazy today. It's like a. It's a 10-point SPX candle, basically. It's a freaking 10-point SPX candle. Lord. Wow.
मेरा नाम कंवल कामरान है और मेरे बच्चे का नाम अयानुल हसन है.
Welcome back. The Trump administration hoping to give working Americans a boost in the new year with a new tax refund of up to $2,000 by early next year. The payout coming from recent tax changes and tariff revenues with as much as $100 to $150 billion flowing back to taxpayers in the first quarter of 2026. The White House says it expects this to be the largest refund season on record. I'm with the Treasury Secretary this morning, who is also the IRS Commissioner, who is also the guy who's holding it all together. Secretary, what can you tell us? You see all the data. What can you tell us about the upcoming tax season and what we're going to see in terms of our returns?
Yeah, so Maria, let's go back. The one big beautiful bill was passed on July 4th, but for working Americans, it was retroactive to the beginning of the year.
Man, today is a fucking beautiful day.
Did not
Market
change
cycles
their
are
withholding,
actually
so
beautiful.
as a result,
On
we're going to
setup
see
alone.
very substantial
There's so
100
much
to
setup
150
power.
billion of
There's
refunds
no
in the
stopping
first
this shit.
quarter go directly to Americans' pockets. So the sooner they file, the
Look at
sooner they'll get them.
IWM right now.
Our estimate is
Testing the
it could
LOD.
be
This is no bueno. IWM
1,000,
bearish as fuck
2,000
here.
per household, depending on the number of workers.
Wow, that is a big deal. So, Secretary, you've talked about this additional money from the tax code that we're getting. You talked about the impact of the big, beautiful bill.
IWM
Sounds like you
bearish
think we're going to get a real economic boost for the
Bulls are
macro
fucked.
story in the first or second quarter. Is that what you're saying?
IWM doing this some
think it's
weird ass
gonna-
chop
They
down.
start lifting off in the first quarter and the second quarter. And you know, Maria, the other thing,
Market
when I
pulling
started my
back,
career on Wall Street in the 80s,
flying right now.
people used to
Tesla
focus
flying right
on
now.
trade.
I don't know. This shit is squeezing me right now,
we
but not too
building
bad
more
because
in
I'm
the
not in
US
this
or
Friday.
we're
But yeah, it's still
importing more?
squeezing me into
We're
next
seeing
Friday.
the
But
trade
it's
deficit
absolutely
drop too. So the trade
interesting to
deficit
see.
drop
As long as it doesn't go to
in the US.
480s plus into today close, I'm fucking good.
I
don't think Tesla can do that
Trump
today.
after 40 years.
Well, you're proposing a major
shit,
shift
Tesla is
now in how the government
0.33%
approaches
green right
financial
now. I don't
stability
know, man.
by
This shit
re-examining
absolute
crisis-era
reversal.
rules, moving toward a
Minus-
more
literally
flexible
went from
regulatory
minus
framework.
1.7 to
This
like
could not be
plus
more important. I
2%.
know President Trump thinks that deregulation is
Look at
arguably
SPX
even
right
more
now.
important than tax
Look
cuts.
at SPX right now.
Yes.
They went
Well,
overextended and then fucking
they go
pulled back
together,
crazy.
and the tax cuts allow
Oh my
corporations,
God.
but more importantly,
Gotta love
working
this shit, man.
families
Who
to
loves
keep
today?
more of what they get from the deregulation. And the deregulation allows us to have substantial growth without inflation. What caused the inflation
SPX
under
put to call
Biden
ratio
was
fucking
they
godly,
did this
bro.
gigantic spending. this
Today
series
is
of
actually a
gigantic
fucking
spending
beautiful
bills,
day.
But
I
then they
can't lie.
constrained supply
Everything
through
is-
over-regulation. So what we've
I
done,
mean, there's a lot of
I chair
things people need to
something
pay
called
attention
FSOC,
to, but
the
I mean,
Financial
I
Stability
can't lie.
Oversight Council, and
It's every
these
fucking day. It's professional shit
2008,
almost. Every
2009,
fucking day. This is
2010
literally beautiful. SPX.
financial rules were too tight. They have hamstrung the American financial system.
I'm going to set the SPX
It
put
was
to call
time for
ratio.
change. We are going to be safe, smart, and sound in terms of our deregulation, but we have to take the financial system out of the straitjacket.
Yeah.
You know, this substantial increase in private credit, which is outside of the regulated banking system, that tells me that the regulated system is too constrained and has not been able to compete
I'm
with
up
those who
deep today.
aren't regulated. So we're leveling
I
the
left
playing
Tesla
field,
mad
and,
fucking
you know,
early too. I
believe
left
that we can
Tesla at
do
like
that
four
in a
fucking
way that
470 or
creates
some shit. That
trillions
shit
of
went
dollars
fucking
in
hella
credit
deep to
for this very
466. Well,
strong
it's whatever.
economy
I
we're gonna
literally
see, and it
scalped
will be
fucking really good on
non-inflationary.
SPX
Secretary,
a
let
bunch
me
of
move on to
times.
China because
Look at all the
we are
calls on
worried
SPX
that they
right
are
now.
not sending
All
the
fucking
rare
under.
earth,
Look at this shit.
magnets that we
I'm
need
sending
in
the
this
SPX
country.
put
You
to call
said
ratio.
to me
It is
a
literally the
month
same
ago
box we
that
said
you thought
40
we would
minutes
have
ago.
a
The red
signed
box up and
document on
down.
a trade deal with
It's just
China,
it has completely
very
shredded
soon. Where are we with
every
this, and do
fucking
you
call that
trust
was
in fact they are
that
going
was
to flow
literally
these
up
rare
there,
earths
and it wasn't
even to
even
companies that are
fucking
tied
in
to
the
the US
money.
military?
Or they were
So
all out of the
it's-
money
it's
calls and they
trust
got
but
destroyed.
verify. Thus far, the
All
Chinese
this
have
out of the
done
money call
everything
got
we
destroyed.
negotiated.
All these puts got
a
destroyed
deal
too, but
in
I mean that's what they're
Kuala
doing.
Lumpur with my counterpart, the
Eating
vice
and
premier,
chopping.
President Trump and President Xi had a very
Time is
robust
11:15.
discussion in Busan, Korea. And Maria, the good good news is President Trump respects President Xi, but more importantly, President Xi has great respect for President Trump. And that is new. That is not like the previous administration. Previous administration was all bark, no bite, which is very dangerous geopolitically, very dangerous economically, and the Chinese have lived up to every part of the negotiation thus far.
Well, the president's going to be meeting with Xi Jinping in April. What more do you want to see China agree to?
Well, what we would like to see is them to begin rebalancing. The world cannot have a China that has a $1 trillion trade surplus. That's just not possible. So they need to increase their domestic consumption. Many of our allies early in the summer, when we put up the tariff wall, I told the Europeans, the Australians, the Canadians, the Brits, Koreans, and Japanese, I said, look, this flow of high-end goods from China, the global South, cannot take all of that. It's coming to your shores.
It's been not too fast.
Both-sided
is what I'm trying to say. That's all I mean by
supply of Chinese goods, and I think it's
basically been going up with setup and going down with setup, and then at some point people were able to deduct, and people were able to be like, oh, this is this.
Manufacturing, the Chinese need to consume more. If we could do that together, it'd be a very good equilibrium.
Secretary, you're doing so much. In addition to all of this that you're doing in terms of growing the economy and ensuring that we've got stability here in America, you're also dealing with sanctions. Sanctions on
That's why I haven't been looking at the video for the last 2 days, because once the move happens and once my setup's done, I don't fucking care what happens. I let it be, and then later on, if they do build a setup, I come back to them. But that's why I'm on Tesla. But the shit is literally,
what's happened over the
it has set up,
we've gotten very
and then it
lazy
reversed
on sanctions. So
this Friday playing, and it's only Tuesday. Like, this is absolutely crazy.
If we do these sanctions,
I'm still in Tesla December 26th, and it's just going up and down today. Like,
achieving our objective, because the thing with sanctions, Maria, is you just create new markets. You sanction Russian oil, and then ghost ships start appearing or disappearing. You're trying to cut off Iranian oil, same thing. So, a good sanctions regime, you always have goals, and you constantly reevaluate whether you're meeting the goals. For instance, on Venezuela, we had Venezuelan oil had been sanctioned for years, but now President Trump has taken the initiative. We are cutting off the narco boats, and for the first time, we have now directly boarded ships carrying Venezuelan oil, and the oil's sanctioned, and that's the authority under which we take it. And I think the Maduro regime is on the ropes.
Secretary, with all of this that you're dealing with, is it fair to say that you're going to put the IPO of Fannie Mae on the table for a little while? I mean, is this off the table right now?
It's not off the table. That we're working on it very
deliberately. They broke down the downward trend they had for the last 2 days is what's going on IWM. Right, a lot, literally. Those that watch my market update video and that have listened to the market update video with their heart is understanding what's going on today. What did I say in the market update video? I said in the market update video, they're going to use they're going to use IWM to continuously trap people, trap out the amateurs, make it confusing, right? But there's going to be something on IWM throughout the week, because that is happening last week, right? And that's literally what's going on today. So please understand what I'm saying. This is bearish as fuck. This is super bearish.
As wealth grew, fueling suspicion.
In control here.
Why is it that Congress is not following the rules that so many others follow, and that is you can't day trade.
This is literally what's going on. Do realize this before it's way too late. Market update video, right? As we're talking about this all fucking week. There's been 150 people that watched it when it came out. But I'm telling you, that's literally what's going on. So
my dad never looked back at his old jeans
until this shit says there's a cycle confirmation long. It's dangerous as fuck. That's all it is.
No instance
Time
where
is
elected officials are making money off of
fork. That shit is not a coincidence.
If you want to trade stocks, there's a place for that. It's called Wall Street. We have an opportunity to prevent members from day trading, profiting off of insider information. But we have to also make sure that we have individuals who have had successful business careers are still able to come to Capitol Hill. It's evaluating that we need more people with business experience in Washington who are willing to serve this country.
What time did it go down from?
Do you believe that members of Congress are day trading?
Went down from
I think there is clear evidence that people are day trading, profiting off of insider information. But we have to also make sure that we have individuals who have had successful business careers are still able to come to Capitol Hill. It's my view that we need more people with business experience in Washington who are willing to serve this country.
Congressman, do you believe that members of Congress are day trading?
I think there is clear evidence that people are day trading, and I think the appearance of that impropriety is a risk to the integrity of the institution. You can look at the returns and you see massive numbers of trades. We had a United States senator who was the head of the Intelligence Committee who sold their entire portfolio except one stock in the lead up to COVID.
If this shit doesn't break, then that means we are range bound for now, and we'll see a bunch of chops here in Tesla. But if it does break, we'll see a little bit of a drop on Tesla too.
Essential that we put in place rules of the road that make it clear that elected leaders cannot profit off of insider information, and I'm of the belief that we can pass that legislation.
Oh my God. Members of Congress are day trading? Honestly, I did not know that.
Well, Maria, I don't know about day trading, but if anyone wants to go to the Treasury X account, my account, we posted a study on congressional trading, and it shows why they outperform. They outperform for two reasons: because they have access to corporate executives, and they have inside information, or two, they have inside information because they know the direction of legislation. And you look at these Pelosi returns, and you know, I'm talking about since she came in 1987, her husband's returns are something like the 16,000%.
Gotta respect that though.
2,500%.
Senators are deductors though. Best believe.
You look at Senator
Best
Ron
fucking
Wyden,
believe these motherfucking
he
senators are smart. I'm sorry, respect.
I think he had 125, 130% returns. All those stocks were bought during COVID. That, you know, we at Treasury, we in the administration have very strict rules in terms of what we can own, and it is unbelievable to me. When I had my private fund business, we were not allowed to own individual stocks. You can make a lot of money betting on the United States through indices.
People that are truly smart and that trust me, they already know this shit. Trust them.
Exactly. So you know, this is why, exactly as the congressman said, this is why the American people hold
Making up
Congress
smart money
in
deductors,
such low
folks.
esteem.
That's all it is.
They
God
believe
bless
that it's
America.
an insider's
God
game.
bless
They
America.
believe that it
Let's
would
get
help
some
the
fucking American
institution,
flags
it
in
would
chat,
refocus
man. Oh
the-
my God.
Look, people
God
come
bless
to
America.
Congress
I'm telling you,
and to the
smart,
Senate,
making us smart money
to the House
deductors.
and
I
the
don't
Senate
fucking give a
to do good for the
fucking
American
ass who
people,
makes us smart
and
money
it behooves
deductors. I
them
want
and their
a part of it.
status
That is
as
me.
great Americans and great patriots to end this
Man.
now.
Unbelievable. I mean, are you surprised at when you see all of this stuff? You've got insider trading potential. You've got attacks and smears against good people. You've got, you know, this threat to democracy on so many levels. And then they say that President Trump is doing that. And yet they are winning the messaging argument on affordability. How is that possible?
LOD testing 1120.
A lot of it is the mainstream media, and that
there is an algo range here at 1120 into 1120, so we'll draw that too. Cycle building. This doesn't truly mean LOD testing. It's just cycle creating at the floor before they decide what to do with all this volume and magnitude.
And that was Greg Ip at the Wall Street Journal, toxic Paul Krugman at the New York Times, former vice chairman of the Fed, Alan Blinder. You don't understand how good you have it. We know that the price level is high.
Why is this candle coming in crazy the way it is? Because there's an algo range here too.
And we are not going to tell the American people that they don't know what they're feeling. We are going to help solve this: real income growth and holding prices down.
Yeah, Secretary, you're doing so much. We so
Why did we
appreciate
go up
your
here
time.
earlier?
Let me end with this.
Range.
You've got some fear on the part of college graduates right now. You've had an incredibly esteemed career from Wall Street to Washington.
All these algo ranges?
If you were graduating right now, Secretary, if you're looking ahead to the new year
earlier.
and the new 5, 10 years of this revolution of AI, what
thank
job
you, folks.
would you go into?
Thank you
would
for
you
the American
choose
flags
a different sector?
Well, I don't know what job I would go into, Maria, but I can tell you
American
I would be
patriots
trained up in AI, because the real thing that college
and make sure you hit the
that,
thumbs up on the live stream,
the
folks. Thank you very much.
The aughts, it was
IWM
that
is
kids
cycle
were
trying
college
to
graduates
do something
were
here.
digital natives.
20,
They were facile, they were with devices, with machines, with the internet, like you and I never will be. So what I would do is become an AI native and make the value proposition to any employer.
Little squeeze drop, little squeeze drop, little squeeze drop. So
I'm not afraid of AI. I had the CEO of one of the largest credit card companies in, and I said, tell me, seriously, do you think AI is going to hurt your hiring? He goes, no, we're just going to hire in different areas. With customer service and maintenance,
AI
we'll
is
have
definitely
fewer
going to
employees,
change
but in content creation and other areas, AI is going to help us. We'll hire more, and we'll do the better product with highly trained people. So, my message would be become an AI native.
Great advice, and thank you for taking that on. Mr. Secretary, thanks for your leadership. Thanks for your time this morning. We've had a great substantive interview this morning, and Merry Christmas
There's
to you.
our pushing to the floor.
Thank you so much for joining us. Treasury Secretary.
I really want to see what happens to this Tesla box, if this shit really holds or goes. IWM, no cycle confirmation long yet. Cycle is actually just either chopping at the floor or just weak for now. Showing.
Got it, Edward, thank you. Now listen to what Treasury Secretary Scott Bessent had to say this morning about inflation.
With affordability, I suspect
all hands
that
on
we
deck,
are going
folks.
to see a
All
substantial
hands on
drop
deck.
in
07,
inflation the first 6 months
brothers
of
and
next
sisters.
year. Rents are down.
Hit
The story that the Biden administration doesn't want to talk about, the mass unfettered immigration, they have pushed up rents. We brought interest rates down. So we've seen mortgage rates down.
Smack that like button, folks.
John Lonsky,
God bless America, all right?
Will inflation be better 6 months from now, thanks to Trump?
If the economy grows no faster than 2%, if we continue to see wage growth no faster than 3.5% year on year, yes, inflation is going to come down. But inflation will not come down if the economy
inflation won't fall if consumer spending surges past 3%.
Have the Federal Reserve finally abandoned its 2% inflation target?
I don't think so. I think they're going to stick to it. What they're looking at right now is the weakness in the labor market. Sure, jobs growth, for the month of November came in above expectations, 64,000. But get this. The healthcare and social assistance job category contributed all of those jobs, 64,000 jobs. That was the increase for that one jobs category.
Might
the
get
only
a spike
other
down
area
candle
we
here.
got jobs growth was construction, but I think that was AI-related construction. They added 28,000 jobs.
That's
Elsewhere,
the only way they
no
can break
jobs
the
creation.
LOD
In fact, there may
with
be
the
some
MACD
job losses
RSI
also.
already being
Well, wouldn't that
oversold.
mean we're going to get rate cuts from the Fed?
I would think so, but then again, Paul said, I don't really trust these numbers yet. 4.6%
IWM is
unemployment rate.
0.89%
the
red.
10-year yield is still hovering close to 4.2%. I think it would be lower. And as others have noted, the odds of a
As low as at 475 yesterday's close. They might be hovering, holding this shit here until market close, man.
Taking in what, about $200 billion in revenue.
And then do the move after hours too. Wow, literally right before fucking market closes or some shit.
The stock market that's gone up 52 times to new highs during a 10-month period, my 10 months.
Someone said unless you are a monster day trader, you are fucked in today's economy. You need to not be just, basically what the market wants everyone to be. It's all it is just, setup, and only the minority gets to see the setup. Because they care enough and they look for the setup and they know the setup and they care about the setup. That's all it is. People that don't care about the setups will never even bring up the setups. Why? Because they don't know the setups. They don't even know how to set up the setup. They don't know what to mentally bring up in their minds to literally try to see the setup, because they are either number one, faking it to make it, or number two, they do not know, or number three, they don't care enough, right? If people truly care enough in their lives, you will find out the truth. And I'm not even just talking about in day trading. I'm talking about in anything, whether that is, anything, man, whether it's related to like whether you want to become a lawyer or a doctor or whatever it is, right? Whether you want to do anything in life, right? You will not do shit unless you want to do it. And like the reason why people don't want to do things is because they are focused on different things. And I'm talking about the other people, other channel that scams people. I'm talking about people that are focused on scamming people. That's why I'm getting like this. But I'm just straight up saying, like, bro, you gotta be focused on the setup. And the setup alone. Why? Because setup's the only thing that matters for me. Why? Because why do I go up and down, man?
In early April,
that's the real
what
question.
did the stock market do? It tanked.
I'm pretty sure this is what Dr. Barry and Cathie has been thinking and has always thought while they were growing up. So while they are now, so honestly, man,
I think what he's referring to are these promises to inject trillions of dollars into the U.S. economy. Well, that's fine, but these are just promises. The 3 rules of finance are, Stuart. Rule number 1, get the cash. Rule number 2, get the cash. Rule number 3, get the cash. And I haven't seen that cash
nothing
yet.
to do with being a monster and being a trader. It has everything to do with being a monster and a good monster. Like, you get what I'm saying here, guys? Like, it has nothing to do with being a monster fucking day trader. It has fucking everything to do with being a monster. A good fucking monster in life, or a good fucking monster in fucking whatever you want to think that is, spiritually, mentally, emotionally, whatever you want to think that means, right? Good, be a good monster, but be a good monster as in you are strong enough to handle yourself to become a man or a woman, but you can also control yourself to the point that, you know, you do good things in life and then you could protect yourself against all evil type shit. You know, this is the type of videos I look at every fucking day. So, man, you get me? Shit, be a good fucking monster, man. That's what I'm trying to say,
if it's
bro.
not tariffs that's putting the stock market onto record territory, surely it's profits. It's corporate profitability. That's
exactly. Time and again,
this is what I mean by, you know, somebody want to look at the setup or not, or does somebody want to care about being a good person, or does somebody want to care about, you know, being emotionally aware to be like, oh, this is 1/3, 2/3, 3/3, or does somebody not give a fuck to be like, oh, 100,000 contracts, 100,000 contracts, I mean, 100,000 contracts.
Show you how I afforded.
Bro, that's some fucking amateur fucking fake ass bullshit. You gotta think about this shit and be real. That's literally all I've said all my fucking life for the last. However.
Hey, and the market joining us today is Ed Yardeni, president of Yardeni
Love it,
Research.
hate it or not, LOD is testing. We are.
Happy holidays.
Going.
Good to see you. Can you
IWM is testing again.
A couple of phrases?
Yeah, I think the economy in terms of final demand, GDP growth is still quite good. The labor market is funky with a lot of different things going on in that marketplace.
Pairs are too fucking strong.
Productivity must be extremely strong. And
everything
that's
heading
good.
to the
I
floor.
mean, actually
Everything
helps most consumers. Because productivity growth is what drives the standard of living. Wages rise faster than prices.
Tesla holding crazy,
next
bro.
year?
I think it can get very good. I mean, this year I think real GDP is running around 2.5%. Some of that was tariff related in the first quarter, was the weakness, and then some of the weakness in the fourth quarter because of the shutdown. But the second and third quarters are very strong. I think next year we'll have 3.5% real growth with a labor force growth of maybe, you know, something between 0.5 and 1%. So the productivity number should be at least 2%.
You're well above consensus on real GDP next year.
Yeah, I think so because, you know, I've been rooting for the roaring 2020s and it's worked out quite well so far.
Oh my God, did he just say
stick with it?
But what about the...
We are in the roaring 2020s.
1%.
Oh my God, guys. Smart money deductor just said the word.
Above consensus
Freak the fuck out.
Yeah, I think so because, you know, I've been rooting for the roaring 2020s.
Risk is 10,000, but this could be the bounce too. Go test the floor.
But what about the weakness in the labor market?
Well, I think there's a lot of things going on there. I mean, clearly with the restricted immigration, with the deportations on the supply side, and then, of course, companies, I think, are all looking at artificial intelligence and trying to figure out whether that might be able to increase the productivity
right now,
of their
bulls
current
versus
workforce.
bears.
Do you think that's why we're not seeing more hiring?
I think that's a big part of it, absolutely. And I think the net result is going to be productivity growth continuing to improve.
Coin toss here.
It has been improving.
So do you imagine a world where the Fed keeps cutting rates
Coin
next
toss.
year?
I don't.
You don't?
I don't, because I don't think that lower interest rates are really the solution
trying,
for what's ailing the labor market. I mean, part of the problem is we've got a lot of kids coming out of colleges with basically the same kind of degrees. They just don't really match the skill sets that are required by businesses right now. And
1130 bounced to 1130, 1130 rejected, so they are spiking up, and then
lower interest rates is to stimulate demand.
Algo ranging within algo range. There's an algo range here, and it aligns with 1130, so it's algo range within algo range. You call this a. I don't even want to say the word, but alright, we're just gonna say we're gonna watch. Do.
Joining us right now to talk about how today's jobs number impacts the Fed's rate plan, former Atlanta Fed President Dennis Lockhart. He's a professor at Georgia Tech. Good morning to you, sir. You saw the numbers. I don't know how much you take away from them at this point, how much you think even the Fed is looking at those numbers in terms of how it's going to impact their plans for 26 and beyond.
The Bulls are winning that coin toss, looks like.
But I agree with much of the commentary we heard earlier. I don't
trader, so I don't really give a fuck what happens here.
Changes much, quite frankly.
All they're doing is they're burning all the puts and all the calls by chopping in the middle for the literal last
body language
1 hour.
I picked up from the press conference and some of the communication was that the Fed would prefer to pause for a while, wait and see how the economy evolves. And I don't think this report changes that. So the low probability that Steve
Gap did not
pointed
feel
out earlier
so
of a January cut, to me, is in line with reasonable expectations.
But what about the rest of the year?
The gap did not fill, and
the rest of the year remains to be seen. Of course, we have a change of chair, which means a change of leadership.
The gap did not fill
much could change with that. But if you just take a look at it from the economic point of view, a good part of the committee is expecting one or fewer. I think the number is 11 of the 19. Right. In their projections last week, one or fewer cuts in 2026.
They did not fill the gap below by cents.
So it's conceivable we see quite a
short-term, medium-term possible, but
just see how this economy
moves. I don't know about POC
Dennis,
or VWAP.
Can you just walk us through? I mean, since you've been in the room, bring us inside the room.
I don't know
in
about
terms of you said that you think things could change if there's a different chairman. How does that work in practice? In the sense that we've seen the dissension on the board, we've seen it in the dot plots and everything else. You get a different person in there, but it's only one person. How does that change the dynamic fundamentally?
I'm shorting.
If it does.
Well, I'll give you a couple of answers.
Contract.
One is it is a consensus process. So a chair has to work with everyone else, 18 other participants on the committee to come to a consensus that can be acted upon in policy terms. And that requires a certain style, and the new chair will
6, 7, 8, 5.
hope earn the respect of the committee. The second part of my answer is when it's a very close call, a chair who has earned respect gets the benefit of the doubt. The preference of the chair usually will prevail. The chair is only one vote and only one person around the table, but
I'm already out.
The chair
$1,630. Holy fuck.
When the situation is sort of indecisive.
Do you have a take? We were discussing all morning the Kevins.
Within the fucking minute, I sold before the candle switched.
Kevin Hassett, by the way, is going to be on the broadcast.
I joined right when the candle turned red. Holy fuck.
Walk on the Street. The betting markets now say that Kevin Warsh may get this role.
Well, they're both highly qualified, and I think they'd both be fine chairs.
Holy fuck, the candle coming in fucking dumped it. They're about to go break LOD.
Treasury Secretary Besant is getting feedback.
The candle about to break LOD coming in fucking dumped it. Ain't no way that shit going to fucking
too close to the president, and therefore would be interpreted as someone who's going to undermine Fed independence, whereas Kevin Warsh is somewhat hawkish in terms of inflation and is likely to be a bit more independent. That's the way I would read it, but it's going to boil down to a trust
SPX
factor
fucking dumping
on the
now.
part of the president. And, I
They're
still
going fucking
would
crazy
think Kevin
now.
Hassett is more
6,
known
7,
to the
80.
president than the other Kevin, but we'll see.
IWM is breaking the floor, man. I'm telling you, everything is fucking dangerous as shit. It says mixed at
Let's
best.
get to Kevin Green, who joins me now. As I mentioned, we've got so much
Bearish
data
as
to chew
fuck
on
today.
this morning.
They're
A
destroying
smorgasbord
all
to
calls
digest,
today.
KG. We've obviously had the jobs data, we've had the retail data, we've had the PMIs as well. Just talk us through what you're seeing out there and any sort of new numbers that are hitting the tape right now.
IWM is the leader,
yeah, so
I
let's
guess,
actually
right
start
now.
with the labor data that we had this morning here. I would say it would be a little bit more of a
0.96%.
mixed picture when you're looking at the data for the jobs
1140.
number that actually came out. Now, in November, we actually did see an expansion. Let's see if that's going to hold when we have a revision here. But November payrolls came in at 640,000 jobs added for the month of November. Street was looking for around 45,000, so better than expected. But if you're looking at the October payrolls, we did see a negative 105,000 print that came in there. Now, that's the third consecutive month where we've actually had negative job growth for the U.S. economy. Now, we have to just be
by the
mindful
time I
that
type in the
October number is a
WhatsApp
little
group,
bit
it's like
delayed.
fucking
We did
30
have the
seconds
government
late, too.
shutdown for over 43 days. That's also impacting that number. So
Man.
November, we did see a decent rebound, but
Good
these
shit,
revisions
though.
have been very
11:35.
aggressive. So let's see if
Bears
that's
are
going
still
to be
here.
able to hold.
11:33.
Healthcare saw
Coin
the
toss
majority
almost.
of
Gap
the
did not
job
fill. They're showing a
growth
bounce.
if you
Things are
look at the month of
dangerous, but
November.
11:36.
46,000 jobs added. Within
1,380
healthcare,
SPX put.
construction also added
One.
28,000 jobs.
That was
Now, what's
literally
also very
right when the fucking
interesting,
candle
if you look at
switched.
the October jobs report, the one thing that is an outlier is the government jobs that actually contracted by 162,000.
Floor not breaking.
That is really kind of reflecting the Doge cuts that have been in place
is
here.
crazy.
Now a lot of those severance packages have rolled off, and now you are starting to see
I don't know.
individuals getting
IWM,
into,
look at the IWM right now.
filing those
I don't know
initial
how this
claims
shit's not breaking the
getting
floor.
on those unemployment
keep
rolls,
bouncing, I
and
guess.
now
Maybe
that's
that's
also
why.
pushing up
Divergence
the
like
unemployment rate
nuts.
sitting at around 4.6%. Street was
Chopping out
looking
the
for
floor.
4.5%. So once again, a little bit of a mixed picture there. You saw an initial reaction to the downside when it came to 10-year yields, but now we have seen that kind of re-rate a tad bit higher. We also had retail sales that came out. Now, if you're looking at retail sales, the headline number, that was actually a very interesting one. We actually did see that come in slightly around close to flat at this point in time here. Now,
What do you guys think?
That is for the month of
Is
October.
IWM about to go minus
-1%?
1%?
In September, we actually saw that revised.
Everybody, minus
minus
1% right now. Minus 1% right now. Minus 1% right now. Minus 1% right now. Dump. New LOD. New LOD. Minus 1%. IWM. Minus 1%. IWM. Minus 1%. Minus 1.3% now.
Gasoline, things of that nature here. So once again, another mixed report, and we just got across the wire
minus
the business
1.03%.
inventory numbers. Now that actually came in at an increase of 0.2%.
Shit is
She
so
was looking
nasty,
for
bro. Holy
0.1%. Now,
so
business inventories
fucking
could go up. That
Look at how they washed out the fucking
allude
calls,
to
bro. Like
demand actually
IWM
weakening a
today.
tad bit.
Look at how they were
That also
faking
could
on
lead to
QQQ until
prices
the fucking
coming to the
last fucking
downside
minute.
if those inventory
Last fucking
builds
minute.
continue to remain or stay
last
elevated
fucking
here.
minute.
So a lot of economic data, the market's trying to
IWM
digest it all. From a
leading.
technical standpoint, we've been trying to hold the 6,800
IWM
level
leading
on
my
the S&P
market
500.
update video.
Some buyers have been
Fucking
trying to step in,
OG,
but I would
my
say
market
mixed at
update
best
video.
for
The
today.
realist have
And when you
watched
kind
it
of
at the
get in the
tippity
direction
top
for the
on
Fed, at least for the
Sunday
January
night.
cut
Sunday
or
night.
potential cut in January,
I
I
said
don't think this data
IWM
that we
most
actually got
important to
today
watch into the
really
week.
moves the needle one way or
IWM important
another.
as fuck yesterday. IWM important
Yeah,
as
and I
fuck
suppose
today.
herein lies why we're
I
sort
drew
of
this shit
seeing the price
in.
action
I
we're seeing
literally
in the
drew this
markets
shit
right
live
now, because
today.
as you said,
That's the
yield
craziest
sort of
part,
ticked
man.
lower, but then
I drew
re-rated.
this
We
shit
actually
fucking
saw the
live
futures,
today. The
picking
realest
up a
people
bit
watch.
off the back of the
That's the
initial
fucking realest.
November number that we got,
Man.
but then had a bit of a rethink as well, and we're
I don't know
looking
how LOD
fairly
not breaking,
range bound
but
as far
yeah,
as the
we are
major
very
indices
low
are
here.
concerned as
SPX,
well.
maybe they don't
We're
want to
seeing
go lower than here.
quite a number of sectors in the red. A couple of bright spots, but nothing huge to write home about at the moment. You just wonder, how much the market is, giving
1.05.
credence to, as you say, 3 months of negative job growth, or whether they are taking some comfort perhaps
Bad
in the
job
November
data.
numbers with that
They do
pickup.
not like
so
it. Delayed
I guess
job
we'll have to
data.
wait and see,
No
what this is
bueno.
all going to mean for the Fed. But plenty to chew on this morning as we're getting, Friday jobs data on a Tuesday. We're getting backwards-looking stuff. We're dealing with a backlog of economic information. So I'm just wondering, what you make of what we're seeing as far as some of the action, particularly when you look at stocks. As you've touched on the yields already, but just as far as how the markets are taking this.
Yeah, so we have seen, sectors actually kind of rotating here a tad bit. Actually, right now, we are seeing communication services, consumer discretionary, and technology leading the way. Now, if you're kind of looking at all three of those sectors, they carry a major weight when it comes to the S&P 500. Once again, kind of holding us up, at least for now. Now, if you're kind of looking at the last week and a half, technology has been a little bit weak for the most part, but maybe some buyers are trying to step in. If you're looking at it under the hood, semiconductors is really kind of holding us up. NVIDIA has been actually still consolidating.
They don't want to break the floor.
Down
Something is holding.
As of yet, and with that is going to continue.
This is the true
once
floor
again,
test. They did not break the floor
try
here.
To step in for that end of year rally. I think it's also very notable, Sam, that the volatility in the market has been
There's so much time left
to say the least. And the reason why I say that, usually we do not see strengthening new all-time highs in the S&P 500 when volatility of the VIX is sitting at a 14 level, and that really kind of came to fruition on Friday, and then leading into Monday or yesterday, where you did see this crush to the downside in the markets, but also volatility raising a little bit higher here. Now, this chart, really, this is just trying to simplify the fact that we have vol, which is looking at the VIX complex, and then you have the VIX index itself, which is looking at S&P 500 volatility. This is just a ratio chart, and usually
surely the market has to chill out here now.
Volatility for the S&P 500 at very low levels.
I'm sending the put to call ratio. I don't give a fuck about that LOD anymore. That is literally
extreme levels to the upside of this spread. We usually then see a re-rating lower. What you would like to see if you are a market participant, especially a bull, is this actually coming down a little bit lower. That orange line giving us a nice firm foundation, and then we have a crush in volatility that leads stocks a little bit higher. And I think if that's going to be the case, the sectors that have been beaten up, communication services and technology, might be able to catch a short-term bid in this market. So keep your eye out on that. But we usually do not make all-time highs and sustain all-time highs when you have
look at the SPX put to call ratio right now.
Really what drives this market. It's been doing that all year, and it's probably going to continue into 2026.
I'm going to screen record or screen share this.
Okay, good to point out there, KG. And just obviously, I touched on crude oil earlier. We are looking at levels not seen since May. We're at $55 a barrel right now. Obviously, tracking these lines around peace negotiations and the potential for a deal here to maybe end the war over in Ukraine. Not to mention some pretty dismal old data out of China earlier this week, not helping things as far as the internals looking weak there.
All the calls are underwater. And there's so many
you are
puts
seeing a breakdown. Crude's trading at around $55.30 right now. Key area of support, kind of that last line in the sand until you start considering the $45 or even the $43 level on WTI. Now, if you are somebody that does observe the energy markets on a day-by-day basis, you could actually make the case that this is probably signaling that economic slowing is definitely taking place, even below that $65 level. That has been a cause for concern.
That is fucking sad as shit.
A very good oil analyst has also kind of mentioned this on the network in the past as well, and I'm right there with her. So you get a little bit concerned about the $55 level. Now, there's some seasonal factors when it comes to crude oil and demand when it comes to the winter months, and then you are seeing kind of an outsized move when it comes to capacity utilization, or basically refiners running pretty hot and output being fairly high in an environment that demand is actually slowing here. That being said, Sam, be on the lookout, because usually in the wintertime we have these Arctic blasts. That's what was been priced in the natural gas markets. Now it's being priced out here. But if we have any type of freeze or Arctic movement when it comes to freezing, especially in the Bakken region, or if you're looking at North Dakota, and those oil flows are not
See, now the calls are like, oh, and the puts are like, oh, no, but literally it's the same size, right?
So from a technical standpoint, key area of support, not looking good when you're looking at the fundamentals, to say the least here, especially when it comes to demand. But usually commodities catch bids when no one loves them, and right now no one loves crude oil, no one loves gasoline, and the winter months can bring some issues when it comes to logistics. So this one is something to keep on the radar here. It could re-rate higher if we get a weather report that says that we might have some problems here when it comes to refining and production up north.
Okay, plenty to look at as far as geopolitical tensions, Mother Nature at work as well. Thanks so much for getting us across the commodities, as well as all of the data we got this morning, KG. I'll check in with you later.
Yep, look at that shit. Starting to get nasty now. Be on the cautious, wary side. Right? They're destroying puts and calls like nothing here, so that's my deduction. Candle traders will be like, oh, this is bearish, oh, this is bullish. So I mean, do think that too, but I don't really give a fuck about none of that. So here we are again at the same fucking spot. Look at that! Oh my God, look at fucking that.
I do want to welcome in our next guest for a more broad look at the markets. Joining us this morning, Ted Thatcher, president of Bright Lake Wealth Management. Ted, great to have you with us as always. Love to get your thoughts on how we're starting off the week. I was hoping to say either a mixed picture or a lot of green on the board, but unfortunately, I'm looking at the big board and seeing a lot of red.
Look at that.
Absolutely, Marla. You know, I think the markets are just digesting more of what we saw last week. You know, the AI trade selling off, the constant question still kind of perpetuating about whether or not these mega cap companies are going to be able to monetize in the way that keeps being discussed around this trade specifically. It's actually sort of in contrast to what we saw last week. A lot of actual positive economic data points for the consumer. The last several months, we've gotten real choppy data for the consumer. And last week, we saw more job openings than expected. We saw the continuing unemployment claims tick down further. We got, of course, that relief with the Fed lowering rates. We got updated GDP expectations increased for 2026 and lower inflation expectations for 2026. And despite all that positivity, here we are looking at red this morning.
Yeah, and how much of that, you mentioned the Fed, how much of the red that we're seeing and some of the really choppy action we saw last week as well is tied to the Fed's rate cut decision, and even more importantly, some of the other information that we got out of that meeting, both the division and the tone that we got from Powell?
Yeah, it's a real good point. The truth is the Fed has been really divided here. And it's hard to point the finger too far here. We've been flying blind when it comes to economic data because of the government shutdown. The truth is we're still working our way through that data. You know, this week is chock full of data. We're going to get CPI updates. We're going to get retail sales for October. We're going to get retail sales for November. We're going to get updated PCE, GDP expectations. All kinds of data, consumer sentiments coming out on Friday. And so I think that it's a lack of clarity that the Fed members are constantly dealing with. They don't want to commit to a certain direction too quickly because the truth is they are right to say that it is still a little bit fuzzy despite this series of real positive points we did see last week.
Yeah, and you mentioned, the data blackout affecting the data that we're getting. This is going to be a big week for data, albeit some of it delayed data still because of the shutdown. But as far as the labor signals that we're getting a bit of a mixed picture in the labor market. We've got initial jobless claims jumping, continuing claims fell. We had job openings tick higher. What does that tell you about the true health of the consumer right now?
It's a really good question. I think when I look at the labor data that we're seeing, it is choppy. I mean, we saw 3 continuous weeks going into Thanksgiving of those initial claims sliding down. It was a real exciting thing. And then, of course, they spiked back up last week. And then, again, those continuing claims actually dropped off much more than expected. I think that the truth is, at least this data specifically, I chalk it up more to the holiday volatility. We see, of course, around the holidays, extra job openings for that holiday season. And we see, of course, at times, some of those, job releases at that point, too. So is it going to give us a clear picture of the job market for the consumer? I don't think so. Of course, we are going to get the updated unemployment rate. I expect that to be still at 4.4%. My real hope for the consumer is really what we're going to see in terms of sentiment later this week and retail sales. What I've really had my eye on with the retail sales as it pertains to the consumer is really diving under the hood. This week, we're going to get, again, more of that data, and hopefully it can inform some of that K-shaped economy discussion. Are things still as broad as they have been, or are they narrowing at all?
All right, let's talk about some of your picks that you sent over for 2026. You call Alphabet the value play of the Magnificent Seven. What do you think makes Google uniquely positioned for the next phase of the AI cycle compared to its peers?
Great question. What Google is such an interesting story this year. Everyone wanted to write off Google halfway through the year.
Up there.
ChatGPT, OpenAI was going to take their lunch. And of course, the opposite has been true the second half of this year. Google has been on an absolute tear. And it's because their performance of their Gemini models, of course, has taken front row seat. Their performance is outstanding. But really, the growth story for Google in 2026 centers around its entire stack. they control the stack from A to Z. They aren't entirely beholden to NVIDIA's chips like everyone else. They have TPUs, their own silicon on the lower end. They have a fantastic model in Gemini that we've already discussed. And most importantly, Marley, they have distribution. There are 230 million paid subscribers to Google One services. And of course, pretty quickly, when you talk about business distribution, you know, that marketing, that ability to get users is ultra important, and Google is absolutely primed to be able to take advantage of its user base in 2026.
And Ted, you've got another pick that I would say maybe some people want to or tried to write off here as well. In Meta, you've got them as your applied AI leader pick for 2026. Why do you think that monetization and not model superiority ultimately decides who the AI winner is going to be, and how does that play into Meta being your pick?
Another good question. You know, so much of the discussion Friday and this morning is just around AI and the monetization of it. And I think Meta fits into that storyline really well. You know, of course, maybe they don't have the premier performance model. Their Llama model, of course, is open sourced. It's kept them competitive on the model front. But where I love Facebook in 2026 is how quickly they're going to be able to monetize
fucking
their AI.
tired.
Of course, you think about ad targeting with their ability to monetize it on that. You've already seen higher CPMs. You've already seen better targeting. They've overcome a lot of the barriers that Apple put in place this year because of their improved targeting. Because of AI. And in 2026, what I'm really excited about
is a gap down
what
there,
they're doing on their
so
ad platform
that could have been the ultimate bull trap. But I mean, honestly, they didn't break the floor, so it's been a bear trap too. They bull trapped the fuck out of people at 10:55. They bear trapped the fuck out of people at 11:45 into.
All right, and your last pick here is Costco. You describe it as the ultimate hedge against the K-shaped economy.
A lot of shit.
Tell me a bit about that thesis.
They not working.
Well, of course, this K-shaped economy story has been widely publicized. You see the headlines everywhere, and it comes back to the kind of consumer that Costco serves. So, first of all, they have increased their membership.
Oh my God, we've been watching John Wick. Holy shit, someone said John Wick in chat, and I was like, what is that guy talking about? But that is literally John Wick himself. Wow. What the fuck? Yo. Already. That shit is hilarious. Ay, ay, ay.
Welcome back. We are awaiting the delayed November jobs report. Economists are expecting 50,000 jobs created for the month, with the unemployment rate holding steady at 4.4%. This will be a market mover because it will educate or inform market participants on what the Federal Reserve's next move is.
Market warning. Oh my God, warning. After everything's fucking done.
Job Creators
Oh
Network
my God,
CEO
market
Alfredo
warning.
Ortiz. Also with us this morning is Charles Payne, Mitch Rochelle, Lee Carter, and Charles
Market warning.
Great to have everybody.
Market
Thank you so
warning,
much for being here.
guys.
And Mitch
Haha, it's already fucking done with though. Haha, market warning news. Haha, in the 3/3. We're in the bearish 3/3 down here. 1, 2, 3 days, and now, ha 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 ha, now we're talking about it.
This is also the holiday season, especially November, and the retail sales number, which we're also going to get, I think, is going to be higher than expectations. So I actually expect that the jobs picture is going to be better than expected, but we may also see the unemployment rate tick up a bit, and if it does, that would be the highest level of unemployment since 2021. So I think there's going to be a lot of data in there. It's going to be tough to parse through, but we got the right team to do it.
You know, Charles, one thing that I want to look at is wages, because the president, and you just heard Scott Bessent say it as well, the Treasury Secretary told me that he's expecting wages to go up in the first and second quarter of the year. Your reaction?
Yeah, Goldman put out a great piece about a week ago showing that every all the quartiles are going to go up, particularly the middle class. And so we are going to see strong wage growth. But you know, the question is, how would that be offset with job losses? Because we have attrition going on right now. So you don't see it in the initial jobless claims. That's sort of useless in terms of measuring this economy. However, people are losing their jobs. Companies aren't rehiring, but they are probably going to see we're going to see big time wage growth next year, 2026. I'm a little bit ahead of myself.
Well, look, we're looking at wages because that's a key metric when you want to talk about this affordability crisis. And Lee Carter, you've been talking about it a lot this morning. The fact that you believe people are stressed and feeling stressed.
Yeah, you know, there's so much data out there about how people are feeling, and I think there's a big gap between what's really happening and where people are feeling in this moment. So we know that only 30% of Americans are satisfied with their wages right now. They feel like they're not making enough money to make ends meet. 60% say that they can't afford the things that they really they need and they want. And then when you also look at the prospects of people saying, like, can I find a better job that I'm in the place? Only half of Americans right now feel like they could find a job that was better than where they are right now. And that's up significantly, 20% over the last 2 years, where people are feeling more stressed about being able to find the right position for them. So the idea that wages are going to go up next year is a key metric.
I got some
and how people are
Oreos
gonna
to
be feeling,
snack
'cause
on.
right now, they're not feeling very good.
All right, we're waiting on the numbers. It'll be out in about 20 seconds. Real quick, Alfredo, where do you think the jobs are right now?
Well, right now, especially for small businesses, I think in the service area, for example, bars and restaurants, there's actually really strong growth there, which I think is an indicator really of how our consumers are starting to feel now. I think they're feeling the tariffs behind them. Things are kind of stabilizing. Prices are stabilizing. They're still high because of the Biden administration put us there. But Trump, through a lot of his pro-growth policies, have really stabilized inflation.
Yeah, markets are turning around here. The numbers are hitting the tape. The Dow Industrials right now up 39, going from negative to positive. Cheryl Cassoni with the numbers right now. Cheryl.
So the non-farm number for November came in hotter than expected, 64,000, better than expected. Let me change my phrasing there. We also had the unemployment rate tick up to 4.6%. As for the other numbers within the employment report, manufacturing, we did lose 5,000 jobs in manufacturing as expected. The private sector job number, 69,000. That is much better than expected. We were looking for 45,000. Not as good as the last time we got a report, which was September. Looking at factory jobs, again, that loss of 5,000. We saw government jobs, a loss of 5,000. Let's get into wages and earnings here, because what we're seeing on as far as average hourly earnings, 0.1% to the upside. That is not quite what was estimated. We were looking for a gain of 0.3% on that number. The U6 rate, 8.7%. Also, looking at labor force participation, which is something I was kind of looking at as far as who's dropped out, 62.5% there. We do not get an estimate for that really quick. Let me go into exactly, because there's going to be a lot of footnotes in this number, and I'm really wondering what revisions are going to look like. But as far as what the government is talking about, there's a lot of caveats, in here. Again, this has stats from 2 monthly surveys. We're getting a piece of October and then all of November in here. Where the jobs are, healthcare and construction for November. Again, federal government jobs continue to lose steam. That is according, of course, to the government. Also, talking about those that in the labor force that wanted a job, marginally attached labor force, 1.8 million in November, and that was actually little changed from the month of September. So again, looking at a story that is better than expected for the markets. A weaker report would have maybe had a better market reaction, because you all are having that Fed discussion. I need to dig into the retail sales numbers, but what I'm seeing right here is that month over month is what, excuse me? It was flat, that's what I saw, yeah, okay. Up, ex-autos up 0.4%, better than expected on the retail numbers. 3.5% year over year for retail sales. So, Mitch, I hate to tell you, you were actually wrong on the retail sales number. We were looking for a gain of 0.1%. We came in flat. A year over year gain, ex-autos 0.4%, and then, ex-autos 0.4% to the upside, 3.5% year over year. There's a lot of context and report in this November jobs report, Maria. I'm going to go back into it right now.
Thank you so much. Charles Payne, the market is up 52 points. Give us your translation of this positive market performance on the heels of a better than expected
If I had to zero
number.
in on the knee-jerk reaction, it would be the 4.6 unemployment number. It wasn't long ago, I think Jay Powell told us 4.5, 4.6 is sort of the red flag at the Federal Reserve.
Bingo, that's it.
Yeah, and of course, Powell had pushed back on the notion of jobs until last week. The FOMC, ironically, he actually said the data coming in might be too high, that it might be, he suggested it's overestimated. So he's starting to maybe come to grips with the fact that his treasured government data is somewhat flawed, but still 4.6 is probably the number moving the needle right now.
This is the highest unemployment since September of 2021. And Joni Biley, we heard a lot from Treasury Secretary Scott Bessent this morning in terms of the job opportunities that he's expecting in 26, from construction to electricians and plumbers, et cetera. Where do you see the jobs right now?
Yeah, Maria, the jobs right now are truly in healthcare. If you look at this report, you can see 69,000 jobs in the private sector.
Wow.
And most of them are coming from
Tesla
the
is
healthcare
nuking showing.
sector. Those are the top
IWM
jobs
faked
in
out.
demand right
Q,
now.
Q,
If
Q.
you look at even the top
That's been the case for about 8 to 10 years. Just saying. Okay. 10 years ago, I was telling people we're going to need millions and millions of new nurses because we're living longer and wellness, et cetera, et cetera. This has only deepened with technology, the marriage of technology and healthcare.
Leadership isn't about titles. It's about
Crazy
clarity
ass wedge is
pressure.
creating.
Absolutely. And I've been on your program probably for 10
creating
years.
a crazy ass wedge intraday.
You're absolutely right. Yeah. Healthcare is going to continue to grow.
I think we got to draw this
what
shit.
I do think that we will see in the future, in 26 and 27, is we will see jobs come back in the trades, transportation, we will see construction. We will see manufacturing. It is good to see that the construction sector did add 28,000 jobs for this report. So most of the jobs in this report are really healthcare and construction. There's a lot of other concerns. There's a lot of negatives.
I really want smash burgers today, dude.
Kind of go down the list of the sectors.
I think I'm about to go eat good, guys.
I wouldn't say this
what should I
job
eat?
Market is collapsing by any means.
Does nobody care what I should eat? Should we do a poll on VWAP,
over
man?
this year,
I want to go
and
eat
the jobs
good.
that exist today are
Feeling
more
good today. Like I want to eat good, man. I don't know.
The technology sector also has jobs, but it's really jobs in data science, analysis. You know, you're also seeing some roles being eliminated.
Chinese buffet yesterday.
And there just isn't as much of a demand due to AI. So we definitely are in a time of shifting right now.
Yeah, I mean, the labor market is shifting, and we're seeing that in the numbers. Cheryl,
Five
got
guys.
The October numbers as well.
We got October non-farm
That shit
payrolls
sounds
data.
fire.
We saw a loss of
10
105,000 jobs
$10 for a
non-farm for the
burger.
month of October.
You know, I get everything on that. I pay $10 at Five Guys. I get mushroom, hot sauce, lettuce, everything.
Rate, to be clear, but there's one caveat, context to this October number.
though.
Because
this is pretty good.
A lot of those government workers, about maybe 100,000 or more, they were going off the government
was it so
payrolls
bearish
as
earlier?
of
Because it
October
was
1st.
below.
I think
Now
that's an
that it's
important
above,
caveat
it
to remember
might be
here.
changing something
The
a little
private
bit.
sector saw strength.
Or it could be a
is
little
an
term
important
fake
caveat.
out of
You're
here
right,
as well.
but I
This is
also think
basically
that we
the
have to
halfway
consider,
point from the
Charles,
HOD
what
to
the administration is
LOD
saying about the first and second quarter. Okay, we're talking about expectations of wages going up. We just saw that in this report. We're talking about expectations of growth going up.
0.5 Fibonacci were literally at exactly. I don't think that's a coincidence.
Growth number in the
probably
first half, Charles.
No, I agree. All the pieces are there.
Figure out
There's
what
no
to
doubt.
do.
No one disputes that. Every firm on the street acknowledges that all of the great things that they fought for. You know, listen, there's one thing, the messaging and people wanting this to happen instantaneously. It does not happen instantaneously, but all systems are go. And it's and everyone anticipates it's going to be better. You know, some of these big pledges, these factories being built and being brought over.
Time is 12:10 here and
Bloomberg took a shot at the administration,
3
says
seconds.
Trump's $21 trillion
They want to go
number is
lower,
absurd.
showing
It's more
into
like
12:10.
7 trillion is a pretty
here
good number.
43 seconds. IWM.
You're kidding.
Like you might not have dunked on them the way you thought
Candle
you did,
trading
but
right
still,
now. This shit is.
You know, so listen, this tells us a few things. The construction number stands out a lot. Obviously, healthcare, to your point, that's been an issue with the aging economy. Hourly wages, that's another reason maybe why there's a knee-jerk move higher, because the Fed, for some reason, they're so fixated on wages being a driver of inflation. I'm not necessarily in that camp. I hate the idea that the Federal Reserve has the power and would, always wants to clamp down on the economy when Main Street's getting a raise. Hopefully that won't be the case in the new Fed.
And that's why Jay Powell and the Fed has been criticized so much. All good news is bad news for these guys. I mean, every time we have good
Jay
news,
Powell,
it's like,
folks.
oh, well, we better slam on the brakes.
I think we all took Jerome Powell for granted.
That's not the way Kevin Hassett sees it. That's not the way Kevin Warsh sees it.
Good days, the good easy days now. Jerome Powell's going to leave next year.
Is the Fed took their eyes off the ball on their dual mandate, which is
is to strive for full employment while slaying the inflation dragon. And that's what's coming home to roost. Now, a couple of things. We had a government shutdown. We had the Doge. So the numbers are distorted because of that. But at the end of the day, we need to create more jobs, and we're not. The industries that are creating jobs, like healthcare, are actually creating lower paying jobs because they can't sort of find doctors overnight. They can't find skilled nurses overnight. And they're sort of flooding the system with sort of lesser skilled helpers. And those are lower wages. So I think there's a lot of cracks in the labor market. And the best thing the Fed can do is lower rates and create supply-side incentives.
Well, Cheryl just told us that October was revised. I'm sorry, their October numbers were lower, 105,000. And you've also got the non-farm payroll revisions for August and September. Revisions to August and September show 33,000 fewer jobs than previously reported. Lee Carter, that's possibly why going into the midterm elections, this issue is getting more important and more important. These efforts by the administration to raise wages, to, rein in inflation, do these messages get out in time and have an impact before the midterm elections?
I think that there's a couple things. One, I think it's going to take time, but I think Americans need to be reassured that it's going to take time. I think they need to, instead of saying things have never been better, things are going to be okay, I think they need to say, these are the indicators, it's going to get better, bear with us, here's the things to come. More than half of Americans right now are concerned that they're going to lose their job. There's people who are feeling a lot of financial stress, and I think we need to go a long way to reassure them. We're on the right path, and things are going to get even better. Bear with us. Amen. This is what you need to be looking for. I think that, the messaging where they're doing right now, trying to set the record straight,
rejection,
talk about what's to come, I think that's reassuring. I think the interview you just did, if you listen to that, I think it's very reassuring to folks.
Now.
But we need to talk about what's yet to come.
1 minute gap.
Alfredo, what is to come in 2026?
Most important watch now is IWM 1 minute gap.
Where are the opportunities? But even more
is now
importantly,
red.
What are people looking for? You've got that data at your fingertips in terms of where
I don't know where lower, but this shit is now red. I thought they were going to hover here, but I mean, look, weak, and then in IWM faked out. IWM was strong.
Yeah, absolutely. If you look at the November ADP report, obviously there was a big hit for small businesses. I think
I don't know where they're going. I don't really care. I'm just watching here on
small businesses
I
were
care
a little weary
Tesla
with
does.
tariffs and other things that were going
Market
on.
dumps to LOD.
Remember that
Tesla
Biden
goes.
took us
Market
at 9,
doesn't.
10%
Tesla
almost
doesn't.
inflation
I mean,
rate,
it's
so
literally
the
up to
prices are still high.
market.
What Trump has
This
actually
is
done is
super
really
bears now. This is
stabilize those
polar bears
prices,
coming,
try to bring those prices down on energy in particular, which is
Winnie the
flowing
Pooh's
through.
coming.
And as deregulation flows through and tax cuts flows through, our small businesses, we're
Winnie
being
the Pooh
told
is here.
they're
This is the
feeling
ultimate
good
bear.
about hiring again. They're going to start hiring. They do see first quarter and second quarter. Remember, inside the one big beautiful bill, there was one piece that was huge, a game changer for our small businesses, which is really the immediate depreciation, basically for investments into their business.
That's Winnie the Pooh.
That was
candle,
a huge benefit. So we're going to see that investment, I think,
not
really
chasing.
kicking
That's
in.
straight up dumping.
And I think they're going to see they're kind of in that hiring mode
I'm
now
not
again.
chasing.
Going into the first and
I'm
second
not
quarter.
fucking chasing
And I
that.
think when
What
you see
the
those
fuck?
rebate
Yeah,
checks, the $1,000, $2,000
red.
that Secretary Besson was
box,
talking
no
about,
good.
I think the consumer is going to
The
feel
money calls destroyed.
more
Data
optimistic.
burn. All the puts
Again, and
destroyed.
I think overall
Data
they're going to
burn.
start feeling better on terms of their spending. And so I really truly believe that our small businesses are going to be in that hiring mode once again in first quarter. And especially going into the second quarter.
IWM 1 minute gap candle. You call that?
We're going to see
use that
a lot
as
of
a gap
positive
to
growth
go
from
lower
that
or
sector,
not. We're
which
about to
remember,
find
Maria,
out.
33 million
Nobody
small
knows except
business owners in this
IWM.
country
If they go lower,
employ
they
almost
break the
70
LOD.
million,
If they don't, they go up. If
hardworking
gap fill
Americans.
this.
And so
Up to
if our
IWM
small
and
businesses
IWM
are
alone.
feeling good, that's really good for employment.
Well,
IWM,
those are the job
IWM alone.
creators. Absolutely. Small and mid-cap businesses. Joni Biley, you agree with that?
2 gaps.
Yeah, I actually think that small business could generate a tremendous amount of jobs. And we're seeing, again, the impact of AI, that we're going to see a lot more entrepreneurs and people want to create opportunities and open small businesses. And there's a need there. But I do want to point out something in this report that I find truly interesting, and it's a little bit of good news, bad news. So I'll start with the bad news. We do see unemployment ticking up, of course, to 4.6%.
Created an algo range and
that means that
IWM.
there's 7.8 million unemployed workers in the U.S. compared to November.
This is what smart money
year,
professionals
we
are
had
doing.
about
This is what retailers do not do.
However,
So we're about
if
to do
you
this shit
look
together.
at the number of people that are employed, Today, we're at 163 million workers.
All right, I'm drawing some
compared to
cycles over
last
each other,
November
but
at
this would be down from
161 million
1050
workers.
to
So this is where you have
1055 and
more
at
people
1055
working
too.
today,
1110
more
and
people
then 1110 to 1110.
participating in the
Pulling
workforce
inside
today
cycles.
overall. And so, yes, we're seeing, you know, unemployment tick up. But overall,
inside
I'm
cycles
very
right now.
optimistic that we're seeing more people actually participate in
This shit is
the overall
unbelievable
economy.
going
Yeah,
north
I
too.
think it was really interesting that Secretary Bessent said that he
Tesla
sees
going fucking
he's expecting a
unbelievably
substantial
north. I'm not really
drop
watching my
in
contract, but I'm
inflation
just letting
in
it
the
do its
first
thing.
6
This is
months of the
basically
year.
where I should be
Charles,
basically
he was
taking
very
loss if
specific.
it
He
does run
also
up here.
said
But I
very
mean, my shit
specifically
expiring
he's
into next
expecting
Friday, so I'm
rents
not worried.
to come down.
Tesla can
Rents
move
have already
15,
started coming
$10,
down.
$20 in
You
one
see it
day.
first in the hot cities and hot towns, so the Austins of the world. But now every week I see the list getting longer and longer and longer. You know what's interesting about this, and this is where
It is interesting, though.
classically trained economists, they always
Smart
tell you
money
anytime someone
deductors
comes
did
into
good
this
from
country, whether
yesterday
legally
and
or
then left,
illegally,
and then
it
late
creates another
chasers getting
job
burned
and it
into today.
offsets. And that
Technically
part,
happening.
I can't get my head around this notion. That I just,
Short
from
term.
a layman's point of view, it doesn't make sense, right? But we do know that they do put a strain on society, particularly housing. And so, you know, one of the side benefits
And
of this
even
is
if they're going north, this is flying into three-thirds,
for
so
housing. This allows rents to come
one
down.
third,
You don't
two-third,
have
both
extra
doing
people
good,
trying
and
to
then this is
bid
flying
up
into
for a
three-thirds,
rent.
so they
Also,
could
it allows
reject here, and
wages to
then they
go
would be
up.
doing badly.
For me, it's got a dual benefit. The success at the border
Tesla.
and the economic implications, I think, are underreported in this
Tesla.
country. And I think it's having a major impact. So higher wages, lower rents. That's what we want.
I'll tell you, I don't know what this report does for the Federal Reserve, Cheryl. I mean, as soon as you reported the numbers, the market popped. We had the major averages moving into positive territory for a moment. But now stocks are down again. And when I look at the number of revisions, when I look at the better than expected numbers on jobs, I mean, I'm still at the same place
right now,
in terms of the Federal Reserve, that they are divided, that yes, we're going to see rate cuts in 2026, but it's going to be because of a new Fed chairman.
Yeah,
not Jay Powell.
And you heard Jay Powell in his press conference say
Let's
that
get
he
the thumbs
didn't
up on
believe
the
that the
live
BLS
stream
data
up.
was
Thank you
actually
so much for
accurate.
hitting the
But
thumbs
actually,
up
that's
already.
frustrating for market
83,
participants
84
because
view.
the data is what the market relies on to make decisions about where
Help me
markets
push
or
up the
excuse me,
like
where
on the
stocks are
video.
going to go. And he said that he was thinking that monthly jobs
so
gain.
much,
He
folks,
believes job
that have
gains
just
are
hit
being
the thumbs up.
overstated
Thank
by
you so much.
60,000 jobs. Not a real vote of confidence for the data that we're going through this morning.
They're all
I don't
burning
think
all
we're
the
really
puts
gonna
down
have
here.
A clear picture of
And
the
then
jobs
shopping,
data
burning
until
all the
February.
calls was slowly
January
going up
is
too,
always
so
messy. We knew today's report was going to be muddled and
actually
messy
eating all
and
the
difficult
greeds.
to parse, and I think that's still the case for the market. So I'm not surprised that you
They
saw back
burnt
and
all the
forth in
put
the
in
numbers.
all the calls
As
in the
far as
morning
the Fed
anyway.
decision, I'm still looking at
Puts
two
they're
cuts
destroying from 10:30,
baked in for next
11:40ish
year, but you know,
to
the
at
Fed
least
funds
now
futures
time
and
is
those
only
are always a little
12:15.
low.
Well,
There's
it's
four
one
hours
question
left.
that I
There's a lot of time.
constantly ask, Mitch Rochelle, and that is, if we're all expecting rates to come down in 26, why are short-term rates
actually a
going
lot of time.
higher? Okay, look at the
Thought it
10-year
was like 1
today
p.m.
at
It's only
4.1%, Mitch.
12,
Well, a couple of things. The shortest
W is
part
forming
of the
a
Treasury
triangle.
curve is really the only thing that the Fed has control over. But what did the Fed do? And it sort of got lost in all these headlines. They bought $60 billion worth of Treasury bills.
showing green for sure,
So
but
the
I mean, I don't-
Fed is actually
It's still a
doing
game.
the opposite thing by
we could be
pumping
chopping here.
liquidity into the system.
Yeah,
So
that's some
I
bullshit
think
candle
the
coming. Let's see if
only
that's
real
real.
barometer of the economy
See
is
if
the
that's
bond
real.
market,
10 to
and
10,
they're
15,
signaling
12 to 12,
that
15.
rates are going higher. And
Cycles are
regardless
getting
of what
super
the Fed
tight here,
does,
too.
higher
Inside a
rates
bullish
do
cycle,
nothing
so.
to help businesses finance themselves and do nothing to help the housing
Yeah,
market.
I love the fact that, you know, back in April, there was all this hysteria over the president's tariffs, and now the bond market wants those tariffs in place. Okay? Every time you see any question about the president's tariffs, the bond market sells off. Okay? So Charles, let's get back to the most important decisions that we're waiting on for year end. Scott Bessent just told us we're not going to get these decisions till early January, and that is, number one, what will SCOTUS say about the president's use of tariffs? All the arguments are over. That's it. I mean, we could get this decision imminently, but the Treasury Secretary just told us wait for early January. Will the Supreme Court go against President Trump's use of tariffs for an emergency? And how will the president, if they go against him, how will the president recoup all that tariff revenue? And number two, who will be our next chairman of the Fed, Charles?
Sold some Tesla.
Well, let's start
so
with this chairman in
maybe
the
it's a
Fed.
profit. Played this shit. shit.
You know, I had a great interview with Neil Dewey yesterday, and he said something very provocative. He said it's going to be Scott Bessent.
I don't think so.
I know everyone doesn't
Scott has
think
about
so.
4 jobs on top of being the treasurer.
This is the latest razor developed by Gillette, a super sharp and portable.
Wow.
Commissioner, he just told us that we're going to get better refunds than we thought. He's got the
Rubio doing it all, right? Yeah. So, anyway, I thought that was provocative. In other words, because President Trump has put it out there publicly, privately, all the time, and he keeps waiting and waiting and waiting. He's, and so. I think
they're two very good candidates, Kevin Hassett or Kevin Warsh. These are
the
two
question
very
is,
high
though, is really like what happens,
impact
though.
guys.
The new role of the new Fed chair, though, is going to be different.
Gap has been filled on IWM.
And we saw it with this last
more 1 minute gap.
FOMC, the 3 dissents, particularly from Fed governors. That's very unusual. I don't know, for lack of a better term, some strong arming, more persuasion, reel them in a little bit. They talk too much. They're out there talking too much. 2 weeks ago, Jay Powell gave a speech ostensibly for Joel Schultz in honor of him, but in my mind, he took 2 shots at his critics, one at Trump and another at the critics for how often these Fed members are out there publicly speaking. I think it's a mistake. They move markets.
And by the way, Powell wanted that. He said this was going to be the most transparent Fed.
Right. It's too transparent because now I feel like politics are playing a role. It's one thing if you say, I think the economy's hot, fine. But they're going deeper and deeper into pushing and pushing. Immediately after FOMC, the hawks came out, right? We heard from them immediately. Austin Goolsby's everywhere. And by the way, traditionally a dove, now he's a hawk.
Well, look.
But I'm just saying, Maria, the next Fed chair is going to have to really be able to have a different skill set beyond economics, beyond knowing business, and that's really swaying, even strong-arming people on the committee.
Well, fair point. But look, don't tell me that Kevin Hassett is going to be political just because he's in the inner circle of President Trump. Go back to Jay Powell when he first got the job, and his first instinct was to cut interest rates before a presidential election. When we're talking about, politics getting involved. And also, when he first got the job, he starts jamming through DEI policies all over the place. So if you want to talk about getting political, yeah, been there, done that. We've seen Jay Powell get real political.
How about Janet Yellen when inflation was happening and we all knew what it was because we're all old enough to remember inflation? She said it was transitory, which was the exact same soundbite that Jen Psaki was using from the podium. Tell me that's not political.
Well, there you go. They have this massive conference call.
Too. Yeah.
And they get the talking points. They get those talking points right. But Lee Carter, what are the talking points? What are the talking points for 2026 as you keep looking at all these polls that show people are stressed?
I think the talking points are the right ones that they've been talking about. It's talking about wage growth, lowering costs, affordability, and I think it's really important this administration gets the messaging on healthcare right.
Yeah, and Joni Biley, how important is this healthcare issue, do you think, for would-be workers?
Guys, again, people are not hitting the like button, please.
Obviously, from a cost perspective,
I don't know why. Just do me a favor. Hit the like button.
And, we're going to see, obviously, the sector, of course, continue to add jobs. There's more demand than there are qualified people. So this is one of, the hottest areas that all
Tesla is running here trying.
Many different aspects of it. When you look at the overall job
higher
market,
and higher
Maria,
prices
I
are
think
being
it's
literally
also going to
pumped up
start looking
almost
very
the last
different
1 hour.
in 26 and 27. We're going to start to see these lower wage jobs really start to disappear because of the impact of AI and technology. And so there will be job growth and they will be higher paid positions. But we need to get our workforce ready for these jobs. They need access to skills, to learning, upskilling opportunities, AI training. So there's going to be this shift on how the labor market actually is made up in the U.S. And I think we're going to start to see that as soon as 2026 and certainly into 27.
What do you think, Cheryl? Because President Trump has been talking about trade schools and things like electricians and plumbers and construction workers that are going to be in huge demand. That's also an area of the market that people underestimate in terms of wages.
Wages, again, as well as jobs being added. And that is huge. We have not really seen that roll out.
We have literally people unliking while I ask people to like the video. Like, that's great, man. Thank you. But Why are you here?
But focus on the issue of deregulation and what we're seeing in the financial services sector there. Look at what you're going to see as far as those jobs added in construction and other ancillary
There's somebody here mad as fuck about something.
with AI. But also, talk about, again, we've talked no tax on tips. Talk about the benefits for Social Security. You're going to tax break for Social Security beneficiaries. You're also going to see overtime rules. All of those things are going to be in Americans' pockets. And also, we haven't really hit the retail sales numbers a lot, but I was going through that a little bit more. And I'll tell you what, you look back at the earnings reports for Gap, for Walmart, they were blowout earnings reports. So the consumer is there, the consumer is spending, they're just being particular. So all of this fear mongering about the GDP for Q1 and Q2 and how the consumer is pulling back, I don't think the reality matches up with the commentary, I think, that is out there. So that's why I think I'm more than anything
all the deductions, all the chart, all the live streaming I do, you know what I mean? Like there's no point because I ask for likes and then people just don't even, all they want to do is just...
and their own cost of living. Do you see that in the numbers and the data that you're looking at?
I don't know, dude.
Yeah,
I want to do my own thing too.
I wanted to make the point on healthcare, Maria, because I think, there's been a lot of talk about the subsidies and stuff like that. But this week, actually, there's a very important vote that's going to be happening it's called HR 6703, the Lower Healthcare Premiums for All Americans Act. There's a couple provisions in there, but one of the most important and game-changing provisions for our small business owners is actually codifying the association health plans, which allows their small businesses, multiple employers to actually band together and have the same kind of purchasing power that large corporations will have. This is a massive, massive game changer. You got to remember, healthcare premiums for our small business owners are going up double digits every single year, 35, 40%. I mean, I can't tell you how many emails I am getting about these healthcare premiums for next year for our small business owners have gone up about 35 to 40%. Our premiums alone went up 40%. For Job Creators Network. And so getting these numbers under control and getting passage of the association health plan, for example, is going to be absolutely critical and a game changer. And then along with deregulation, lower taxes, I think this is why I think small business owners are going to be able to control that. And I think the employees of these small businesses are going to be able to participate now in the actual affordable healthcare plans. Because right now, just because they have access, as we know, doesn't mean it's necessarily affordable to them.
Well, the analyst that I'm looking at here from Evercore ISI says that the December print in jobs is going to be the first relatively clean print after the shutdown.
12-10. I'm telling you, if that level breaks,
bearing on whether the Fed might still cut in January, Mitch. I think that's an important point because the November number is a little noisy, got a lot of stuff in there. We're coming off of the longest shutdown in history, but the December number will be a clean print. Maybe that will be more market moving than what we're seeing this morning.
Most likely because it's all post the
massive
shutdown.
Support line here.
However,
horizontal
all of the data, and this is the thing to remember with these jobs reports, all of the data from the previous two or three reports get revised, and we saw revisions up on the screen. So the December report could have big revisions to November and even October. And I think that'll be part of the calculus that the Fed has to deal with in
the higher
in
time frame, the 5 and the 15-minute candle, if it crosses this horizontal support and breaks that through,
direction, or even if it stays steady at this 4.6%,
I'm pretty sure
that is again above where Jay Powell said he was comfortable.
IWM has
That's
already
put a lot of pressure on the Fed to cut
want to
rates
go
again
lower
in
here in
January.
IWM too. I literally said earlier there's a huge wedge building, right? Yo, who remembers me earlier 40 minutes ago before, right? All the candle traders basically started leaving on the stream, right? I literally said there's a big wedge building, right? This is what we mean by deductors don't give a fuck about candles. They just care about setup. I mean, yeah. Candles, man. Candles. But yeah.
Give us your expectations in terms of what this market is looking at when it comes to inflation. As we're looking at this graphic right now in terms of where the jobs are for the November report, and the most jobs were in healthcare and social assistance, up 64,000, Cheryl.
I've been excited to receive this for a very long time. The book. The Ultimate Guide to Rebuilding
For CPI, the big, I think the eyeballs are going to be on the
IWM
shelter
is
costs.
bearish. They're about to go
Because
break
we've been seeing
LOD
shelter
on
come down. If you
IWM.
continue to see an alleviation of the pressure, whether it's rent or it's mortgage payments,
There's
I think
like
that's going to be
25,
what the market is
35
going to
people
really
coming
focus
back, or
on for
15
that. And
people
you know,
coming back,
again, the
like,
Treasury Secretary talking about
those
inflation
are the type of
easing.
people
That may
that
not be
I'm
until
kind of worried
Q1,
they
fair
don't hit
enough.
the
But
like
we
button
haven't
and
had
like they just want to be
decent
here
CPI
because
data
of the good
either
times
because of the
and they don't give
shutdown.
a
So to
fuck.
get,
Like, dude, I
but
don't
I'll
like
be
that
looking
at
at
all.
shelter, also
Sorry.
obviously be looking at
It really gets me
wages and that.
depressed. I
And
don't
of
like
course,
that at all.
Treasury Secretary Scott Bassett just told us that he's expecting
why I
rents
always
to
say
go
just
down.
stay away.
Lee, give us
Or
a
just
sense
don't.
from your standpoint how quickly sentiment can change. Hypothetically speaking, let's say you're right. Let's say these polls are right, which I'm not sure of. I'll be honest. I don't know about. I don't know if I'm buying these polls that everybody's so stressed. Things feel pretty good to me. But let's say people are stressed. When you get into 2026 and you
They
see the
broke this
impact of the big
horizontal,
beautiful
they
bill,
broke
and you see the
the
impact of
12-10
higher
support. Let's
wages,
see
and
what
now
happens
you
here.
see job creation,
LOD
and
is
you see
testing.
inflation
LOD
come way
is
down.
hoping
As Cheryl
we
just
could
said,
see
rents
more
are coming down.
or not. There's
Do
a
you
lot
think
of room on the
sentiment on the
MACD
part
and
of the
volume
people
to go
changes
LOD test.
significantly and quickly going into the midterms? How fast a shift could we see?
I think it could happen really
As
quickly.
lies.
I think there's a couple things that we're seeing. We're talking about those tax refund checks coming in. People are going to know that they're going to get money in their pockets. If people start seeing wage growth, if people start feeling all of these different things
how do
early
they go
in the
lower?
year,
They
there's
go
no
higher
doubt
to go
that
lower.
by the
How do they
midterms,
go
for sure,
higher?
people will
They
be
go
feeling it.
lower to go
I think
higher, so-
really from the time something rolls out until the time you feel
Most
it,
likely
there's almost a
LOD
full year
is
cycle.
coming.
So the president's been in
Market
office for
has
about a
been
year.
taking
I
its sweet
expect
time
over the
today,
next
going
few
up
months
and
people to
down,
start
so
feeling
it's kind of
differently
been
than they do right
fair,
now. We've seen a
honestly.
continued
Every
pessimistic
single quarter.
trend. I expect that to turn around.
Well, Mitch, what about you in terms of the backdrop and the stock market?
We are back into the
Greenspan used
red
to have,
box again.
That term that he called the
1,
wealth effect.
2,
When you've got a
3,
market that's up in the
4,
double digits,
5,
which we
6,
do,
7 times we
people
both
feel
trapped.
better about things, and
1,
that does
2,
not dictate
3,
behavior
4,
in their own
5.
spending.
I think
5
it does,
times we
but,
bear
you know,
trapped,
for the
so
average American who's
I don't know what
invested
you
in the
want to
stock
call
market,
that.
They're doing it through their 401k
Scalpers
plans
are
or
doing okay.
IRAs, and they don't really feel
Deductors
that
are
as
doing
much
fine.
because that's not money that they're going to spend
the average
you know,
is
in their
nuts.
working years. It's really money for their retirement.
Average is
So I
just
don't think that the
speculators
wealth
and
effect,
guessers
does anything, but it does
scammers.
lift psyche.
That's
so,
what I'm saying.
Yeah,
That's
so,
right, that's what I'm talking about.
Like, so what you see is when the headlines are
pretend
constantly about new highs in
and
the stock market,
Ferrucci's and
that's
all
when
that
people buy
bullshit.
cars. That's when they buy. That's when they buy
time
homes.
for
All right, great conversation, everybody. We so appreciate everybody's
This
time.
world is
Joni
too
Biley,
real and too
Alfredo
harsh for all
Ortiz,
that,
Mitch
man.
Rochelle, Lee
I don't know.
Carter, Cheryl Cassoni, thank you so much. We got a market
I guess
that
it's
is lower
okay
this
for the
morning going into
scammer's
open.
life,
The opening
but
bell happening in about 30 minutes time.
you really
Dow
think
Industrials
about
down
it,
42.
some fucking
Let's get right
sad
to Bonnie
shit
and Company.
going on.
Stu, take it away.
Some sad shit going on just because someone got a couple of thousand followers over 2-3 years. You think you can charge desperate people some basic ass fucking education and then be like, oh, yeah, but wild. Wild. Make shit up out of your ass, I guess, until people believe, huh?
Ron,
So fucked.
one of those people that have fulfilled and checked many of the boxes that you
Wow,
just
look at that
mentioned
candle.
is one that you've been closely associated with for the
That
past
candle's actually
decade
surprising.
plus
Let's
at
see.
this point, and that's
What the
Elon
fuck that
Musk.
was on?
15 years.
15 years now. Elon Musk, specifically with regard to investments.
The fuck
as you
is that
point out
candle?
in
Wow, that's
Tesla,
actually
SpaceX,
surprising.
which is now the biggest holding that you have. You mentioned
Show
you
spike
invest in
candle for
XAI as
something.
well. The Elon Musk story is an interesting one because he has become one of the people that has been maybe the figurehead of American technological innovation over the course of the last 20 years. What exactly is it about Elon Musk that first drew you to investing in him as a person
Ron
and then
Barron,
the
who
companies
the
that he
fuck is that?
manages?
What is this spike
brilliant.
candle for?
That's
Let's see,
obvious.
man. This is
And
the
when we
ultimate
first met him
real reversal
in
candle to
2010 when
kill
he was
zero
going
DT
public,
puts, or this is the ultimate
we thought
ultimate
we'd like
fake
to invest
spike
with him,
candle.
but I thought it was
I guess we're about to
unlikely.
find
We thought it
out,
was
but I mean, I
unlikely
guess there's
it was going
all
to be
these algo
successful,
ranges
where
that are
doing a
allowing
couple
it to
thousand
do.
cars a year,
So
and
if
he
it
thought that
uses
he could
any
do
of these algo
20
ranges to
million
stop,
cars a
chop,
year.
hover,
That
I
didn't
would not
seem
be surprised.
reasonable.
I'm I'm not going to speculate that it's doing that, but I don't fucking know. But it's finding support and resistances at a random level that co-lines and coexist with previous marked algo ranges. So I think this gray line is still important. Why? Because we said what on the 5 or 15-minute candle, it really matters on if it flips this horizontal and this sloping, and it's what playing with the horizontal and sloping at the same time. Right, retail traders and amateurs and fake ass fucking furus and gurujis and motherfucking scammers don't give a fuck about that, and they'll be like, "Oh, this is bullish or bearish. It's gonna go up or down. Oh, bounce looks good for us. Oh, go lower. It doesn't matter. It's literally fucking deciding what to do. It looks dog shit fucking terrible for both sides, and it's literally market is cycling and waiting and hovering until a deductible moment comes with cycle confirmation, time confirmation alone. That's it.
And
All right,
so I was the person
that's what it's doing.
who in the
Best way to watch this
1960s,
is in the 5-minute
gave
candle, but the
patents
5-minute
to all
candle
the
boring as shit.
coatings
5-minute,
that went on
15-minute
those
candle boring as
cones
shit.
that
Nobody wants to
wouldn't
fucking do
burn
that,
up
right?
when they came
Why? They're lazy as fuck.
after.
So
Anyway, so
I'm gonna do that on the 1-minute candle. I'm lazy as fuck too, right? I just like to switch back 5-15 so we can all see together. That's what I like to do. But I mean, if you don't do that, then you're not gonna have a higher time frame, higher eye, and all that shit. I mean,
and a half so far.
I don't like to
and that's
change
no
screens
worse
a
than
lot in
$10
front of
billion.
everyone, in front of a live stream, but I
And
mean, we literally
we
have
think
to
that,
because why? That's something you
it's
have to
likely
watch. So
they could go public next summer sometime, and the valuation has been reported
5 or the
in press it
15.
could be $1.5 trillion valuation.
People can just look at the 1-minute
Right now,
candle and
it's
decipher
$800
into the
billion.
5 or 15-minute too. But I mean,
A week ago,
most
it
of
was
the
$400
times
billion.
people aren't doing that, and most of the
How
times
come?
they're looking at the 1-minute candle and they're speculating on the
What
1-minute
separates them
candle
apart?
and the 1-minute
No,
candle
we're
alone, and they're like, "Oh, this is
attending
bullish
a
and
board
this is
meeting, and they
bearish."
asked me to
Yeah, sure
come
it is. It
to
could
New
be
York
for
to
that
meet
time,
with
for
a
the next
number
15, 30 seconds, or 1 minute or 2
board
minutes.
members
Sure. Yeah,
about,
sure, right.
I don't know,
Yeah,
a
it
few
could be
weeks ago.
75%. Yeah, sure. It could be
And
65%.
we're
Yeah,
talking
sure. It could be
about
a
Elon
fucking rock.
and
50-50,
how young
yeah, sure. It
people,
could be a fucking, you know,
are just
coin toss.
dying
Sure.
to
It
work
could be a
for it.
fucking swim in the lake
And
where it's
so they
freezing and
get,
you want to see if
they
you
hire,
survive
they
or
have
not when it's
about
25 degrees
120,000
minus. Yeah, sure.
people,
But all I'm
and
saying
maybe
is
30,000 hires a year.
speculative,
And
bullshit,
to
retail,
get
amateur
30,000
shit
people, there
has
are several
nothing to
million
do
people
with what's
apply for
going on,
30,000
with
jobs
how
a year.
smart money is doing, with
Several
how it
million.
has been doing,
And
what.
then the chairman of Tesla
Got something in the
was
back of my
telling
throat.
me that they come there. We were
Is
asking,
going
him,
on.
what do they come here for? And he goes into these meetings. He'll take 30 or 40 young people or senior people in any one discipline that they're working on, whether it's
Cycle is
software,
building
whether it's
faster
hardware.
too,
Takes them
trying to
into a
show
room and for a couple hours.
all
He
sorts.
goes around and talks to everyone and asks some questions about
Why is it
what
doing
they're
this?
doing. And
Man, you
keeps
fucking tell
getting
me.
deeper and deeper. Initially,
Right?
it's general.
You let
And
12:30
deeper and
bounce,
deeper.
12:30
And then at the
rejection,
end of the
12:30
meeting,
bounce,
the
time is
people walk out of
12:35.
that room, especially if they're first-time engineers. They walk out of the room and they're shaking their heads and say,
Have you seen me draw a lot of triple fucking times existing like that? No.
Can you
So
I am
clearly
so
the
glad I
market is at
survived
an
that meeting.
injunction point,
So
it is at
basically,
a
the
crossroads,
people
and it's
who work
deciding what
there
to do
are saying
at
they
this
come there
crossroads.
because they want to work with this person. Now, of course,
Whether to truly
early
flip
on,
this shit lower
if
or
you're
not,
investing in
or
Tesla,
whether
it's a
to bear
great
trap
risk when
everybody
you're
off the
relying
floor
on
again.
one person like that. But now when you have 120, 130,000 people and the business is growing exponentially,
Green,
no longer
red,
linearly,
green, red,
then what happens is,
red.
as you get
I
larger
literally
and larger
said
and
earlier,
larger,
15,
the
20
risk
minutes
of
ago,
one
1 hour,
person
right, that this is going to be the
diminishes.
game, right?
And
When
what
did I
you've
say this? When
invested
QQQ
in
was all the way
is a
fucking
company with
bullish,
a
right? I said
culture.
QQQ is going to
And the
show green,
culture is
red,
what
green,
we try
red.
to
It's going to be the
discover
game until the end of
this
the
first
day.
principles is all about.
And here we
What
are.
you're trying to
Here we are.
discover
So
is what's been instilled in these
green,
people.
red, green,
that
red, green,
it
red.
gives
I have no fucking clue,
responsibility
but every
to
single time it goes
talented
up, it
people
looks like it's going to
and
fly. Every single
talented
time it
people
goes low, it
with
looks like it's going to drop, and then it's
unleashes
doing
them.
everything in
And
the
if you
middle.
got a
But
better idea than what I thought was the best idea, show it to me. And if you can
somehow,
prove that
using
it
all
works,
these
even
algo
though I
ranges,
just invested 20 or 30 or 50 million dollars
with the
in
green,
another
red,
way to
green,
do
red,
it,
green,
if
red
you show me
bullshit,
something better, we'll throw that out and start all over again.
which is what
And
the
so he's
market's
not
doing
afraid
live.
to
It's
fail.
deducting
And
live
basically, that's what
constantly
he does
what to
over and
do.
over again.
It's
So
back
you're
to the
looking for
wedge that it broke
personality
down from.
traits among these people in whom we're investing that make it likely they're going to be successful, in our opinion.
If I could just follow up, you
The
mentioned
fuck
that
did
you
this guy say? I like this
20 or
guy.
30 or 50 million dollars in another way to do it. If you show me something better, we'll throw that out out and start it over again. And so he's not afraid to fail. And basically that's what he does over and over again. So you're looking for personality traits among these people in whom we're investing that make it likely they're going to be successful, in our opinion.
If I could just follow up, you mentioned that you
So he's basically saying smart money deductors want to fuck with other smart money deductors. God damn, I respect that. Thank you. I appreciate you.
In your
appreciate you. Thank you.
Is that SpaceX goes public sometime in the
The
summer of
95
next
of you
year.
guys that have hit the
You
like
said
button.
maybe
Thank you
June, earlier
so
on.
much.
I said
Right.
June
All
28th,
these
but that's
other
the
people
first
that are coming in to
Okay,
see the
there you
live
go.
channel
I like
and that are
that. I
hitting
like
the
that there's a
thumbs,
target.
that are
We
hitting
can
the
kind of
subscribe
coalesce
button is
around
also
that. So in
because
your opinion,
they're
that's
only
when it
able to see
happens.
the channel because
You
of you
also
guys.
said
So thank you so much, and I'm sorry for
Now,
asking
you
and
have a
asking, but thank you
valuation
guys
as
so
well. What do you
much.
think the valuation will be?
Let's
for
go!
SpaceX as it
Today, good day.
approaches kind of that
Today, good. Look at this
anticipated
shit.
target
Today,
for
crazy day. I mean, you
Well,
can't
it's
lie, bro.
$800
Yesterday,
billion
crazy day. Before
now.
yesterday, crazy. Like
And
every
the
day,
tests are
crazy.
speculated
Beautiful day.
that it's going to be twice that
Beautiful
amount
day.
next summer.
Look at SPX, man.
This happens to
Look
be
at
of our investments right
look
now,
at
it's
Friday.
our largest investment. We have
Monday.
about $10 billion invested in
Look
that,
at this shit. You
in
can. How
SpaceX.
the fuck does
About
anyone
$5
even
billion
go
invested
fucking
in Tesla.
bullish
More
on this shit?
Tesla right now is selling from 60,
You
from
can't.
70, from
Fucking
80,
can't. They're
something
fucking
like that.
done.
Of course, it's $12.
Done. They're done, man.
And
Fucking
I
fish
think we're
food.
going to make,
Speculative
in
fucking
Tesla,
fish food. Love
I
it.
think we're going to make
Love
5
it.
times their money again over the next
They're
10
fucking
years,
done,
maybe
dude.
more.
I'm telling you, bro.
And then
Speculative
in
fish food is
SpaceX, I
fucking
think
donezo.
I've been wrong so
Beautiful.
far about how
Time
much
is
we're going to make.
40,
But my
12:35
number is
rejected at the
here,
last
and
minute of the
Elon's number is here.
12:35
So
candle.
we'll see.
Time is
But
12:40.
I
If
wouldn't
this
bet on
shit
me.
now goes on the 5 or the
You would
15-minute
not bet on you,
candle,
but I think a lot of people
it
are
is
right now.
bodish,
bet
A
on
lot
him.
of people
and it
are
is
right now.
trying to
Best
be
ideas is something
bodish.
that,
All right,
that
this
Ron
is some
just
advanced
mentioned. Kind of
level.
this idea of challenging what
Trying
could be and coming
to
up with an
be
alternative. Well, hey, what's the better idea?
bodish with no volume.
When it comes to
but
Baron
it is
Capital's portfolio,
bearish as fuck, bearish as fuck,
as
bearish as
somebody
fuck.
who's running some of that money right now,
IWM new
where do you
LOD,
think those best
IWM new
ideas are
LOD,
gravitating
IWM new
towards these
LOD.
days? It seems everything is about AI and technology. But when you
IWM new
kind of
LOD,
dig a little
IWM
bit
new LOD,
deeper, are there certain
IWM new
parts of the
LOD.
market, thematically speaking, that are catching your
Cycle
eye a
is
little bit
algo
more these
range
days
fucking
as a
chopping, trapping,
portfolio
crazy.
manager
Bull trap
for Baron
advanced level. I'm
Capital's
telling you, bull fucking trap advanced level. They
We
spiked
feel like
it
we need
up
to have a
and
diversified
playing and then
portfolio.
dropping
Yes,
it on
AI
IWM and
is in
SPY is gonna go
everyone's,
lower.
top of the tip of the tongue, and that's what's
Advanced
worked over
level.
the past few years.
This is some advanced level
So much
shit
of
we're
the
seeing
market has
live
been
right
left
here.
behind,
1240.
especially
We're about to see live,
small
man.
mid-cap companies
Advanced
left
level.
behind. We're just launched that
Market moving
first
crazy.
SMID, small mid-cap growth portfolio. Great
Market
valuations,
moving
especially they should be
crazy.
working as interest rates come down.
Trading glammy. Yeah, you could join the
But there's
private
more
group
to
chat.
it.
Just
It's
let me know
companies
what your
that
name
are
is or something
investing in
chat.
themselves
Like I requested,
have
this is
been
me or something.
extremely
Thank you.
penalized. Investors don't like to invest.
But yeah,
They
people
don't
that are
like to
trying to
invest,
join the WhatsApp
penalize
group,
short-term
people that are
earnings,
in the WhatsApp group,
have that
we
hit
want
as earnings
people that
come
are
in,
active
and
in
that
the
multiple
YouTube
also
chat,
comes in, so it's a
also
double whammy.
active in the
We love
WhatsApp
that
group,
because we
posting
get
things
able
that
to
are
find those
reasonable
companies,
and
understand what they're
logical
able
for
to
themselves
achieve,
and for others
invest
that
in
are
their great
helpful to each
valuations,
other.
and see that through to the life
So
cycle. Two companies come
if
to
that's
mind
the
that
place
had
that
been
you're
investing
trying
themselves
to
and now realize
find, do
Guidewire
request to
is one of
join.
them.
But that is
Guidewire
literally
shifted
it. If you're
everyone
looking
from
for anything
on-prem
else other than
software
that,
to
if
the
you were
cloud.
trying to feed it with
That's
negative energy,
come
or
to
if you're trying
fruition.
to join it
More
and
companies
be
are signing in,
a
not only
looker
signing
and don't
in,
do
but taking
anything or
out
whatever
more
you think it
modules.
is, it's none of
IDEX,
that. So
same kind of thing.
do
It's a
realize that
company,
too
pet
while I
diagnostic
say this, please.
systems. They developed more
1240
tests. Took them a little while to
LOD
develop
on
the test. They launched one this
IWM.
past year. We think they're going to launch another one.
Right, everybody
next year.
knows
We're
everybody,
seeing
man.
more
Like,
usage and
there's people that
earnings
are
increasing
mad
and
active in the
valuations
WhatsApp chat and the
as well.
YouTube chat too.
But there's
People
still a
love
lot
people
of
like
companies
that,
in
man.
our portfolio that are
Like
investing in
who?
themselves and penalized
There's a
with
bunch
right
of
now.
people
It's a great time to be
that
investing
people
in
know.
those businesses and letting
But
them come to fruition if you're a long-term equity
we
investor.
like active
Gotcha.
members.
And a follow-up to that, there are 5 5 ETFs being launched right now.
Off the
Any
top of my head,
aspirations for
shit, I'll say
expanding
Chris.
that family
Chris,
of funds,
Matt active.
and
Ochoa,
what
I'm pretty sure
exactly
he's in
would
the
you
group
look
too.
at potentially to
Alfonso
expand
pretty
those
active. Edison pretty active, right?
Sure.
Yeah, we all like
we have 5
active, contributing,
I
talkative,
want to get these 5 right.
non-body members.
That is our focus, is getting these 5 right before
LOD
doing
is
the next
testing.
wave. I do anticipate us doing more.
LOD is
but
breaking.
let's get these right and then take it from there.
IWM is dumping.
Ron, did you ever think
this is
in
a
your
triple
life
dump day on
that you'd be
IWM?
sitting there, a storied Wall Street
Why is it
career?
doing this?
Did you
It's
ever
going
think you'd
to
be
the.
at the top of the podium?
All right, we'll see. We'll
ringing
literally
the
look at
bell,
IWM.
the opening bell at the New York Stock Exchange, and launching a listed product at the NYSE. Just what kind of a feeling was that for you, and in terms of just your perspective on
Going
how
to
it's affected you as a
247
person and
almost.
your
It's
family
on the way to 247
Well, you said you're a Jersey boy.
in a couple of days.
I'm not a Jersey. I'm a California guy.
But you live in-
I married a Jersey girl, though.
Couple of
Okay,
days.
so you've been to Asbury Park.
I have.
It's going down mad fast last 3
think
days.
about the boardwalk in Asbury Park.
247, they might want to even go fucking today.
On the ocean.
Right? They might want to dump this
And
shit
that's my
off on
background.
Tesla.
And then getting to be
That'll be
on the
fucking
New York
great.
Stock Exchange, a listed company.
That'll be fucking great.
Sort of unbelievable.
IWM is leading SPY down right now. SPX down to the floor. LOD again.
What exactly do you think that next chapter will be for you?
Tesla is holding the market up crazy right now.
For me, I don't see it as being next. I just keep the same thing. So I think that over the next
QQQ and Tesla is holding the market crazy.
Much larger than it is right now. As I said before, I thought that we were going to make 5 times again. So we made $57 billion in profits to now.
Wow.
40 years.
IWM and SPY going.
And
QQQ and Tesla holding. I don't know what the fuck this shit is doing.
So
it is literally
I'm
giving
excited about that
smart money the
on
ability
behalf
to
of
fucking
the
decide
employees
to
of
leave
Bank
at the
Capital,
tippity top or
and
not
on
again.
behalf of our investors. And you know, one of the and there's so many
red.
companies that are interesting right now
Chopping today
that have been
QQQ.
left
Down, up,
behind
down, up,
with
down.
everyone
Playing with the green,
focusing
red,
on
green, red,
technology.
green, red, red, green,
One of my good
red.
friends is the
It's the whole factor.
chairman and founder
Green,
of MSCI. I love MSCI. I love Henry Fernandez. And he says that one of the
1240 LOD
characteristics
testing
that we
yet
have,
again.
That's rare is that we're able to see what isn't yet
This shit
present.
is weird.
And MSCI, I think
I would love Tesla to just fall fucking $10 to the end of the day. But
he founded it. He escaped from Nicaragua when there was a coup, came to America penniless, started MSCI at Morgan Stanley, brought it public in 2008. He said we were responsible for allowing him to do
lower
that.
and lower and lower.
For enabling him to do that.
IWM ever since it lost the purple
$10 or $12
box.
a share, went to, or maybe 15, went to 30.
Purple box and then chop, 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 drop, LOD, no confirmation, LOD, and then spike, and then chop, 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 algo range, new LOD.
They're buying in their own shares, and he's been buying shares as well personally.
Amazing work.
Which is, he says he's trying to keep up to us. I'm trying to keep up to him. MSCI. And I would, there's another one, FactSet, that we've been an investor in for a long time.
Look at that SPY, LOD, 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 LOD.
You know,
SPY LOD is here.
We could invest.
Divergence.
We could investor in, I don't know, 10 or 15 or 20 years.
SPY LOD just broke. Divergence is now here, right? It's more bearish than that. All calls are in danger. All calls are fucked.
What I think is really interesting, do we have a couple more minutes?
Absolutely, please.
So there's been a change in management, and a young man who was brought up in India on a farm.
This is real bad for cause. Long term, medium to long term. There's a divergence at the floor now.
Engineering
you could go lower into tonight or tomorrow.
A consultant.
It does not even have to go lower today.
Job as a consultant.
Tesla's holding the market crazy, so
then came.
This shit is not good though for all the calls trying literally today, yesterday, and all that shit.
Years old.
Not
he was
bueno.
brought to New York.
Deleting, deletus,
whatever kind of
deletus.
card you get. And he was advising Geithner and all the people to prevent the whole economy from crashing. He's 33 years old, from crashing. And then he gets recruited by Morgan Stanley, by JP Morgan rather. And he's one of the top, there's thousands of employees there. He's one of the top 10 people who's being considered to succeed Jamie Dimon. And he makes it into the top 10. And then he doesn't, he's not going to be the successor. He says, okay, I'm leaving. Where does he leave? He goes to
He broke the wedge down like insane. You guys see this intraday wedge they broke down, right? And they set a new floor off it.
Michael, think about if you have a company that is this really cool company with great opportunities, like a Bloomberg,
remembers on my live stream an hour or two ago.
Young and up and coming.
Right. People remember me saying what? Candle traders are done for in this environment. Candle traders are what? Done for every day. And candle traders are what? Liquidity, right? Was I wrong? Or was I just being real? Was I just being brutally fucking real? Or was I fucking bullshitting my ass off? Because this is what the fuck I mean. Sure, the market looks absolutely bullish at this point. And sure, medium and short term is great. But I mean, to sit there and be like, oh, flip and go, oh, yes, with no fucking setup whatsoever is the death of all every single, it's like the 85%, 90 fucking percent of the population is basically what's going on, is how you have to think of this shit. It's literally, I'm not even trying to be like, oh, I'm the guy. I'm not literally trying to fucking be real here. Like, literally go look at the statistical number of who is losing and who is winning in anything. Stocks or options. This is literally, it explains. Everything fucking makes sense. Like, I straight up, I straight up literally feeling that every fucking day of my life for the last year. And I was like thinking like, oh shit, every day I'm fucking seeing and shit and learning, and like, dude, every fucking day I want to do better and I want to catch this shit and blah blah blah, and like every fucking day is absolutely crazy and proving that something is crazily behind something, like red green, or IWM, or like Tesla, or like QQQ, or like SPY. Everything is all like every fucking thing is like mixed. And that means the people that are just looking at SPY candles 1 minute alone, just, they don't know. They literally just pretend like they know. They make shit up to fucking be like, oh, look at this shop magic. But like, it's literally bullshit. It's like fucking, it's literally 50-50 fucking bullshit. And then fucking being right 50% of the times, I guess. And people are like, oh yeah, but like, what the fuck does that do? Like, holy fuck, like, what the fuck does that actually do? Nothing. The fucking long term, like, you can't get fucking shit done. Like, what the fuck? Why am I saying it the way I literally tried when I was fucking young. Like, bro, what? Nobody does that shit when they're fucking older and they're hedge fund level and they're fucking smart money deducting. Like, no one does that shit anywhere. It's only retail amateurs that think that shit's fucking real and that they do that shit in life and they're like, oh, it's gonna be good. Like, what the fuck you talking about? There's people losing fucking $80,000 on fucking long and short every fucking day at market open. Every fucking day. You know what I'm saying? Like, dude, why am I like this? I used to do the same shit. I'm pretty sure we all been there in our point once in a lifetime, or you know what I mean? Like 2, 3,000, 4,000, 10,000, whatever the fuck it was. Like market open, up or down, thinking it's bearish or bullish, on think whatever, personal thinking and whatever it is. Like I've been there like fuck, but I'm telling you, like it's all bullshit. If you really fucking sit there and think about it and literally listen and sit there and listen to what the person's saying and you see it play out and you're like, the fuck you talking about sometimes? Like, dude, this shit is fucking crazy. But man, I
And you
love
have
it.
a guy like this, a killer
I
guy,
swear it
51
is,
years
man.
old, and 52 years old.
I
And think
swear it
about,
is, man.
you put Jamie Dimon at
It doesn't even
51 or
matter if we're
52
going up
years
or down.
old in
It
charge of
doesn't
this
even matter
company.
if we're
That's
going
what
up
just
or down.
happened.
It's literally
So basically,
just
you
set up.
find companies like this, you find people
Can't
like
even
this
fucking
who run
describe
these
how
businesses
hard.
like, I have to
How
invest for
hard.
that person. So we came out of,
But this
so
entire week has
the
been
stock is in half this
insane. The
year.
market
So
update video
basically,
literally has. I didn't think the
because
market
of,
update video was going to be this
the
perfect on
things that aren't
IWM with the purple box.
continuing.
I was low key
And
scared
so we're
it wasn't
very
going to go
excited
gap
about that.
fill on
But
fucking
across the
Monday or
board,
Tuesday, bro.
whether it's
That's literally,
hotels, whether
you
it's
know what I
real
mean? While I'm
estate,
deducting, sometimes
whether it's
I'm
financial
scared too because
companies,
it doesn't
whether it's
happen. But
consumer
like while
products
it's
companies,
happening,
you can
it
find them
happens the day
everywhere.
of, like the day
And
after
so
when the market
that's
opens.
what's
It's
really
fucking
exciting to me
crazy.
right now, that we
But
have
I
this
will tell you
portfolio
that means you're a
very
smart money
exciting,
deductor and
super
you're in
fast
there
growing
seeing
companies
things for
that
what
are
it is,
risky.
not being
Then you
biased
have
and
at
just literally
30 or
seeing
40%
things
of our
when they happen
portfolio.
for what it
Then you
is
have
because
50
you're
or
prepared
55% in these good,
for
solid,
bulls or
double-digit
bears.
growth companies. And then you
Doesn't
have 10 or
matter up or down. It's
15%
literally
in
just being
companies that are
aware. Being
penalizing
aware of
current earnings
reality
to
and being
become much larger
prepared
in the
to
future.
handle
And
the
those are
stress and the
companies that last
struggles
10 or
of the brutal
15%
reality that it
where
takes
nobody
to
wants to
get
invest in
through
those
this
companies
market alive.
until
Is
it's
why I
obvious
am the
about
way
what
I
the
am,
company's going to
why
produce.
I do
We
the
invest in
why
those
I
companies
do, and
for a
how
portion of the
why
portfolio,
I sound
which is
very
one of the reasons we
mean when I
performed so
say the
well for
things
so
I
long.
say. But
I
when
could
I
go
say
on
these
for
things,
hours,
I said
literally,
this in the
Ron, with
WhatsApp
you
group
and
too,
Michael
and
here
there was like
talking
15
about
people that
investment
understood, and
philosophy
they
and
liked
ideas.
the
I wish we
comment
had
I
more
said.
time,
When I
but
say
please
these
come
things,
back
like
and
I
see
don't
us again
literally
soon.
say it
We'd
to
love to
people
have you
that are
back,
here
Ron and
every
Michael.
day,
Thanks
that
very
are
much.
trying
Thank you for
every
your
single
ETF
day, that are
for
trying to learn,
inclusion in your
that are
program.
trying to
We
see
appreciate it.
things for
Thank you very
themselves and
much,
their
Ron
loved
and
ones,
Michael
for
as
their
well.
future
Now, my
and their
thanks to
family's future. I'm not even talking about now, 20, 40, 50 years later, for themselves. It's just the people that are, you know, the one or two people that were trying to bait and then be like, hey, shut up. And then they're the ones that don't try. And then they're the ones that want to pay scammer $1,000 and get scammed and then, lose and then cry and then be like, what the fuck? And then those are the type of people that pretend like they care and they don't, which is sad, but also okay because we are all human beings and we all do that to things we don't want to do or we don't care about. People only care about things. LOD broke, right? They want to go lower. IWM broke. Tesla is dumping. QQQ is going lower. IWM. I don't know. SPY is breaking the LOD now. So there is a clear divergence at the floor. The floor broke at 12:45 and now this is 12:50 and QQQ is all the way up there. And I'm literally saying medium to long term calls are in danger, right? And I'm talking about literally tomorrow, next week or whatever the fuck, looking like on the setup alone. That's what they're doing by dragging down lower, breaking the LOD and going lower maybe 5, 10, 20 minutes or some shit, but this is not. Yeah, I don't know what the fuck I was saying, dude. I forgot. But yeah, I'm chilling today, dude. I don't say this shit and then I mean this shit on people that are here completely to, like, you guys get what I'm saying, but there's like 20 or 40 people here that don't give a fuck and don't even care. I'm not saying out of the when the views get to 200, right? And there's like 20 or 40 people that come from the other channel and they don't really care and then they just want to see and then they want a good part. Oh yeah, and then when I ask and beg for likes, they don't even hit the likes and then they're like, oh yeah, this kid, blah blah blah, too loud, and they don't even hit the like and leave. So it's, you know what I mean? Who is really being mean or rude to who, and who is really being, trying to be loved by? I don't even know. To love life. Fuck, that's all I'm trying to say.
No matter
love
what.
life. Positivity. I don't even know what I'm saying. Alright, shit. Goldman Sachs says blah blah blah. He is very optimistic for 2026.
Now at the Goldman Sachs trading floor in a CNBC exclusive is Goldman's co-head of global markets and banking, Ashok Varadhan. It's become a little bit of a tradition to do this at the end of the year.
Yeah, welcome back to the trading floor, Carl.
Thanks for having us, Ashok.
475 Tesla's back at
kind of rhymes
reality.
with what you believe will happen in 26, and that is growth can accelerate and we can get back to target.
Absolutely. Maybe for a little bit different reasons than Hassett explained. But our house view is that, you should have an economy that grows above trend.
IWM is forming
at the
a
end of the
knife
year
now.
should return back down to around 2.1%. And so that should give the Fed the capacity to continue to cut.
How will that work? What will happen?
I think there are a couple of reasons. I say one, the tariffs are already in the baseline. And so on a go-forward basis, because of base effects, you're not going to get tariffs again.
Right.
And so that's sort of receded. In addition, you kind of have some of the
IWM is
components of
forming a knife
inflation,
here.
like housing, which have been elevated. You're starting to see sort of contemporaneous measures like rents are coming, are showing softness. And so I think you're going to get, sort of continued
SPY is
improvement on the
knifing
inflation
down
side.
now.
Then,
IWM
of course,
is
on
knifing
labor,
down.
Labor undeniably is weakening, and that's the other side of the mandate. The unemployment rate has basically ticked up to 4.6%,
SPY is knifing
which is
down
a post-pandemic
now.
high.
IWM is in
And
a
so
knife
I
all
think-
day
I
long.
think there's a green light for cuts. Maybe not at the pace at which we've seen them, but I think we're going to see them in 2026.
Cute
Any
chopping,
reason
but
to think
turning
that the
into a
jobs
knife
number
as well
today
here.
implies a Fed that is behind the curve in any way? Or did not cut enough?
I don't think necessarily behind the curve, but I think a Fed that can sort of continue to cut at every meeting, including January. That's not in sort of the market's forecast.
Literally,
but,
this is how
I certainly
candles
wouldn't
and
object.
shapes changed, though.
Right.
The shape
All right,
was
so
a
then
wedge,
where
and
do
then
you
the
think
wedge
that
broke
leaves
down, and
markets
the
during
wedge
the
turned
course of the
into an
year?
even bigger knife.
Constructive.
Right?
I think we continue to be constructive.
You gotta just have the
for
mental
the following
brain
reasons.
power
One is the
and
rate
the
cuts, which
mental
we just
endurance
articulated,
and
but also
endurance to
you're going to get a
see
fiscal boost
what they're building, what
from
they're
the big
showing,
beautiful
and
bill.
why. To
You're,
be able to see what they do.
Obviously, all of the AI infra spend that's going to
As
take place
best
in
as you can.
2026, by some
That's all it is.
estimates,
The
close
market is literally
to
just
$500
deducting
billion,
live
and of course
24/7.
Dereg. And so when I look at those
12:15,
four things, that leads me to be
12:50,
very
and
optimistic
they
for
dumped on
2026.
all the bulls
kind of
from
call it the holy trinity
all up
of
there.
monetary, fiscal,
What does that show as?
deregulatory tailwinds.
Confirmation
You have no
rejection.
problem with that.
And
The
a
downward
secular
trend line with
technology, which is coming
IWM since
online, right?
10:55,
So I'd say four
12:15,
things, yeah.
and 12:50. So that is.
Thank you all so much for joining for this conversation. Ken, thank you so much for sitting down with me this evening.
It is great to be here today.
And it is such a pleasure to be in Europe, particularly during this time of year.
Well, should we start with that? Because perhaps everyone will have noticed
for
it's
your
two
kind
Americans
message, Derek Simpson.
speaking in
Thank
Europe.
you, brother.
Ken, it feels like recently there's been a lot of American barbs, let's say, thrown at Europe. President Trump warning about end of civilization because of
Tesla
Europe's
is
over-reliance on
heading
America.
lower.
Jamie Dimon saying it's a region that's anti-business, that has a lack of innovation. Are those most dire of forecasts for Europe? Are they correct?
What a cheery way to start today. And I feel like I was just handed the hot potato question.
Yes, I'm sorry, Ken. You were indeed.
So first of all, President Trump is a bit prone to hyperbole. And having said that, there's no doubt that the Western world
Life is breaking down.
needs Europe to be more successful. We need to see higher economic growth in Europe. We need to see more innovation. We need to see more consumer demand for goods and
Nice
services.
breakdown on
because the
IWM. They want to
Western
dump.
world will only be strong
QQQ
and
turning into a
prosperous
full knife.
if we have a strong and prosperous Europe.
What does the road ahead to get that strong and prosperous Europe look like? How do we get there?
Look, I think
Full knife.
Mario
All
Draghi
things
did
are
a
full knife.
fantastic job putting forth a playbook for how to revitalize Europe. And I would say that, I'll agree with 80 or 90% of what he wrote, but rather than regurgitate what he wrote really
1 p.m.
thoughtfully.
They broke the
I
floor
think the
here.
salient points are Europe needs
The
to
confirmation,
create a culture
LOD
of
broke floor,
entrepreneurship.
and the dump started at 12.
Far too much of the world's innovation
12:45.
takes place
Bounce
in
to
the United
12:50,
States
12:50.
and in China.
Rejection and
And
dump into
Europe
1
having
p.m.
such an
Let's see where this
incredibly
shit stops. 1
well-educated
p.m. dump.
population
This is
should
the
have
3/3.
far
They could go
more
lower and lower and
entrepreneurial
lower.
success stories
The
than it
prices
does.
can go lower and
So that's a
lower and
really
lower.
big issue that Europe
Then at
needs
some
to address.
point or
It's a
another, it's
cultural
going to
issue.
bounce and create
And the
a
second
trap.
is that Europe's capital
But this is a
markets
3/3,
simply
and the
aren't
bears
deep
are in
and
full
robust enough.
fucking strength
The venture
there, and
capital
they're going
community in the
fucking
United
dumping
States,
mode.
the depth of the
Tesla
private
is
equity
dumping
markets,
mode
the
now.
depth of the growth equity
SPY
markets,
is
the
dumping
depth
mode.
of the public
IWM
markets
dumping mode. QQQ
makes it
dumping
much
mode.
easier to organize.
SPY is down
to
0.8%.
secure
IWM is down
capital and
minus
to grow a business than it is
1.26%,
here
and
in Europe.
QQQ is down minus
Let's talk
5.6%.
about leadership in the U.S. because
0.56%.
it's also been a moment of question.
Everything is
in
red
the
now.
early elections,
Dump.
local elections,
From
governor
green
elections.
showing, green, red,
the trend has
green,
been very
and then
clear.
fucking
When
red.
Democrats
Dump.
run on affordability,
Market dumping.
they have
SPY
been winning.
dumped. IWM
2026
pulled back
is
crazy.
a midterm year. Do the Republicans risk losing
Little
the
knife
American
break.
public?
So, it's really.
When did
it's
I
quite
mark the
ironic to
knife?
see how the
Literally
tables have
right
turned.
before the knife broke.
Because
so
just 12 months
lol.
ago, President Trump
1
and the
p.m.
Republicans swept into office on the issue of inflation. And the Democrats have rebranded the problem of inflation as the issue of affordability. And they are now well poised to return to control of the House. And there's even discussion of them retaking the Senate on the back of how the affordability issue strikes a chord with the American public. And the
I
big
need
picture
Tesla to
is
go.
the American consumer is tired of the persistent and sticky inflation. They feel like they can't
Tesla to
get
go.
ahead in a world where their savings and their wages are constantly deprecated by the impact of inflation.
Why aren't Republicans speaking to that? Is it an issue of not having the policies, of not communicating the policies correctly?
Damn,
So
my
I think
puts
it's
I
actually
scalped in the
fairly
morning is at
complicated.
$4,000.
I think
Holy shit.
Republicans struggle with the reality
On
that
SPX,
many
that's
of their
fucking crazy.
policies, which they ran on, for example, ending illegal immigration into the United States, are actually pro-inflationary.
God bless.
When you end illegal immigration, you reduce the size of the available workforce, that's pro-inflation. And so the Republicans are grappling with tariffs, another case study. When you impose a tariff, it's a regressive tax on consumers.
LOD.
It's pro-inflation. So some of the very policies that the Republicans
still
have
wanna
put
go
forth
lower?
and have
Showing?
been successful in implementing are actually the very
Tesla has
policies
so
that
much
tend to
room
be
here.
pro-inflation. Some of the
SPY
other
is the only
policies, for
thing.
example, deregulation, are just going to take longer to play out. And ultimately,
I think IWM is about to go to
ultimately,
247 right now.
which should unleash
This is
productivity
disgusting.
gains, will create a reduction in
247.
inflation, a very
Look at how
healthy
fast it's
reduction.
going down.
But we need to get to that point in time.
It's a timing issue. And President Trump said something similar, not exactly what you're saying, Ken, but he had
They wanna go
spoken to
lower
the Wall
here.
Street Journal
IWM
just this week, saying
is going at
that the reason
247.
the American public hasn't realized his policies are working is just because they take time to take effect.
It's
And what
fucking
Americans
crazy.
are experiencing now is Democrat-led inflation. It seems like you would maybe take issue with the latter, that maybe its current policies leading to some of the stickiness.
At some point,
I think there's
I
no
don't,
doubt
definitely
that the
not
president
today.
inherited
In the next couple
an
of
environment
days,
that is still struggling with inflation.
Maybe into tomorrow.
But the easiest parts of his agenda to implement were, unfortunately, when it comes to the issue of affordability or the issue of inflation, were those policy choices that actually most fuel inflation, right? The curtailing of the labor markets, the clear-cut inflationary pressure of tariffs, those were easy things for the president to implement, and unfortunately, they have continued to lead to this inflationary environment that we live in.
Well, you have seen the White House try to backtrack on some of it, be it tariffs on Brazil because of the impact on agricultural goods and the bills that Americans face in the groceries. We're looking at tariffs now making their way through the Supreme Court.
Midday, fucking
Is
just
it
went.
too late, though?
Candle
So
traders
I think it's going to be hard to roll back tariffs
They just
writ
give a
large
fuck about.
unless the Supreme Court
Little
makes
candle, 5 minute. I'm gonna throw 100 contract at the wall and see if my rice cakes, if my fucking shit rice cake sticks at the wall. 50-50. Bullshit. Or fucking look at the fucking chart, find the fucking deductions, find the setups, and then wind direction, trend direction, you know what I mean? Retail versus fucking amateur versus fucking smart money, you know what I mean?
pretty bold decision. And I only say that because the
Is that
Supreme
easy?
Court's going to face the challenge
Fuck you talking about?
of doesn't want to take on the president.
Anybody and their fucking
with
dog can
respect
fucking
to
do
one of his single most important
50-50 candle toss,
policy
bro. Fuck you
wins
talking about here?
from the perspective of the White House. Right? Does the Supreme Court really want to take that issue on?
Man, I'm
As a
sorry I
matter
keep
of
saying
law, I
rice
hope they
cake
do.
throwing
I
at
hope
the
they take
wall.
it
That's
on
like a
with a very
symbolic thing in
thoughtful
my
and reasoned
culture.
opinion.
So,
But
back in
that's
the
gonna be a
ancient
tough
times,
call
you
for
know,
the Supreme Court to
back
make.
in the ancient times, apparently
having
people
said
used to make
that,
rice cake and throw it at the wall
we
and see
have
if it
seen
sticks.
the
And if it
rollback of
sticks, that means they
tariffs,
do good on their
in
finals. And if it
particular
doesn't
in
stick, and then if
products
it
that
falls to the
consumers
ground, it means
put
they
in their
have bad
grocery
luck.
cart,
And it doesn't fall
right?
or stick.
The
So, you know what I
president's
mean? That's
getting
why
the
I'm
message
saying
from
this
the
shit.
front lines, from the
LOL.
Congress people that serve our
LOL.
people, that the voters are angry about inflation,
love it,
and
man.
they're looking for
Every
ways.
goddamn
They're
day.
looking for ways
Bearish
to
as shit.
help to address the
Dude, this is
issues of
bearish as shit. Every
affordability.
goddamn day.
You know, it was very interesting. I was with a group of business executives and the president. He was very much listening for ideas on how to address the issues of affordability in America. He cares about this issue.
Hello,
Maybe it's
deep
too late
broke
for
on
some of the
spike.
local
Ghost
elections,
candle
though,
came,
and
nuclear
getting to the
candle
American
came to
public,
New
New
Florida.
York,
There's a
a big
divergence
change
at
for
the
the
fort.
city with the Democratic
Divergence has
Socialists.
just cleared.
Miami, too, your
Divergence has cleared.
hometown,
There's
Ken,
no more
where you have the
divergence.
first
Right? This is what I
Democrat
meant by
in 3
medium-term,
decades.
long-term calls are
You've
in
praised the
danger
leadership
earlier.
of Florida many times. Does that change your outlook
Wind
at all to have the
direction
local election in
is
Florida
now
also
officially
shift in terms of who's
south
leading
on
it?
QQQ.
Well, Miami-Dade County has had a
Wind
Democratic
direction is
mayor
officially
actually
south
for
on
quite a bit of
QQQ.
time now.
Divergence is cleared on the
And
floor.
Miami just recently elected a Democrat
Divergence
to
is
be the
cleared
mayor of the city of
at
Miami.
105.
And I think there's
Floor
a
is
stark
105 on
contrast
QQQ.
between the Democratic
They
leader
bull trapped the
elect of
entire
Miami
fucking day. Why?
and
They
the
did not
leader-elect of New York City. The leader
fill
elect
the
of New
gap
York
below.
City ran
Nor-
on a set of policies that will either be impossible
and they left
to
the gap
implement,
up. Why?
or
I
that
don't
will
know.
come
But
with
they
a
gap
draconian
filled now.
long-term
They
cost to the city of New York.
100,000% gap
You know,
filled
for
now.
example,
Right?
if
That
you
little
want
gap
to address
that
the issue
someone
of
was like,
housing
oh, it didn't fill
affordability,
yet, but it completely
you
filled it.
need to build more
And it bull trapped
homes.
everybody up there, the
And when you're
majority.
talking about rent control, all you're doing is telling developers in big neon lights, don't build in New York City. Now contrast that with the incoming mayor of Miami. She has a long history of being pragmatic with respect to policy choices that will improve the lives of the people who
Still
live in Miami.
bearish.
She
There
very
might be a
much
cycle or
wants
two
to
to
accelerate
reload and go lower. This
the
is still
permitting
bearish as
process
fuck.
for builders to create more housing stock. She wants to help release lands into the private market to help increase available
That's how fucking crazy
housing.
it is. Still bearish.
She wants to address the issue of housing affordability with thoughtful,
That thing here says fucking
time-tested,
bullish. This is a
and
fucking
proven
insane
policies,
knife weekly now.
rather than the fantasy that's being espoused by Mayor-elect.
There's
for New
literally
York City.
nothing here
Are you
that says
confident that
bullish.
Americans will continue to elect in people of positions of power like
What
you're
the fuck
describing
here
with
is
common
bullish?
sense policy?
Fucking candle?
Or do you look at New York as a red flag for 2026?
Look, I think
I don't
that
know.
New York City is a red
This
flag
is
because
set up.
people put aside good sense,
Set up
common
alone.
sense.
People
to
that
elect
care
somebody who's
about candle
incredibly
trading
charismatic,
don't give a
who ran
fuck.
a really
but
powerful campaign on
I mean,
social
realists
media,
that literally look at my market
but who
update
ultimately
video and that
doesn't
like the
have the
video and
ability
that are
to
here every
deliver on
day
the
will
promises
understand understand
that
what I
he
mean
set
by
forth.
fuck the
In
candles.
contrast, I think the mayor-elect of Miami,
fuck the
she
candle.
ran on a much
Fuck
less
the candle.
powerful set of campaign messages But do you know what?
Love the
She'll
setup.
deliver on the promises
Fuck the
that she
candle.
made to
Love
the
the
voters of
setup.
Miami.
Fuck the candle.
You
Love the
still have a
setup.
good
It's just
chunk
gonna
of your
break down.
business in New York. Would you rethink just how much exposure you have to the city at the moment?
This is good.
Look,
This is going
I
to break
think
down
every business
way lower.
executive is
It
thinking
is
through the
already.
magnitude
It's
of
going here.
exposure they have to New York.
6,754.
And there's a very common talking point on this.
754.
We survived de Blasio.
Sloping, horizontal,
Is that
downward
enough comfort?
Well,
trend
that's the
from
talking
all-time
point.
highs.
And unfortunately, you know,
Why am I saying this?
New York
This
took
is-
a big set
this
back
is-
during
this
the
is
de
the
Blasio
setup.
days.
Right.
And I hope that Mondami starts
This
to
is the
think about how
setup.
to pivot to a more thoughtful set of policies
This
that
is the
will
setup.
allow
So
New York City to maintain
anyone
its
against the
position
trend,
not only as
completely
one of the
wiped out
greatest cities
from
in America, but one of the greatest cities
anyone
in the world.
against the trend,
I'm
completely
struck
wiped
that it's
out
not just the
from
American populace
FOMC
that's
top.
thinking about
When did I say
affordability
the
or
FOMC
inflation.
top?
It's markets too.
At
Since
the
the Fed
FOMC
started
top.
its cutting cycle,
FOMC
cutting
top,
75
right?
basis points so far
When
this
did
year.
I say the FOMC
30-year
top?
bond yields
Right?
are up
FOMC
80
top.
basis points.
So
10-year bond yields are up 30 basis
Great.
points, of 50 rather.
got it.
It's not the move that you
AVGO,
would expect.
Google and Meta along with
there
everything.
signal
Oracle,
in that?
Tesla.
Unfortunately,
now where
the
are
bond
we?
markets are
Inside the area of
expressing
conflict
their
box.
anxiety
Where are we? The
about
horizontal
inflation.
sloping
And when you
downward
look at the
trending
10-year yield
support.
point or the
The
30-year
MACD
yield point,
volume,
what you're really
everything
observing
bearish. So every single
how
bull
much
saying
risk
this is bullish,
premium,
this is bullish, and this
how
is
much
bullish,
like
and this is
insurance
bullish,
premium
bullish, and bullish.
does the
Completely
market
fucked.
demand
They're fucked and they're done
for
so.
higher
And there's just
inflation?
liquidity. Thank you very
Because
much.
remember, you're
And
lending the money to the U.S. government for 10 or 30
see.
years at a time at a
Amazing.
fixed rate.
Great
So
day.
you want to think very long and hard about what rate do you lend money to the U.S. government, which is running a
day.
staggering deficit, that is now running very, very easy monetary policy
candle,
relative
love
to
the
the
setup.
inflationary pressures that
Turn
we're
up.
facing. What risk premium do you demand to do so?
Oh,
So although the Fed has brought short-term interest rates down, what it has really done, it has unnerved the bond market community that invests or commits capital for 10 years or 30 years at a time. And why does that matter? Because capital formation, building a new factory, is funded with 10 and 30-year debt. So the hope that we will stimulate the economy, that we will encourage the investments that we need in America, that are all funded with long-term debt, are actually being undermined by the easy
I get
monetary
a
policy
BOGO
of the
wink
Fed
today. Ooh,
Markets are incredibly
that
sanguine
sounds
on this
good.
idea that we're going
I
to
think I
run it
might do
hot,
that.
we're going to cut, we're
Sounds
going to
hella
get
good.
stimulus. Are you essentially saying that markets are underpricing?
Well, there's two markets.
Let's get
There's
some
the fixed
GGs
income
in
market,
chat, folks.
which is anxious about this journey.
You
And there's the
beautiful
equity
day.
market.
Hit the like
The
on the
equity
video.
market
Let's get some
loves an
GGs in
easy
chat.
money story.
Fuck.
So what we're seeing is a
Today's a
tale
crazy
of
day.
two very different worlds from the perspective of two
Today's
very
a
different
crazy
investor
day.
groups. Right? Your fixed income investor
Today's a
doesn't
fucking
participate
mad day, son.
directly in the easy money policies. In fact, they're adverse to that. They're anxious about that. How much will inflation erode the value of the dollar that I lend to the government today?
Nothing's
The
gonna
equity market
change.
thrives
I think
on
it's
this.
gonna be like this
It's gonna be
forever.
right.
I love it. I
Well,
actually look forward to the
unfortunately,
market
I
every
think
day,
that
bro.
The fixed income markets probably has its head screwed
I
on
used to
better
be
here.
afraid of the market
That we
every
do
day.
have an issue
Being
with
like, what the
stickiness and
fuck is
inflation.
today? What the fuck is nah?
Goods
Fuck all that.
deflation,
I love
the
every
story
day
of our
now.
adult life, fueled by globalization, is over. It's over for now.
Oh my God.
Maybe in 10 years, as robotics continue to accelerate, we'll have another big wave of goods deflation. But the goods deflation that we've enjoyed from globalization is over. Supply chains are being
Bears are
re-architected.
still here. They're reloading.
Manufacturing is being moved into higher cost jurisdictions. That's going to end the goods deflation that's been the theme of our lifetime. And with that,
So crazy.
you have more
It's so
pressure
fucking
on
crazy to
services
still
inflation
say
and
the
cost
bears
of
are still
housing
there. So I
flowing
mean, that's
through
some
the
mental
inflationary
shit. But I
picture
mean,
that
I guess
American
we'll find
households
out.
face.
So just to kind of paint the picture of what this actually looks like on the ground, if you get a Fed that continues to cut, maybe supported by a candidate that President Trump puts in place who is loyal to him, the Fed continues to cut, you get this real pressure where bond yields go up. What does that look like? Does it look like risk markets crashing? Does the business environment, which America has enjoyed, does it get curtailed? Just how dramatic of an impact are we talking?
I don't think we're actually looking at a scenario like that. All right, I think you're looking at higher bond yields as a possibility, but remember, the easy money will fuel the stock market boom. Right? There's two different investor communities here.
Easy
And the
money.
stock market investors, when they see lower interest rates, bid up for stocks. That's just the propensity
Easy
of
money,
that community.
speculative
Is
fucking.
easy money means higher prices.
No.
I mentioned
Dot
the Fed may be
candle
playing a
trading,
role in here. And
retail,
about 3 months
fake,
ago, you
scam it.
wrote an
Yep.
op-ed in the Wall Street Journal. I'd love to read a line from it because it was really important and timely. You
Deducting,
wrote that pressuring the
smart
central
money,
bank to adopt a
hard
more
working,
permissive stance
set up
toward
looking,
inflation
thinking,
carries steep
reasonable,
costs.
logical,
Ken,
deducting.
since then, we've
Man,
seen NEC
gotta
Director
love it.
Kevin Hassett emerge as the front runner from the Fed.
Big
There's
fucking
reporting
difference.
overnight that there's been
Gotta
some
love it.
pushback in Trump's
I
inner
think
circle.
I think it's a fucking
Is that
proud
pushback
thing
warranted?
to say
Would you
too.
support
I really say
a
this shit
Kevin
proudly
Hassett
when I say,
as leading the
I'm
Fed,
a
someone who's
deductor
seen
compared
as
to a
very loyal
fucking
to the president?
Look,
I really
think
do
the most
think it's something to do with that.
move the
Instead of just
president and the
all
incoming
this.
Fed chairman can make.
End up
Chairwoman
being
is the
bullish
case
or
to be,
bearish, or
is to
market being
separate,
bullish and bearish based on
is to
news
create
or whatever the
distance
hell it
between
is.
the
I really
White
don't.
House
I don't
and the
believe in
Fed.
any of that. I don't believe
Because
in bullish
the most
bear. I just
difficult
believe in
job
fucking
the Fed
smart money
has
deductors
is
versus
the job
retail
of raising
money.
rates to combat inflation.
I don't know what
which
to
can
call it. Like
result
I don't know
in
what the
higher
I don't know what the
unemployment.
word is. Like
It's a
estimators,
politically
guesstimators,
unpopular decision to
speculators.
have to
Like I really don't know
The
what to
White
call it.
House
I
having
just
distance from
I
the
just
Fed gives
put
the
it as a
Fed
comedy
more
word like
latitude
candle traders,
to make the
fake
tough calls
scammers.
you need to
man.
make to
It's
protect the
literally
long-term
crazy.
stability of the dollar and to protect the long-term
Smart money in the world
interests
is
of
literally
the
doing this shit.
economy.
Wind
And
direction,
sometimes
trend
the
direction,
long-term interest of the
trap
economy
finding, right?
involves
IWM is going
short-term
lower
pain and
and
misery.
lower. People
Volcker
are literally
experienced
looking at the
this
candles and saying,
back when
"Oh,
he was
how are they
Fed
going
chairman.
lower and lower?
This is
What's
a
going
real
on? How?"
issue.
But like,
And when
bro,
the White
this shit
House
is just on setup alone.
usurps
Who the fuck
control of the
knows
Fed,
where they
even
want to
if they
go?
don't
I
actually
don't
have it
fucking
as a
know.
practical matter,
Actually, I do know.
if they're perceived to control the
247.
Fed,
247 on
then if
IWM is what I
inflation
said maybe
rears its
40
ugly
minutes
head,
ago. I think it
the
might go
president
today
can't
and then
blame
fucking be
the
done
chair
with.
of the Fed.
247
The buck
point
stops
fucking
on
somewhere.
his desk.
247.7
So I don't know
or
why
5
President
would be
Trump
the
wants to take that
first
risk in an
Fibonacci level
environment where the outlook for inflation
from the 14-day
is
run
so
on
difficult
IWM.
to
So
forecast or predict.
Tesla,
And there is
literally
again
the last thing
a
on the market
lot of
that is
pro-inflationary
holding and
pressures
hovering up
that
crazy, I
have been
guess.
created by the change in labor markets.
Tesla, the literal
high
last thing,
fiscal
and it touched the
deficits.
purple box too.
That is fiscal
On the way down,
stimulus,
I said it's about to go
and
touch
of
the
course,
purple box, and it
right
has
now, the
touched the
relatively
purple
easy
box, and
monetary
it's
policy.
deciding what
I
the
mean,
hell
you
to
started
do.
this with mentioning you had been in Washington, D.C. with some other business leaders with the Trump administration looking at solutions for affordability. Did you get
I
a
can't
word
believe
in
it looked
who
crazy
your
bearish
pick
when
would
they
be
flipped it. I
for
guess this
Fed
was the
chair?
most like
You said who you-
reasonable also
perhaps the
because the purple
characteristics of
box,
who you
but
don't
like to
want it to
fucking
be.
see
Who
it
would
is
make
like
sense
actually
for
fucking
this
crazy.
job?
Look, I think the president
Why?
has a
Because I
number
left
of
my
really
Friday
good
on
people
Tesla
to
into
choose
this
from
week
for
at the
role.
bottom of this shit, but I
I
did
don't
not
think
on my
throwing
next
my
Friday on
sort of
Tesla, and like this
choice
shit
into
is
the
now
mix
just
helps to
cycle,
add
trapping,
anything to the argument or
theta,
decision
whatever
at
the fuck
hand.
on my Friday
I
on
think the
next week,
president
but
will hopefully make a
it is literally
decision
what it is. The market lives
from the perspective
loves
of
to.
who will give
Look at that
the
5-minute fucking
global
spike
markets
down.
and
Loves
the
to.
American investing public and the American consumer the greatest peace of mind that we will manage inflation in America.
And someone not from the White House, ideally, is what you're saying.
I actually don't think that that's as important as the ability of that candidate to make it clear to the House of Representatives, or the Senate in this case, and the American
So many
people
candles going up and down here.
that they will make the decisions that need to be made to protect the long-term interests of the U.S. economy.
So, Ken, if reducing rates is one thing that's excited risk markets, we'd be remiss if we didn't talk about the other thing that's been talked about all day today, and that is in AI. In 2023, you said that there was a lot of hype, maybe too much hype in AI. In the past 2.5 years, we have seen advancements, better jobs at producing images, better voice recognition, and a whole slew of businesses, at least they say, that they're adopting AI. Have you reassessed in the past 2.5 years, or do you still think there's too much hype?
No, I think actually we've been pretty spot on with that forecast so far. Now, what has happened over the last 2 years is actually, though, a very important and powerful story. In the C-suite of corporate America is a greater focus on how do you use technology to increase productivity. It may not be generative AI, but there's a reawakening to the importance of using technology to empower business outcomes. I was with a group of international business executives about a year and change ago, and everybody was excited around the dinner table talking about AI. And I thought, you know what? Let's all share a story as to how we're using AI
I missed the turkey
to
rally.
make our businesses better. And I heard 5
What
or
happened to the
6
turkey rally?
really
I
interesting
missed the
stories
turkey rally.
of how corporations
Now
were
we are.
transforming their businesses through the use of technology.
Back to this little spike
not
level.
one story involved
6,760.
If you are one of these
my
players
God. We had a
then
nice
that
fucking
exists
rally,
in
though.
this
Nice bounce,
ecosystem
and then
where hyperscalers have spent $230 billion
and then at the end,
just in
turning into a dead
2025,
cat
with
bounce,
projections
trying,
to go
and now
somewhere
we're
near
deciding
$3
what to do
trillion
with this dead
over
cat
the
bounce
next
top.
decade.
It's not really a dead cat bounce,
That
but like
seems
it's
a little
literally
bit worrying, Ken, that
forming
people aren't
the
finding
first
uses
steps
for
of it.
AI, that they're instead just finding uses
So,
for other technology and
right,
maybe
whether
wrapping
this
it
shit
in an
drops
AI
from
bow.
here,
Well,
or whether
I mean,
this
first of all,
bounces or chops.
Like I said, these corporate executives shared really great
Market
stories.
definitely went
on
higher
how
and
they
higher and
increased their
higher,
ability
and
to
then
put
went lower and lower
15%
since
more
FOMC
cargo
top. So
onto a train, onto a shipping
definitely went higher and
vessel.
higher, and chop,
I mean,
chop, chop, and
that's just
IW
money
went
right
higher
to
and
the
higher
bottom
into
line.
FOMC. So
Less environmental impact,
that is
higher
fair.
margins. That's good
Why
business.
FOMC
So
being
the
bullish
upshot of
from
this is that
FOMC is
corporate
literally
America
playing
is
upside
securing
3/3.
gains from
Right,
the use
there
of
was a chance
technology
that the
again.
market could have
I
pulled
think
back.
they're
I'm not
just
saying it
securing
was
a
going to pull
greater
back
share of those
100%,
gains
but it
from the
could
uses of
have,
more
and it did.
traditional
Right,
technologies,
MACD dying into
optimization
Thursday,
technology,
Friday,
long-standing
Monday,
machine learning
Tuesday. So
technology, and less of their gains are coming from generative AI.
NVIDIA,
Now, having said that,
real
with
bad.
the enormity
Why?
of the
If
investment
we
that's
look at
being
the
made
1
in the
week,
field
what
of
did the market
artificial
update video
intelligence,
said?
I think
NVIDIA,
there
1
is
week
some
MACD
chance that we
bearish
will
as fuck.
see
Candles
meaningful
bearish and bull
progress
trapped
in this
everybody.
field
Let's see what happens,
that
right?
will
And it's
change
still
the
bearish as hell.
calculation
Sub 180
calculus
at
that I'm setting forth.
167. That's
Like,
not
there are
good.
so many bright people
That's
in their
not good at
20s
all.
and 30s trying
That's
to
like
unlock,
really bad, actually.
trying to unlock
Maybe
true
170 they want to show
intelligence.
next week and then
That
figure
this
it out.
does
That's what
create
I'm
the
thinking.
environment in which a
173, but
breakthrough
that
may
might be a
happen.
possibility.
But I think
168,
that
I don't
generative
know.
AI, as we know it today,
I'm not playing it though. I'm just
will
watching.
have a very
Unless I see a
pointed,
nice pop on
relatively
NVIDIA, but
limited
there's
impact
no
on the
setup
broader
on
economy.
NVIDIA clear yet.
Call
It's just
centers
chopping
are
and
being
chopping for 2
completely
days.
re-architected by generative
Today,
AI.
yesterday.
Translation of documents between languages
That's a lot.
completely re-architected by
That's a
generative
lot.
AI. But most of the white-collar work, for example, that we do at Citadel, very modest impact so far.
See, Tesla.
In fact,
Just watching some bullshit video. Sorry, that is actually some bullshit video.
Down to D.C. for some breaking news from our Emily Wilkins.
Oh.
Data centers now under some growing pressure, not just in the markets, but also on Capitol
Oh.
Hill. 3 Democratic senators, Elizabeth Warren, Chris Van Hollen, and Richard Blumenthal, are investigating big tech's role in rising power costs. Our Deirdre Bose is digging into that in today's Tech Check. Hey, Dee.
This opens up a new front of risk for the AI trade. Wall Street, yes, it's already started pricing in the financial side of the AI
News
build-out,
helps to
but
set up.
what is not yet priced in is the political risk. So in those letters sent to Google, Amazon, Microsoft, Meta, and 3 data center companies, including CoreWeave, the senators say AI data centers are forcing billions in grid upgrades, and households, not big tech, are footing the bill. So they point to data centers that are already consuming more than 4% of U.S. electricity, with government estimates showing that could triple to 12% by 2028, driving utility investments that get passed through to ratepayers. Now, the blowback, it's not just happening in Washington. In Arizona last week, city officials unanimously rejected a proposed AI data center. In New Jersey and Virginia, rising electricity prices played roles in statewide races. Now, all of this matters because it ties AI infrastructure costs directly to inflation, still the most sensitive voter issue. Power bills are tangible in a way that cloud capex is not, and that political pressure, that can raise costs fast. By the way, there's no White House backstop. President Trump's executive order targeting state rules on AI models, it does not preempt state or local regulation of data centers or power use. Now, that means that this fight stays at that level where power bills and land zoning, those matter the most. So rising political costs, it would also hit the AI trade at a sensitive moment. As we know, investors, they're already pushing for more discipline and a clear path from spend to revenue. And then there's also China. We've shown this chart to you before. Electricity generation there, it continues to rise while U.S. output is flat to down. So if AI is a race of compute and power, China has has a structural advantage.
Look at the purple box. That
the
shit
White
is
House
crazy.
knows this is the bottleneck.
Yo, I'm not gonna lie. I played IWM yesterday a little bit, and the day before.
Right now
like, what
is
the
power,
fuck?
but he said that Washington thinks it can close the gap.
I can't believe
now,
it.
Guys,
3
the
days
markets
in a
will
row.
find out
IWM.
if
I
that
don't
can
want to
happen
fucking
fast
take the
enough.
risk too on IWM. 3rd day fucking in a row too. Like, that is great, man.
In this new normal, small businesses are taking on what's next. Business owners like you are always tapping into their creativity and finding.
Joining us with his take is JP Morgan Asset Management Chief Global Strategist David Kelly. Let's start with jobs. Weakest we've seen, I guess, in 4 years. What do you mean? What does that look like coming into the new year then?
Well, it is pretty weak. Of course, there are lots of gaps in the data, and there are questions about the quality of the data, but the bottom line is highest unemployment rate in over 4 years and the lowest year-over-year wage growth in 4 years. And, you know, one of the things we have very slow job growth, but I thought that the lack of labor supply might have held the unemployment rate down, held wages up. But it's, you know, even that's getting a little weaker. So it's a pretty grinchy report, to be honest.
All right. So what does it portend?
Well, I don't think it actually portends that much. You know, I used to call this economy a healthy tortoise. I think it's a little bit more of a sickly tortoise right now.
Fibonacci
but
line.
it is still moving forward. I think we'll avoid a recession. You know, it'll be weak fourth quarter because early next year we're going to get all these income tax refunds. I mean, this year the average income tax refund was $3,200. Next year we think it's going to be about $4,000, and that's all going to come in, you know, late first quarter, early second quarter. And I think that helps push up consumer spending.
Crazy.
So, yeah, I think the economy will rev up in the first half of next year, and then you know, maybe fade again unless we have some further stimulus.
So yeah, GDP growth picks up in part because of consumer spending back by an additional $800 or so over the year previous. Why does the second half then get weaker?
Well, because first you've got this level of consumer spending that you're now not going to be able to sustain.
Now,
This is sugar, it's not protein.
Is to watch what happens.
People spend it, it's gone, and so it'll be hard to maintain that pace of spending in the second half. And then also we don't have much labor supply. I mean, it's, you know, I think
this thing come back in?
You know, the native-born population, working-age population, is shrinking. So without, you know, we've got almost zero net immigration. It's going to be really hard for this economy to grow by more than 1.5% at a trend rate. So we think, you know, maybe 3% first half, 1% second half, and maybe if we avoid recession, 1.5% next year.
Insane
but
knife
no
though
boom.
on IWM
When you
today.
say avoid recession, I mean,
What
the
a
GDP
journey
growth
all
looks
day
actually
long.
quite good and quite strong.
I literally
thanks to a
drew
lot of
this
the
line,
investment
or this
that's
wedge
happening
here.
around
It's fucking
AI, the increased
unbelievable.
business investment. I mean, even as I mentioned, the retail sales numbers today were good as far as the control group that feeds into GDP. So that's not. It's really a labor market recession, not a recession.
Well, the GDP numbers will look better than the employment numbers, but I think even in the fourth quarter, GDP growth may be only in the order of 1%. So it's not exactly booming. I think it will be about 3% for the, or 2.5 to 3% for the second quarter.
The bullish
for the third quarter.
being used.
So I think it is slowing down, but
I literally said medium term, long term is in
data
danger
center
because
boom,
of the
but you look at things like
divergence
heavy
at the
truck
floor, right?
sales,
And they
they're
literally
really
pulled
weak.
back and trapped
If you look at
everybody at the top.
construction spending, home
All the
building,
MACD,
it's not
all the
strong.
liquidity at the
So
tippity top
we
here.
are seeing I think there's so
At
much
12
focus on these
midday,
data
and they
centers.
fucking
that we're
pulled
kind of
back to
missing
the
the point that a
divergence
lot
and
of other
cleared it.
investment spending really isn't that powerful right now. And also in the energy patch, because we've got low oil prices, we're not seeing a lot of drilling.
I mean, they're showing a knife breakout, but I will say one thing. The one thing is it'll take massive amounts of money to go relieve all the calls that are stuck from 12.15, because it's not even 0 DT at this point. It's literally 1 DT, 2 DT, 3 DT, 4 DT at this point on the fucking SPY calls. So we'll see if there is an end of day spike or something. There might be a end of day spike or maybe a push up to test, but I just think it'll take a massive amount of effort and money to stay up there now at this
on the
point.
Hill. What do we know?
Hey, Scott. Well, of course, we've been following this debate around the Affordable Care Act tax credits. They're set to expire really right around this time, and that is going to mean that for millions of Americans, healthcare premiums are going to skyrocket. Congress is, of course, rushing to find a potential solution on it, but Speaker Mike Johnson told members of the media today that he would not be allowing a proposed amendment that would have continued extending those tax credits. House Republicans are going to vote tomorrow on a health care bill that Johnson says will reduce the cost of healthcare premiums, but it has nothing to do with those tax credits. It would allow them to expire. And that's concerning for some of the more moderate Republicans in his party, particularly those facing difficult elections in the midterm, who say that they need to have a vote on them and that Americans need some relief from the higher premiums that they are already seeing. Meanwhile, we know that there is a group of bipartisan senators who are trying to find a path forward. But again, the clock is really running out here. A number of Americans are already facing premiums that have doubled since last year, and there is expected to be an impact on the private market as well. Scott?
We're looking really at the end to the end of the year, right? So we have a 2-week window essentially. So if you're not going to get anything next week, does this imply that there's zero chance you'll get anything before the end of the year, or is the political pressure just going to get to the point where there's going to be no choice but to have some sort of vote?
You know, Scott, I think the political pressure is definitely going to continue. I mean, this is definitely set to be an issue that will be a part of the midterms next year. Everyone here up on Capitol Hill knows that. They might not be able to get something done before the end of the year because they only have a few days left, but there does seem to still be some willingness to try to see if they can get this done retroactively, maybe do something in January, have the prices apply. Not 100% sure on the logistics there, but I can tell you that at least the pressure is not going to go off
I'm in
necessarily.
3480 Tesla puts into Friday here again. The fuck is this shit?
Terrahano, a global head of capital markets, private wealth management capital markets at Goldman Sachs Private Wealth Management. Sarah, thanks for having us in. It's great to have you.
Thanks so much for having me. Happy to be here.
So we talked to Ashok at the top of the hour about a pretty constructive House view on 26, which I'm assuming you share to some degree, yeah?
I do. I think for all the reasons Ashok said, we're quite constructive. I think, you know, if you look at what our research has put out, we anticipate 12% earnings growth in 2026. We actually have more aggressive GDP estimates than consensus at 2.5%. And then you take what we're expecting in terms of Fed cuts of 2 cuts next year. This is all quite accommodative.
Yeah, I'm going to clear chat a little bit so we can focus on
does
the
private
actual
wealth
shit.
or family office see the markets any differently right now than the rest of us, so to speak?
Yeah, I think they see them and observe the same things. What I will say that we observe with our family office clients is they tend to be more long-term in their approach, right? They're often, you know, investing for generations. And so what I've observed, you know, I started my career in global markets on the institutional side, and I moved to wealth in 2010, is just that these clients can be quite patient. And I think, you know, on dislocations, what we saw in April was our clients really running into the market. And, you know, Tony P put a really interesting note out last week that said that if you look back at equity markets since 1945, 79% of the years were positive. You don't really want to play against that. And I think our family offices have realized that, and that's, you know, how they approach their investing.
What's their balance right now, would you say, between private and public markets?
Sure. I mean, I will say that the family office population is quite different in that way. They tend to have a higher allocation to privates than our kind of average client. And that makes sense because when you're talking about large pools of capital, in some cases over $1 billion, you have more natural liquidity. There's only so many dollars you need to be liquid. So actually we published a family office report back in the summer, and it said that our family offices were 42% in alternatives.
So what happens if this knife
I think when you look at our average private client in an aggressive portfolio, it's more like 25. So it's still a heavy allocation to alternatives, but I would say higher in the large family office.
The new Patriot power generator,
still nasty
2200
working, man.
X has 2,000.
All right. We're at the bottom of the downward sloping trend line. A downward trend line on SPX. Oh no.
Fares are near a record as the company confirming robotaxi tests without a driver are underway in Austin. Tech analyst Dan Ives saying Tesla's ambitions in the autonomous business could drive it to a $3 trillion valuation by the end of 2026. When we talked to Garrett Nelson, CFRA research analyst, he's not quite as confident.
looking at consensus numbers for 26 and 27, we think they're too high still, and we
Tesla
haven't
AI.
seen the
They're
worst
talking
of the
about
drop
Tesla AI now, bro, because everything else is down now. Oh my.
off in their EV sales. In a couple weeks, when they report fourth quarter sales, we will see that fourth quarter being the first full quarter in which the U.S. market was not subsidized in terms of any sort of EV tax credit.
Dan Ives, Wedbush Managing Director of Global Head of Technology Research, is joining me now in the studio. Dan, I know
Dan
what you're going to
Ives.
say. He's too focused on the spreadsheets.
Yeah,
He's
Dan
too
Ives
focused
is
on the
cool,
car
but this shit is
business.
Dr.
I
Burry
know what you're going to
and
say by now.
fucking
But
Cathie
this is
Woods
how
Day,
the company
sir.
makes most of
Dan
its
Ives
money
my ass.
right
This is Cathie
now.
Woods and
So,
motherfucking Dr. Burry
yes,
Day.
I understand the AI future, but what about the car present
Crazy
for
rip
Tesla?
down.
I mean, look,
rip
if
up
you're
crazy on Tesla.
numbers
Back
for
at
the car
480 today.
business, I mean, I think that's the wrong reason. I mean, in my
But it has to fund the other stuff, right? And it's funding it in part through selling cars. So it has to sell enough cars in
There's a
order
lot of
to
people
not
with
just make
Tesla
profit,
around
but
me,
also
man,
to
charging
fund
their
some of
cars
these
and see
other
them
businesses.
lining
I
up,
look at it almost
lined
like a
up like
bracket, in
6
other
or
words,
7
like a
cars in a
worst
row.
case,
Just
base case, best case. As long as it's sort of above a worst case, and I think now it is in terms of deliveries, then the business model continues to play out, and that ultimately does fund what I really view as the key piece, right, which is autonomous and robotics future. Look, in terms of, if you started this year, and I told you where numbers was going to be at the end of the year, you're like, where's the stock going to be based on those numbers? You'd be like, it's $200, $250.
Right.
But it speaks to my view. I mean, you've talked about it a lot, is that when you look at physical AI plays, there's NVIDIA and Tesla, I think the two best out there. And now it's about proving it out. But that, as an investor right now, if you're bullish on Tesla, you're not focused on consensus 26.
Of course.
But to your point, I do think deliveries has stabilized. I think China's actually shown growth. And you look at the last few quarters, like it's actually better than expected.
I'm curious, because you said you have worst case, base case, best case. What's your worst case scenario for Tesla?
Well, I think worst case, if you go back like 6 months ago, I mean, we were
That felt like worst case, yeah.
It felt like worst case because also given deliveries, given a lot
why does
of
he sound
brand
so like
issues,
so
given what you
relaxed,
saw in
nonchalant?
Europe, and
Six
obviously
months
tax credits
ago.
coming off in terms of the U.S. So we were trending toward a worst case. And look, it spoke to my view where Musk need to be a wartime CEO focused on this core Tesla chapter, which I view as probably the most important chapter ever
There's no volume
for
in
Tesla
Tesla.
and for Musk.
Trying to
So
go
I think
higher.
you now are seeing a different Elon. You're seeing a different company. And look, Julie, I think we sit here a year from now, the stock's at 650, 700.
Different Elon.
What we have, or it's lower than here. In other words, like this is a very
Like a
sort
make
of
or break year.
I'd call it a make or break year, and I think it's going to be make relative to autonomous 30 cities, showing the volume production, not just delaying it. And I think that's why it's such an important year.
Okay, so you mentioned a couple of the goals there. Like, give me the top 3 things that it needs to do this year to push it higher rather than going
Well, one, I mean, you need to be in 30 cities. I mean, when you look at Austin and now what we're seeing in California and some other cities, you need to be in 30 cities by summer.
With the robotaxis.
With robotaxi. So that's one. 2, no safety driver. Now you're starting to see that now in Austin. We saw it firsthand. You need to see the geofence area expand to a point where I believe it gets significantly more than where Waymo is, right? You know, relative to even having a huge head start. And I think the third is volume production. In other words, like you actually need to show volume production.
He's doing that on purpose.
Cybercabs coming
Section
out of
knifing out.
Gigafactory in Austin. Look, I think those are the 3
He doesn't want to
that are
come off as a
extremely
shark.
important
He wants to
to
come
show.
off as a
Okay, is the whole story going to
nice.
take hold this year? No. But it shows that like, those are huge building blocks to what I view as kind of the future of Tesla.
And it's interesting that you say that because, like, Musk has always been good at vision and big pronouncements, but what you're talking about is execution. And there, his record has been less even, or at least less consistent on time, right? He's had a lot of delays in the past. So you're confident, though, that you think he can hit those goals?
Look, it's just like SpaceX. I mean, you're trying to solve the most complex AI, I'd say like some of the biggest problems out there. When you do get to full autonomous, you're dealing with lives, you can't just be 99%. I mean, so you're talking about the margin of error you almost can't even, look at in a spreadsheet. So this is something where it's so important that they do this from a safety perspective and continue to stretch it out step by step. But look, I mean, I think autonomous alone is worth $1 trillion. And I think when you look at robotic, you look at Optimus, you look at this all playing out, that's how I get to, in a bull case, a $3 trillion valuation, at the end of 26.
Okay, I'm curious about something. I know that they've put Grok in some of the Teslas, right, which is the XAI LLM. Have you been in one of them that has Grok? Like, how do you even
why is
you
SPY
talk to it while you're
rocketing
driving?
here?
What do you do with
Yeah,
it?
it's interacting with it, and I think that's
You
something.
just like need somebody to chat
Something
with.
is
You chat with your
flying
Grok
right
in the
now.
car. What do you do with it?
But to some extent, it speaks to like that's going to expand because the whole view is that this is all part of the Musk ecosystem. I mean, Tesla is going to own, I think, a decent-sized piece of XAI. You'll get SpaceX that's going to go public next year, and I think it's possible Tesla will also have ownership, or at least a piece of SpaceX. And then you look at Grok and you look at everything that's happening here. I mean, I think eventually what this is all going to,
Something
there's
is
some
nuclear
holding structure
flying.
that you're probably as a public entity in terms of Tesla, XAI, whatever they own of SpaceX and some other things.
Shit's so
But
weak.
look, I think this is sort of the vision for Elon. He recognizes in this arms race with Altman, with Jensen, with Nadella,
Max
with
7 stocks, someone said.
Palantir and
So everything
else,
running except
this
Tesla
is
because
the
it already
time.
ran
This
Tesla.
is not a time to to watch from the sideline.
Yeah. Okay. I was just talking to Mohammed about how
That was a
he
great
uses. Thank you. How he uses these large language models. Which ones he? I'm curious. Which are you a ChatGPT guy? Are you a Grok guy?
It's up
how
$3 from the bottom. Wow.
Also Gemini, use a little Grok and Perplexity. So I use it for different things. I think each has its strength. Look, I use it every day in terms of like organization, content. It's one where like solving different problems.
SPY,
like
QQQ,
my
hella
travel.
bullish.
So
IWM
depending
too,
on
just
different
not
ways,
Tesla.
like I use them, but it's something where
breaking
this
up.
is just the beginning because you think about
Not
like,
hella bullish, but
autonomous,
like off the
most
cycle, off the
consumers,
floor right now.
The
It's, it
model
went crazy
is
down.
just the
So
beginning. It's going to be like
it's just
robotic.
cycling here. My
It's
goodness,
going to be
was
when
bouncing
you look
in
at
the cycle
autonomous.
crazy.
It's going to be what ultimately will be like an Apple having a true AI store.
That's the truth.
In terms of apps,
Candle
and I think that's
traders
where everything's heading. This
will
is
just hear
the
me say,
year
"Oh
three
wow,
of
oh
an 8 to
shit,
10
oh
year
this is
build-out.
bullish, oh this is
I
literally
know
what
that
it
Brian
is."
Sazzi, I don't know if you know, OpenAI is Yahoo
I'm
Finance
just saying
Company
that
of
because
the
of the
year.
candles too.
And he
We're
was
all
zeroing
humans.
in on the idea that OpenAI might come out with a phone at some point. Do you think that's a competitor for the iPhone, or do you think no?
I wouldn't say necessarily competitive to the iPhone, just like when we've seen other companies try to, go after that. But it does speak to what Saz talking about.
literally
with
spiked
OpenAI,
up
like,
crazy to the
they're
algo
planting
range. So
flags everywhere.
it was
Because
within
what they're essentially
possibilities.
doing is like, look, they're building the stack. I mean, you could
This
take
is
the
the
combo
previous
Amazon,
four previous
Apple,
LOD too.
Google
So
all combined in terms of what they're doing. Look, some have criticized in terms of that, and I think you've seen names like Oracle, obviously,
This is the
that's been
most
an overhang on it.
telling
But I just
sign
continue to view like,
breaking
you're
out.
building out a new economy. Like,
Didn't
you're
actually
talking about
fake out, but
trillions
they
being
went.
spent. For the first time in 30 years, the U.S. is ahead of China when it comes to tech. And that's very important relative to where OpenAI stands and relative to, I think, the U.S. ecosystem in terms of big tech.
There's another stock I want to ask you about, and that is CoreWeave, which, as you know, has sold off pretty sharply.
OpenAI.
Maybe
I
the
love
company
it.
didn't sort of message very well about some delays at one of its
Chinese too.
data centers in terms of construction, or one of the data centers it's leasing, not that it owns. Are you worried about that name, in terms of execution risk, in terms of debt, in terms of the business model?
Yeah, I'm not. I mean, because I look at CoreWeave, Nebius is another one in terms of some of the neo clouds. Look, my view is like you're going to see things quarter to quarter move out. You're going to see some
That's a pretty
blemishes
crazy push.
in this really fourth industrial revolution. But I don't view it as sort of these panic moments. Everyone heads for the elevator.
Every candle is
yelling,
like
"Find
$1.
cloud theater."
Every
I mean,
candle is like 50
I do
cents
think
up.
this is one where it's going to be hyper
Spiking,
focused.
yeah, but like, wow,
the
what is
onus
that?
is on them to execute, communicate it. Because right now, like, look, investors are so sensitive naturally, right? In terms of, like, is this a bubble? Again, like I've told you, I think it's 10:30 p.m. in that AI part that goes to 4 a.m. But these are the responsibilities on the companies to communicate.
Okay, so let me ask you this then. Like, I understand the thesis on the whole AI space, but if there are ones that are maybe a little bit higher risk in terms of messaging and execution, why not avoid that one? Why just not buy the other ones that don't necessarily have that risk.
Tesla's not even going though.
ETF, like we have the 30 AI win.
Is this shit gonna go late? Like I don't know.
The point is like you can't just like bet on one company. I think
flying up.
you have to like whether it's Godfather of AI,
Life up and heading towards green. QQQ showing, but
on
wow.
the software and the
That is
hyperscaler
insane.
side, bet on your Palantirs, the MongoDBs,
Time is
the
still
energy companies, the GE Renewables,
sorry,
and
time
others.
is
So I do
1:40.
think like to that point,
I don't know why I wrote 2.
you have because you have to think about like a barbell approach. If you just bet on one, there's risk, right? In terms of like what could happen with that company. I mean, Oracle being a perfect example. I think when it comes to the best way to play AI revolution, you have to own some chip names, software.
But I guess I'm asking, why not avoid, say, a CoreWeave and an Oracle? Why not just leave them out?
Yeah,
decent hook.
But my to that point is investors be like, oh,
Look at that
you don't
chop like
touch them,
crazy
they're
at the floor
toxic.
too, though.
But then let's say 6-9 months from now,
It's
you're like,
literally
okay,
on this
how
shit
come I didn't
alone.
buy
Yes.
Oracle 180 when now it's 240? So my view is like, if there was structural issues, if I didn't believe in the thesis, if there was something that felt like it was a business model change, then you avoid them. But I don't believe that is. But it speaks to like, look, you need like, you know, strong hands and sort of a, you know, a strong stomach to battle through some of these sort of like waves that we're going to see, the deep seek moments, Liberation Day. I mean, we'll have more in 26, right? But it speaks to my view. Like you'll be wearing a S&P 7,000 hat, an 8,000 hat in New York Stock. Like that's my view. Where we're 2 more years left in the tech bull market. And again, the bears in hibernation mode. They can't see in their spreadsheets. They missed every transformational tech stock the last 20 years. Focus on what could happen.
We'll talk again, Dan. Thank you so much for coming in. Appreciate it.
She's laughing. Damn. Dan Ives talking that shit. Talk that shit, Dan Ives.
Payrolls for August and September
Fucking
were
talk
revised
that shit,
down
Dan
by a
Ives.
total of 33,000 jobs. These figures put new pressure on the Fed to stay the course on rate cuts out of the block next year.
Who thinks
Tesla
Dan Ives
shares
is
still
right?
trying
Who
to close
thinks
at a record
this
high after
bounce
failing
back,
on
this
Monday.
little
The
knife
last record
up?
close for Tesla of $479
We're gonna go
came
back
on
up.
December 17th, 2024. Stock
280.
is still up an electric
Sorry, 250 on
18% in the
IWM and
past
regain
month.
everything.
With the
Who
pop in the
thinks this
stock,
is
Elon
a
Musk's
fake
net worth has climbed
fish
to more
hook?
than
Let's do a
600
poll. This is the
billion
last poll of the day, folks.
Clearly
We have
tough times for
140
Elon.
people here. God
Speaking of
bless
cars,
you
Ford
all.
is taking
Please
a
hit the like
$19.5
button before you head
billion
out today. If
write-down
you're a
on
new
its EV
subscriber or
business,
new watcher,
and it
hit the
scales
subscribe
back its
button
EV
before you do.
ambitions, with people still
What we do on
opting
the
for
channel is
gas-powered
live
cars.
intraday
Normally,
market
I would say this write-down is
index
super embarrassing for a
analysis.
storied company
Use
like
the
Ford.
charts.
However, I will
So,
stop just short of that as GM
thank
is
you very
expected
much.
to
This
report
is
a
the right
big
place for
EV
that. And this is
write-down
the last poll
in the
of the day.
fourth quarter, and the EV market has basically
Poll.
totally collapsed. A black eye for Ford and GM nonetheless.
VWAP
Tracking
flip.
the AI trade, a day after OpenAI secured the Yahoo Finance Company of the Year award, I am looking at AI from a different angle. Sell-offs in 2 very prominent names. CoreWeave lost a shocking $33 billion
Sorry,
in
the
market
fish hook
value in
is
6
real.
weeks alone, and the post-earnings sliding Oracle
Or
ranges on, with
fake
shares plunging
fish hook.
17% in the past 2 sessions. Here on the Opening Bid Roundtable, Chad Morganlander, Washington Crossing Advisors Senior Portfolio Manager, alongside Yahoo Finance Senior Reporter Chris Bauman and S4A. Chad, coming to you.
Fish
jobs
hook
numbers.
is fake.
Has this done anything for you in terms of reinforcing a view that I think the marketplace has, that we need more rate cuts from this Fed, and in January, that's what they have to come on here and deliver?
Well, we definitely don't need rate cuts. The credit spreads are at historic lows that you haven't seen only a couple of times in 35 years. So it's really not essential to cut rates. With that said, we believe the Federal Reserve, though, will do the opposite. They will
could
be
still flip the
extremely
VWAP, but I'm talking
dovish
about,
going
wow.
into 2026.
I mean, number one, if
think
this
I'd
shit
give it
runs
a
up to all the way
50-50
back
toss-up
up,
between
it's
a
fake. But if this shit
1/4%
somehow
rate
fakes
cut,
out to
but
tomorrow,
I do believe that they will
it would
start
be real.
to
This fish hook
message in a
turning
much more dovish tone
to a
as you see
whale
a new
hook.
candidate come and emerge
A
out of the
piglet
White
hook.
House.
Are you not concerned about jobs?
I think
not
everyone's
being
saying
created in
fake.
rapid
6
crypto?
people voted fish hook is fake.
I am
0
concerned that
people
there's a
voted fish hook is real
deceleration of
until
economic
everybody voted
activity.
fish hook is
But
fake, and then now
overall,
one
we
person voting
believe that
fish hook is
there will
real.
be a somewhat of a
Everybody's
fiscal
saying
thrust
fake
in
on the YouTube chat.
2026. And
Maybe
if we
on
get
that
some
alone, they might have flipped
transparency on
VWAP, and then
trade
they
issues,
about to make the shit a
that
very,
too
very
will be a
sharp fish hook,
tailwind
and then see
for
what
the
happens.
economy.
Wow.
I am also concerned, though, that inflation is stubbornly above 3%.
MACD volume is
That
crazy
could be
bullish.
a bit of an issue.
This
if
is
you
the
see a more
3/3 though,
dovish
technically speaking.
Fed
So
chairwoman
even
or
though they're going
chairman
higher and
come
they're
in,
showing
that
higher, that doesn't
response
mean they're
on
gonna
the
go
long end of the
higher. They
curve
did go
may
higher.
be
That's what it
very,
means.
very,
1/3, 2/3, 3/3
concerning.
cooking.
Brooke, anything to get excited about in these
We're
retail
in the
sales numbers that
3/3
also hit?
bullish cycle.
Imagine being able to build an app with your name on it, just by thinking about it.
Bulls are
Meet
coming in
Base
like
44,
wild, man.
a complete AI creation platform.
Like wild.
I mean, retail sales, when you take out the spending on auto
crazy.
parts, on car spending, they did see
You
a
went
pop of about
flip
0.4%.
showing, right?
That
This
was
does
more
not
than what
mean
economists had
this
expected
is
of
real
0.2%.
long-term or medium-term.
But
This just means they're
with
doing it
the
very
purchase of cars,
violently.
we saw
So.
a decline of about 1.6% during the month of October. Then retail sales came in flat.
Wow.
What economists had expected a
Coming in with
0.1% pop. And where we're seeing consumers
A
go, or
fucking
retailers
whale
that you would
hook.
largely
A throat-
expect, it's
throat
food
hook.
and grocery stores, it's general merchandise,
Except Tesla
general
running that
merchandise
much,
stores, it's
but
even
it's still going
furniture
too.
stores. And what they're not spending on are things like building construction and also perhaps more expensive vehicles, it seems, as well.
And as if the economy doesn't need another rate cut, why are Costco pizzas flying off the shelves? You sent me some great research early in the week. I mean, it made me chuckle at first. I mean, but you've been on the pulse of this story literally the whole year.
Yeah, that's right. And that research came from Fundstrat, basically saying that in October for Halloween, they had their record sales of their pizzas at the food court.
674 to
and those pizzas sell
678.
for about $9.95. So
That's
look,
a huge move.
that is an inexpensive pizza
All right,
pie
hook.
when you compare it to other places.
See.
And this really talks about the K-shaped economy
How this
and
shit
the
forms.
fact that people are gravitating towards less expensive products, towards less expensive food, because they have to. And if you take a look at the jobs report, I found two very interesting points. One is multiple job holders was up by 750,000 year over year. That's people that are having more than one job. And also people who, the number of people employed part-time for economic reasons, that increased by more than 900,000 from September. So these are individuals that would want a full-time job, but they can't. They have to have these part-time jobs because perhaps their hours were cut back. So this talks about that K-shaped economy, people that are gravitating more towards less expensive products, those pizzas from Costco. And look, I was just there the other day, and I was looking at those food court prices. I said, it's hard to beat.
IWM back
You can
at
get a soft
250.
drink for still 80 cents here when you
From
compare it to a fast food place,
248.5.
$3.50 for a soft drink.
I know this is serious reporting, Inez. I'm just cracking up here. But no, Inez, hold on. We're going to hear a different message, I'm sure, from the White House at some point today. The economy's rocking. Things are good. We're going to see a manufacturing boom. Well, if that's the case, shouldn't Costco pizza sales be going down?
No, I mean, look, they offer a value, and they aren't, and they are keeping those prices the way they have for years now. And people are, look, you've got the people who are going from the 100,000 household incomes that are going to Walmart, that are shopping at the lower price point places. We've heard this over and over again. Affordability is a problem. This is something that
Tesla
the Trump
ain't flying on this.
administration is
It's
very
just
much
weird.
aware of, and we're seeing it in some of this data.
Chad, let me get back to you here, because while we're sitting here talking about rising sales of Costco pizza, two stocks that are not doing well,
letting
CoreWeave
big
and Oracle,
whales
some of the,
leave at the
really
highest
hottest
prices
or
of
the
Tesla
buggiest names this year.
in a
How
long
concerned are you
time.
about these sell-offs? They're not just 5-10%. I mean, there's some serious routes here in the past few weeks.
Yeah, I mean, we owned Oracle for over 15 years, and we sold it. The reasoning behind that is both of these companies are going to have to take on excessive debt to build out compute. That asset is going to depreciate at a nice clip. Mind you, there's a spot market for H200 chips. So that spot
15
market
fucking years, he
is
said.
going
Wow.
lower. So it is a concern of ours that a lot of leverage and a lot of capital spending is happening in a nonsensical manner. And as that happens, it's going to accelerate
That's some holding power.
perhaps some of the risk, not only within these two companies, but also on the
15
private
years,
credit
wow.
side.
Yeah, JP Morgan sharing your concerns in a note yesterday, Chad, on some of these debt worries. Is Oracle, Chad, a show-me story? Would you be open to buying it back if they come out with a good quarter and some good guidance?
No, because what they've done is they've levered their balance sheet, and they continue to lever their balance sheet. And this moved away from being a software company now to a hyperscaler. But they're creating a situation where you take the total amount of debt in the next 3 years plus leases, where it's just a
I
much
hate Tesla
more
sometimes.
leveraged
Shit
story.
is fucking
And again, the price of
nonsensical.
compute is going to fall
Always when it's
drastically.
at the tippy top.
The other nuance of this
Nonsensical
is inference.
bullshit.
A lot of this inference, the assumption is that it's going to be done at the data center side. If that is not correct and it's done on your cell phone with smaller models, then the price of inference and compute is going to even drop even more substantially. I would avoid these two companies at this moment.
If you live in a New Jersey zip code and have 0 DUIs in the last 5 years, listen carefully.
Inez, let me get back to you here. Even though I'm running the risk of putting our viewers to sleep, I can care less at this point because I need to focus on debt. CoreWeave is a very leveraged play, and you heard Chad talking about the debt that Oracle might take on to fund its AI ambitions. CoreWeave is basically thriving on debt, and the stock is sold off here. How worried should CoreWeave investors continue to be even after this pullback? Because it looks like the concerns about their very operating model
pullback
is
market
starting
just
to
going
increase in a
higher
big
and
way.
higher until I don't know.
Yeah, and I think that that's what the street is starting to
something.
sniff out, and
It's
is talking
definitely
about
cooking.
this high debt that they are using to pay for the AI chips, which they will then lease out. So this is one of the concerns. Of course, you've also had the concern about the data center construction delays, but really those are the high debt is now starting to bubble up as the concern for Wall Street. The margin squeeze is also is a concern, and so when you've got this,
It's definitely
these
cooking.
are sort of the sounding alarm bells, and this is
Cooking
what
pot.
also short sellers sort of
Cooking
like to
some dinner.
pile into when or
Cooking
like
some
to
chicken
point
and
out
egg.
when they start to short these
Dinner
kinds
pot.
of companies. So. This is the poster child for the AI
Look at the back,
infrastructure
the
play,
RSI,
when it
all
comes
the
to
way up
data
north.
centers and when it comes to leasing out, when it
Look
comes
at
to leasing
Tesla
out
right
chips.
now.
And this is the sort of poster child that you have seen now, where its stock is down 60% from its June
No
or
cycle
July high.
pumping on Tesla here.
Brooke, the only warm and fuzzy story I have this morning is Tesla nearing a record high.
Tesla. It's a
Tesla, definitely about a record high here. And what we really know is that this company is really getting lots of momentum around those promising automated taxi rollout that we're seeing there. We know that for the first time they're going to launch in Austin over the next few months without that safety driver within the vehicle as well. And that definitely has the street excited. And if you take a look over the past year, when they began to roll out this
Tesla.
testing in about June, that was when we saw Tesla regain some of the momentum that was lost as Elon Musk
Tesla.
got more and more involved
I
in
agree.
Doge,
Tesla.
that government efficiency
What's Tesla gonna do?
platform as well. And now we're seeing some really robust calls on what exactly this can mean for Tesla. Of course, Dan Ives, a bull on the street when it comes to Tesla, saying that this is a game changer and
Fuck
will
Dan Ives.
define Tesla's future. Of course, these automated taxis really in line with sort of their AI platform, and that's why he sees the most momentum behind this stock is yet to come because of what exactly this can mean. And it's interesting to see this sort of play out in this backdrop where we did see Tesla U.S. sales in November drop to the lowest since January. We also had domestic sales fall about 23%, and yet there's such momentum behind what exactly this automated taxi service could become for Tesla. That really the sign of where exactly investors are looking seems to be more focused on that.
Chad, what a different story.
Look at that. What the
Ford coming out
fuck
here
is
with
that?
a $19.5 billion charge. I mean, that's not chump change. That's a serious write-down. That's very embarrassing for a company like that. Might get a very large charge from GM when it reports in a few weeks, too. And you have Tesla over here, pretty much now an AI-focused company. Yet in their cars, but they are trading at a record high. Like this 3 stories couldn't be more different.
Right.
Disgusting
so
work.
this is the poster child
Look at fucking
of what's going on
IWM,
within the
what
stock
the
market.
fuck is this
Selling
shit?
at 17 times revenues.
Tesla,
and it's an
Tesla.
EV company. And
Tesla.
what I could say about Tesla is that we
Tesla.
believe that the
Tesla.
valuation is
Tesla.
quite elevated. Buyer beware. Because when it comes to autonomous driving,
Wow, we have
Waymo
10
has
people
been
that voted
leading the pack.
Fishhook is
And then
fake.
when you go
One person
overseas,
voted
look
Fishhook
no
is
further
real.
as the
Wow,
Chinese
we're closing
EV
the poll,
companies,
guys.
and they're
That's
quite competitive
crazy.
at about a third
Fish
the
hook?
price of what
That's
the
crazy.
Tesla's
Che, we're
charging.
not voting.
And oh,
We're
by
not
the
counting
way,
your
they
votes. I'm
do
sorry. You
too
can't
have
vote when the
autonomous
candles
driving.
come
So
in
then you
after.
shift the
Sorry.
story, and then you say, well, we're going to be a robot company. And that is also a highly competitive business as well.
Vote
And there's
not
not
counted.
going to be a clear winner for many decades when it comes to the robotics.
IWME.
And as I hope at some point Tesla takes their driverless cars and delivers us Costco pizzas.
Shit is
and crushes
crazy.
a company like Domino's. I mean, you see it coming, Inez, right?
IWM is crazy.
Oh, I see it coming completely, and I think that it's going to absolutely
IWM
change our
is
lives when we
crazy
don't have to be
today.
behind the wheel ourselves driving. Look, but
what is this yellow
some of the
line?
commentary
What the
that
fuck is
I've
this
seen
red
about
line?
this is really that AI flywheel when it comes to
Deleting this
Tesla,
shit.
going from
Tesla,
robo-taxis,
Tesla.
AI chips to the
She said
humanoid
Tesla,
robots,
Tesla.
and all of it feeding into the one feeding
Tesla.
into the other. When it comes to data, when it comes to scalability, when it comes to everything that has to do with how these systems operate, but all under one umbrella.
What the fuck
and
is this
you've got to
shit?
hand it to Elon Musk. I mean, this is why he received the pay package that he received this year, because this is what investors want to see, being able to have that AI flywheel with this kind of company.
Shout out to our amazing social media team. Let's get a clip of Inez here talking about driverless cars delivering Costco pizzas. I need to see that on Instagram. A big thank you to our opening bid roundtable. Y'all crush it here. Really appreciate it. Straight ahead, I am drilling into the future for oil giant Phillips 66
It's a whale hook.
with the CFO as
This
it
shit's
wraps
a
up
whale
a
hook.
big year. We'll be right
Whether
back.
this shit's whale hook is a real or not, I'm not getting.
Okay, guys, your car insurance company does not want you to know you can do this.
Copyrighted by their
Chunk
music.
of your monthly payment isn't even for insurance.
Impacting the business of energy.
The major impact.
We're not watching trash shit either, though.
Diane, how would you describe this? Is it abnormal? Is it funky? Are we just in a waiting period of transition? What do you say is going on here? Diane, how would you describe this? Is it abnormal? Is it funky? Are we just in a waiting period of transition? What do you say is going on here?
Well, it certainly is an early chill for the holiday season, but
Give 'em
I think
confusion.
consumers
Give 'em
are still
confusion.
spending, which
Time
is
is
ironic.
two.
The
Let's
core
see what happens with
retail
this whale
sales,
hook.
which goes into the GDP calculation for the retail sales data,
Whale hook.
actually was up 0.9%, so much better
Whale
than
hook
that headline
down or
figure
whale hook
suggested.
up, man?
And data for September and August were revised up. So we came into this with consumers holding on, even though the labor market shows no change basically in payroll since April of this year. That's a long time to be stagnant. And we're seeing
area
that
of
unemployment
conflict
rate,
and
like
interest.
Steve said, some of
That's
it
why we're
was
doing this
spillover
right now.
effects from the government shutdown. We had more people
Area of
entering the labor
conflict and
force. We
interest.
also
Went down
more people
using
having
the
to go
downward
on to
trend
temporary
line, and it's
layoffs.
also bouncing
That was
because we're in
collateral
box right
damage
now.
from the government shutdown.
Bouncing from
We
the
also have this
bottom,
late holiday
middle
season.
of the
It is all
box to
compressed
the top.
once again into the month of
Now that we
December.
are- now
Last
that we
year,
went
that
to the top
resulted
on the
in the
ES,
strongest month
we're
for
now
job
doing
gains
to the
of the
middle top,
entire
we're deciding
year
what to do.
in the month of December, which I would not be surprised to see yet again this year. We
Time is
also
two.
know going into next year, not only do we have those rate cuts by the Fed, but we have expansions to tax cuts that were retroactive to the beginning of 2025. That will add double-digit gains to tax refunds, and we know consumers treat those as if they're windfall gains, and that could make the inflation data look even stickier.
A lot of people are talking more positively about consumer discretionary stocks in some areas like that for that reason, Diane. But it's interesting what you said, and this uncertainty is reflected in the divide at the Fed, where you have those who want lower rates, you have those who are worried, we should be here. And to that point, in the flash
little
point I just
fishies
wanted,
want
showing folks
food!
price hikes.
Little fish
know,
foods!
I know some accuse this Fed of having political bias towards
That's what the news is saying.
hawkishness. But
Little
I
fishies are
sympathize
bitching
with
about
the fact
fish
that
food.
we came out of this inflationary period that
Give me
was
fish food,
horrible,
fish food.
and, arguably their fault. They want to finish the job. So when we see these data points, does it suggest to you that job is finished yet? And what should they do about that? You have a slowing, kind of churning labor market and stickiness on the price side.
Yeah, here we have a labor market with a one-legged stool. The healthcare and social assistance is driving all employment gains in the private sector. That's nothing to be excited about. I think we'll see more broad-based gains in the months to come, but will they stick? What I'm also worried about, though, is that even if we get a little improvement in the labor market, we're still going to have stickier inflation, and I think that is something.
Fishies,
listen,
fishies,
the
fishies,
level of
fishies,
prices
fishies,
is what
fishies.
consumers care about.
Whale hooking,
I was
whale
at the
hooking.
same. I saw Steve.
Which way?
Steve
Whale
hooking. But one of the
that
issues
break
that
even on
came
Tesla
up was,
almost
that we're
fucking stupid
normalizing
as shit.
inflation. We're 5 years in now,
Fucking fish
and
hook,
we've
man.
seen inflation hikes. And even though you're supposed to look through the tariff-related increases in inflation, first of all, they're not all at once. They're coming sequentially, which is mimicking inflation and further normalizing inflation. At the same time, there's spillover in the service sector, which Austin pointed to as well. And I think it's important when you look at the hawks, they're not of just one political ilk or not. What we're seeing out there is a lot of people are concerned about the stickiness of inflation and the fact that the Fed has not been able to achieve price stability really in many years now.
They're trying to give us Kevin Hassett as
Fed
Fed
worry
chair.
about
Oh no,
because
it's
along
the
with
news.
uncertainty, it is also normalizing inflation.
Blame
and it gives us this
Jerome
stagflationary
Powell.
nature, even though the overall economy
Blame
adds up on
Daddy
paper to
Powell
look
when he
better
did
than
us
it feels.
nice. That's messed up. Ay, ay, ay. What is this?
Have you heard about pop-on siding?
White House press secretary speaks to the media. What the shit? What the shit? What the fuck is this about? It's our girl Caroline. Everyone get ready to say, "Hello, Caroline. Good afternoon," or something. That's what she always says. Good afternoon. Good morning, everybody. Good morning, Caroline.
Get started, given that she's just doing her hit right now.
There's our coming.
15 minutes.
Lower.
Okay, that's fine. Yeah.
We have. Ten people saying fish hook is fake. And we had one person vote fish hook is real before the candles came in. What the shit? Good afternoon, everybody. Good afternoon, everyone. I sound like Herbert from Family Guy, that guy. Good afternoon. Good afternoon, everybody. Market wants to go pull back.
Testing 1, 2, 3.
Time is 2:05. Fish hook. I mean, the whale hook is pulling back, turning into a regular. Turning into a mega whale hook, going the other way now because the market is literally opposite day. Lol. I'm kidding. IWM went to go touch the bottom of the downward trend line that it broke down today, and it is now deciding what to do. Lol. They are cycling. Crazy. Fuck me. Holy shit. This is crazy, bro. I'm not even playing IWM right now. It's fine, but this is crazy. Look at SPY and IWM. Look at fucking Tesla. Like, it's so crazy. Look, showing green and then red. I literally said when we were here that what? The game is green, red, green, red, green, red on QQQ, right? You can't fucking make this shit up. They're doing this shit to the end of the day, too. Oh, my lord. I literally said what? Guys, who remembers? The realest people of my life should remember. What did I say down here, right? I said they might go higher. They might do something. But what? Right? There's a lot of calls trapped here. 0 DT, 1 DT into this week, right? You have to think about it like that. What did I say? It takes massive amounts of money. It takes real power to go north or to what? At the minimum. To stay up here, right? The realest people of my live stream remember. Not people that come in and watch, right? People are here for the White House live stream, but I'm literally just saying The realest people of my live stream remember the things I say, because those are what I'm thinking to myself, deductions, and literally it's literally trying to do what it is. We get the fish hook is trying, we get the extending no cycle pumping, right? But at some point something turns into something else, right? And that is literally something else is what? QQQ, red green game. And also a lot of people are trapped up there into this week, tomorrow, day after tomorrow, today. They don't want to relieve them yet. They don't want to relieve them so fucking much. Why? There's so many people from yesterday and the day before, and there's a fuck ton of bears too. Yeah, sure, but they get filled. And now, maybe they pop tomorrow, but today, or I don't know. But right now, they pulled the fucking shit back crazy. It could have been a real nice ride up, sure, but I mean, in the 3/3, it got risky as shit, right? Real rice night down. At some point, it gets risky as shit. 1/3, 2/3, 3/3 kicking in. So market is cycling. Market cycling at its finest. All right, with Caroline coming up. Good afternoon, everybody. The market is trapping after cycles, right? This is why I said earlier in the day, the day is kind of nice and smooth and unidirectional and also slow and forgiving, because it's doing the move up and then at the greedy point trapping. It's doing the move down at the greedy point trapping. Doing the move up at the greedy point trapping, right? So, I mean, that's what I'm feeling today. That's why I said what I said earlier, if you get what I'm saying, because I feel like the realest people understand what I'm saying. Like, the market's going fair, up, down, fair, then fair, and then fair, and then fair, and then even in this small cycle testing 1055, fair, because the market going up, down, like 6 or 7 times here. Like, bro, it's literally giving people the chance to take whatever the hell, or take profit, or lose, or, you know, take loss, or whatever the fuck it is deciding. So, market has been absolutely fair today. Absolutely fair if somebody was a deductor and they were able to sit through every single setup and literally see through every single thing that is going on, because that's what the market does every day. That's literally what the market wants every day. They want smart money deductors too, basically. Be with the wind direction, trend direction with other smart money deductors, hypothetically speaking, in the open market is what I'm trying to say. So why there are participants in the market, it's just not going up or down on purpose. It's doing it because someone out there is doing things together with other things together. But it is doing things all together. Fish hook is fake as fuck. Whale hook is deciding whether to be the whale hook is deciding whether to be fake or not. Wow. This is algo arranging at its finest, I think. I'm pretty sure this bounce and rejection and the overextension bounce is only possible because all these algo ranges. Oh my god, it's crazy. All the algo ranges from earlier in the morning.
Hey, New Jersey.
Look at all these algo. You see all these algo ranges, right? You guys cannot tell me this shit is fucking coincidence. It's not.
Coverage for prescriptions,
All these algo ranges are actually.
8 in 10 qualify for financial help to lower costs. Free local
being
assistance is
used as a
available.
setup
Enroll
into the
now
next
at
future cycle.
getcovered.nj.gov.
Holy crap. Now this is LOD, hope LOD floor testing, man. 205. Time is 2:10. Look at this shit. This game is literally a fucking 1/3, 2/3 early adapters and early deductors versus the 3/3 retail amateur fucking chasers. Waking up fucking cycles, bro. Oh my god. Going up, going down. Like, it doesn't even fucking matter. It's all about fucking human greed setup cycle analysis at its finest. Right? If 205 breaks lower, right, their cycle extends and they want to go test the LOD. If they go higher here or they chop here, they could chop here at any of these algo ranges right here at 670, 690 or 670, 641. If they don't, I mean, they could. It looks like they want to go south, to be honest. We'll see. Man, you look at this shit, it's fucking a whale hook, bro. A whale hook up or down, nobody knows, but it literally whale hooked all the puts, and now it's whale hooking all the fucking calls. It's a mega hook. A hook up and hook down. Every single put down here burnt. Every single call up here burnt on what setup? What setup are we talking about? IWM setup and IWM setup alone right now. Today. What did I say in the market update video, right? Those who watched the market update video, I said people are not going to pay attention to the IWM, and IWM has been important. And it is. It literally is. And it will be. So, might as well pay attention to it if the market cares about it. Let's get the thumbs up on the live stream up, folks. Thank you so much. Don't make me sing. God bless you all. We are at 110 likes. Let's push it up to 135 likes. Thank you all very much. No, seriously. That is a fucking amazing thing. Hit the like. Hit the like. On the live stream. This is not my fault. My computer's great. It's fucking dumbass live stream on AP is literally giving us alien interventions. Alright? Alien interruptions. It is not my fault. Live stream is fine. My internet connection is good. Today is amazing. This is nasty work, but also beautiful work at the same time. Imagine being a deductor and you're able to go up and down on this shit alone. This is fucking beautiful Christmas tree. You know what I mean? This is literally Merry Christmas. Like, look, I'm gonna fucking. Where's the Christmas tree, man? I'm not even sure, bro. I'm not even joking. Where the fuck is the Christmas tree, man? Just look at this shit. Up and down. What the fuck has IWM has been doing all fucking last week? Christmas tree, Christmas tree, Christmas tree, Christmas tree. Merry Christmas. What are we in? A big ass Christmas tree. Merry Christmas, everybody. Merry Christmas. Right? This is a Christmas tree. It ain't even Christmas. It's about to be Christmas. Right? People are like, where's the Santa Claus? Where's the Santa Claus rally? Oh, it's December. Oh, it's Christmas. Where's the Christmas fair? Shit, this is motherfucking Christmas, right? We got Grinch Santa, right? You know how they got Grinch at McDonald's, the green guy, Grinch meal, Grinch dude. Like, we got Grinch Santa right now, and then we might get Santa Claus during actually Santa Claus. So we had a turkey rally. Now we're in the Grinch phase of Santa. We're in the Grinch phase of Christmas. Merry Christmas, right? Merry Christmas, and we might have Christmas. Look at this shit on IWM. This is literally Merry Christmas, like, bro, on setup alone. What the fuck is this? Pure fucking and then down with no fucking cycle. Absolutely, just pump, dump. Oh my god, it's crazy, man. Oh my god. Oh my god, it's crazy. Look at this shit, bro. Caroline, we need you. Please. The market needs Caroline. Caroline, look, I'm gonna look at this shit, right? I'm gonna delete everything. Please tell me, right? If you look at candles alone, this is why people are like, oh, bearish, bullish, bullish, bearish, bearish, bullish. Oh, I think it's gonna go here and do this, because they have no setup. What is setup? Everything. God did. God bless. This is an amazing Christmas. Setup, man. What is setup? I don't know. Things that people don't want to do, I guess. That's setup. I'll fucking do it. I love it. I'll do it for myself, so. I don't know what it is. I find this shit fun as fuck. I find this shit very fucking entertaining, and I find this shit very, very, very interesting. I think people don't. A lot of people, they just care about good day or bad day, which is fine. But I mean, honestly, bro, I get the fucking entertainment and the joy of being right and in money from being right, not because I'm green or fucking I'm red or because I'm faking or I'm doing this and scamming and bullshit. Like I don't give a fuck. It's literally lying ass bitches scamming, talking about candle, this go there, and then it happens, and then they're like, oh, look at that, or it's literally deductors living in the reality, living in the struggle reality world, doing what they do to what they need to do to find the trend in the real direction. I'm honestly hoping kind of on Tesla, but honestly, I don't give a fuck. It is until next Friday, so I'm chilling. This shit. Hi, Caroline.
A couple of things on that. First of all, as you is going to be giving a joint, not a joint address, an address to the nation tomorrow night, live. I know you guys will all be tuning in. It's going to be a really good just in the Oval Office with the president discussing it. He's going to talk a lot about the accomplishments over the past 11 months. All he continues to plan to do to continue delivering for the American people over the next 3 years. As for the Vanity Fair article, Michael, I'll take your question directly. This example of disingenuous reporting, where the chief of staff.
Bro, people are saying terrible quality in chat.
This article was the. And we see a lot of this.
Oh, fuck.
Will leave out important content.
Caroline, Levitt, live. Maybe there's another live stream. Cause that's crazy. No.
My work is easy because I use ClickUp. Here's how I keep track of all my tasks. I start by brain dumping everything I need to get done in a.
We can't hear you, Caroline. God. Look at her face.
So much because of chief of staff.
People want to hear you, Caroline. God damn it. Stop it. What the fuck? We got fucking straight up bamboozled. What the beep? Bruh. 247 maybe incoming? I'm kidding. IWM crazy. IWM crazy. Oh my god. Alright, this is seriously. Merry Christmas. Gave you my heart. Very next day, you gave it away. Insane. This is 2:20. 1 hour before everything expires. Merry Christmas. Oh shit. Oh my lord. Man, last week was IWM all week, and people don't care. So I guess that's it. We got bamboozled on the live stream. That's it. I don't know what the hell she said, what the hell that was about, but great. Thank you. Next.
Expects more dispersion in the Mag 7 stocks next year, with the AI trade moving from the picks and shovels to the adopters. What does she mean by that? Lizanne Saunders is the chief investment strategist at Charles Schwab. Lizanne, it's great to see you. Just straight off the top of your head, what do you foresee for 2026?
I think some of this broadening out is likely to persist, maybe not in a linear fashion, but in fits and starts. Over the past 6 months, it's only 17% of the constituents within the S&P have outperformed the index itself, but over the past month, that's up to 61%. So that's one way to measure breadth. You see it in small caps, which of the three major indexes, Russell 2000, S&P, and NASDAQ, small caps have the best improvement in breadth relative to both 50-day and 200-day moving averages. I think there'll be bouts still where you come back into those prior leaders, but I do think that there is money looking for more diverse places to go.
Right, and do you, look, I think most people would say, well, good. You know, they've had their run. It's time for the rest of the economy to start clicking and performing. And yet the flash PMI data this morning wasn't that great. So hopefully this narrative doesn't stumble. I mean, the market today, you've got stocks under pressure and yields down. That feels like kind of a classic slowing economy, risk off kind of backdrop.
I do think the economy is showing signs of slowing, and I would expect that to persist in 2026. So far, the trajectory of earnings has not weakened commensurate with some of the data that we're seeing at the macro level. And I think that is really important as we go into 2026. We stopped just aggressive multiple expansion in about August of this year. The April to August period was just a rip higher in multiples. You had rising earnings growth and expectations thereof at the same time, but multiple expansion went well beyond that. Since August, multiple has been kind of flat in sort of a choppy pattern, but earnings have continued to accelerate. So earnings, for now anyway, are doing more of the market's heavy lifting. But you're right, that is the thing that has to hang in there for another strong year in 2026.
Yeah, small caps, what's your view on them? More people are turning positive on them. They've had a couple of strong weeks lately, but still this is the space would be under pressure if we have, you know, bad earnings quality, economic slowdown, persistent kind of inflation stickiness or higher interest rates than expected. What do you think is going to go on here?
So I totally agree with that, Kelly. I think the key is staying up in profitability, particularly since the April 8th closing low, the Russell 2000's constituents that are unprofitable, and that is about 40% of the index. Their stocks are up 62% since the April 8th closing low. That's in contrast to the profitable stocks up, let's see my notes, 29%. But recently, you're seeing more of an acceleration in those profitable stocks. So what we've been saying is you want to fade the unprofitable, lower quality segments within small caps, but lean into the higher quality, profitable segments.
Throw it as hard as you want. Go on. Watching it zip away.
Tesla shares are flattish after nearing an all-time closing high yesterday, as Elon Musk says Tesla shares are flattish after nearing an all-time closing high yesterday, as Elon Musk says Tesla is now testing out driverless robo-taxis, and as Ford pulls back on its EV ambitions. Is Tesla pulling forward 2026 gains here, or is there still plenty of juice left in the stock? Let's ask our trader, Victoria Green, is CIO of G Squared Private Wealth and a CNBC contributor. Dan Ives, I don't have to tell you, Victoria, very bullish, sees it hitting another $1 trillion or $2 trillion in market cap next year. What do you foresee for the stock?
I'm not quite as bullish as Dan Ives, but like I said, it's very difficult to be as bullish as Dan Ives in this day and age in technology because he's an uber bull here. But I do like Tesla. Now, you got to be willing to take some lumps with Tesla. He does always get there, but it often takes him a lot longer to get where he wants to go. But this is the dream, right? If you actually get the cyber cab going, you get full self-driving, autonomous driving, robo-taxis, this is what Tesla is supposed to be expensive for. This is why Tesla doesn't driving, robo-taxis. This is what Tesla is supposed to be expensive for. This is why Tesla doesn't trade like a traditional automotive company. You need to be wary that we probably are going to see falling EVs, right? We're probably going to see sales plummet in Europe. We're expecting lower sales in the US, but this is what Tesla was made for. So as long as you believe in the vision, you're willing to take some lumps next year. We think the stock could push up in the above 500, 550 range, maybe even hit that 600. I'm not sure we'll hit it next year because rollout's likely a little bit slower. And that cybercab it's still a model. It hasn't been approved yet, but it's there. All the pieces are there to put together for the next leg up over the next couple of years.
So you share the enthusiasm. Those would be pretty significant gains if we get them. The flip side of that, Victoria, I'm curious what you think about Uber, because I could see a more value-minded investor seeing an opportunity here. Shares are down 13% in the past 6 days. Under pressure again after Tesla said they're testing out those robo-taxis without safety drivers. So it's a question of opportunity to get into a stock like Uber, or is there this massive existential threat looming to its business model?
Sure. Uber, I see as a hold here. I think they have such an extensive platform user base and loyalty that they do have a lot of intellectual property. And they have integrated in with ChatGTP. So you can order Uber from ChatGTP as long as you have the two linked. And so I think they're aware AI is coming, technology is coming, and robo-taxi is coming. Might actually help them with their margins if they're not having to pay drivers. Could Uber be the platform you summon all types of robo-taxis, from a Waymo to a Tesla? So as long as they stay as the platform and the market share leader in ride share hailing, which they are, and they continue to grow their verticals with Uber Eats, I see this as a defensible moat. And so, yeah, you see some profit taking right now after a strong year, but they could be a beneficiary if it does help lower costs. And it may take a while for, say, a Waymo or a Cybercab to develop the technology to sell these riderless rides to the general public.
Welcome to the ARK Venture Fund.
To date, to get very good venture exposure,
investors getting a check on the economy today. Payrolls rose by 64,000 in November. That was better than expected. And Treasury Secretary Scott Bessent says that's another sign that the economy is stabilizing.
We should think that 2025 was setting the table. 2026 is going to be a bountiful year. We have very good momentum coming into next year. The economy is broadening out. You could see it. Other sectors of the stock market away from big tech are doing very well. Let the economy do its thing, because the one big beautiful bill, there are so many parts to that are kicking in. We've had 15% uptake in capital expenditure. Capital expenditure historically always leads to job growth.
Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, and Brian Bremberg. With us for the hour, Slate Stone Wealth Chief Market Strategist Kenny Polcari. Great to see you. So these numbers are coming in a very unusual package. For the first time in nearly 80 years, the Labor Department is releasing jobs data without a full unemployment rate, thanks to the government shutdown. So more uncertainty in a very uncertain time for the economy. This report is also backward looking, landing at a moment when workers and businesses are still feeling the squeeze by higher borrowing costs. But Wall Street, it remains upbeat. A new Bank of America poll shows investor optimism surging into 2026, with money managers betting the economy avoids a hard landing altogether. So there's a split screen. Jobs are still growing, shoppers still spending, investors feeling bullish, but with major gaps in the data, could this economy be walking a tightrope into the new year? And it's a good question, but before we get there, Kenny, I just want to get your read on these backward-looking job numbers. We got them delayed as a result of the government shutdown. You saw a big decrease in government hiring, which is what the administration is touting because it's trimming the fat. Right. But still, this number better than expected isn't a particularly robust, strong number.
No, but it's certainly better than the expectation, and it's certainly better than what we were prepared for last week when ADP came out with a negative number. So it's positive in that sense, right? And you take that, which I think is better. I agree with Scott Bessent. We're going into a better year in 26, but it's the unemployment number that I think people are going to focus on because it ticked up. But nobody should really be surprised because we've been talking about that number ticking up, and we went 2 months without a report. So it seems a little bit jarring going from 4.4 to 4.6. But remember, we had a couple of months in there where we didn't have a reading, yet we had those job losses, which we knew were coming. So I'm not really concerned about that number.
Okay, so I'm thinking about this and saying if the number is good, better than expected, the market tends to not love that because then it would mean that Powell wouldn't be as inclined to cut, which could be why you're in the negative, or the market could be looking at it and reading the news as regular news without having to invert it and just saying it wasn't a great number.
Well, and it could be a bunch of those things. But look, I don't think the Fed is cutting rates now, at least until May, when we get the new Fed chair. I don't think they're going to cut in January unless this data suddenly goes off the edge in the next 6 weeks, which I don't think it's going to do, right? So I think the market is fine where it is. I think it's going to adjust. Look, we talked about maybe the market being a little bit ahead of itself and this pullback and this need to churn, which is exactly what I see happening. I don't see a disaster by any stretch. While we see the market down a little bit today, I don't see it as a disaster. I see it as kind of a churn as we digest this data and get ready to move.
Okay, you usually like to dig in. What do you have?
I'm digging in. Did you see my screen? I got all sorts of charts going on.
Is your computer turned on?
You
Come on,
are giving Taylor a run for her money there with your data.
That's right. So that's because the computer's in your head.
Mine's a shield for my stuff. Just saying. Go ahead.
Okay, so Kenny, unemployment rate, I agree, ticked up 4.6%. Right. But the labor force went up by over 300,000 people, okay? And the participation rate went up. So what does that tell you? It tells you people are looking for jobs. I like that. It doesn't mean they have a job. They're looking for jobs. And this year, according to the BLS, you've had a reduction in federal government employees of 271,000. Okay?
Right.
So what does that tell you? You've got people, what's the mantra? Deleverage the public sector, re-leverage the private sector.
Right, and look at what happened.
That's what's happening here.
But look what happened in the JOLTS report last week. It showed that there are employees looking for employees.
Exactly.
So I take that as a positive.
So I think we talked about the split screen coming in here, but to me it's...
Here's what a whole home water filtration system costs,
It's
including
pretty crazy.
installation. Tap below to check pricing.
A lot of the screens on one side. You've got spending, you've got hiring, you've got people looking, you've got investors investing. Is it all perfect? No. But it's pretty good, and I think let's
there
all
could be a
assume
possible good short moment here,
of the
but
economy
I am not doing
could
shit
really
right now.
start to wear thin
waiting
next
on
year,
Tesla.
particularly when some of the big, beautiful law stuff starts to hit. So I like this
10
report
minutes
today.
up.
This report tells me capitalism is happening, which is what I want to see.
Right.
Okay, and also
This shit is crazy,
you've
bro.
got this
How it's
Bank of
moving.
America
Not
poll
gonna
saying
lie,
that
it's
investors
moving
are
fucking
optimistic going
absolute
into
wild.
2026. So I'm not sure how much attention they are paying to this backward-looking data. They want to see what Brian is talking about, the big beautiful law come into fruition, and all the other spokes of the Trump economic wheel that supposedly will benefit them.
Look at IWM just coming up, fucking making up whatever the fuck cycle needs to make up to catch up.
J.D. Vance, I think, is
Oh
trying
my
to,
God.
when he was out speaking in Pennsylvania, saying that this will be one of the best tax seasons ever. I think trying to get people to hold on until the next couple months. But there's actually some interesting, more real-time data, and I come with lots of good news for you, Jackie, in this holiday cheer.
I like good news.
Despite taking an average of 15 weeks to find a new job, new openings are picking up. This is from Indeed, the job site. Job openings rose sharply in November. The net employment outlook by Manpower shows that net hiring, so hiring minus firing, strengths for tech, 35%, financials and real estate, and healthcare. LinkedIn just came out with the workforce report. Hiring rate is down from a year ago, but has been picking up since last month. So that bottoming out of October into November, indeed, is being confirmed by other employers who were out there. Retail sales, the control group, which factors into GDP, up 0.8% after a decline in the month-over-month numbers in September. And maybe this is also good news. Women's prime age participation, 25 to aged 54, near a record. Listen to this. This is the productivity miracle that Kevin Hassett keeps alluding to. Women, especially mothers of young children, entered the workforce at record levels, 83.8% overall for prime age labor for both men and women, near 20-year highs. So to Brian's point, people are coming back into the workforce.
Did you say men and women?
What kind of bullshit are they fucking talking about now, man?
Today, Ether dropped.
And speaking of risks, here comes a new one for the AI trade from Washington. Deirdre Bosa has more in today's Tech Check. Hi, Deirdre.
So, Kelly, this is why it's a risk. It's because political pressure can raise costs very quickly. States, they can require more upfront. They can lock in longer power contracts, even create special rate classes that shift more of the cost back to big tech. And that pressure is building. 3 Democratic senators, Elizabeth Warren, Chris Van Hollen, and Richard Blumenthal, they sent letters this morning to Google, Amazon, Microsoft, Meta, and 3 data center companies. They say that AI data centers are forcing billions in grid upgrades, and households, not big tech, are footing the bill. So in doing so, they're tying AI infrastructure costs directly to inflation, which is still the most sensitive voter issue. And that is why this is a very different kind of tech backlash. Antitrust fights, which we're now well accustomed to, they're about market power issues that played out in courts and took years to resolve. This one hits a lot faster. It runs through state politics, local regulators, and it can raise costs before any law ever even changes, making it a real risk for the AI trade and one that may be overlooked. The market at large has in the past been complacent on tech regulatory risk, but this time, Kelly, could be different because it's playing out at the local level.
I think they should give us all dividends to help pay for our electricity bill. I don't know why we were talking about Indiana. There must have been some skirmish in there about this the other day.
It's on a fucking
2.8 million households. You give everyone $1,000. That's $3 billion.
All bears,
that's nothing for a big tech company. I mean, it could prevent trillions in headaches for them down the road.
Right, and you don't think that would sort of...
It's so crazy. Oh my God.
Vigilantes.
Can't even fucking keep up with it all. Like, I'm getting hungry as shit. I need to go eat a burger.
I mean, it's not 30.
It's not that much for them.
300, you know?
Yeah.
But I think you're putting your finger on the most important issue here politically. If electricity bills continue to go higher and there are problems because of data centers, 100% you're going to get the public pushback and the political pushback.
Right, and it's not just Washington at this point either. There's, a suburb in Arizona that, voted against or decided it was unanimous, the local politicians there, in building up a data center. I think you're just going to see more of these stories come up.
Yeah, agreed. Deirdre, for now, thanks very much. Deirdre Bosa. The Kalshi prediction markets agree, by the way, with Hassett now back ahead of former Fed Governor Kevin Warsh, who took the lead, I think, just this week. Hassett leading the odds today with a 53% chance of getting the nod, Warsh down to 34. While the market debates which Kevin could win the horse race, we wanted to ask what would be the real difference between them as far as the market can discern. Let's bring in Dan Clifton. He's head of policy research at Strategas. Dan, the task goes to you. I'm sure everyone is asking you about this as well. Is Hassett viewed as more dovish on the margin, and is the market kind of responding? I wonder, even literally the 10-year dropping a bit today, is that because his odds seem to be down in the prediction markets as well?
Well, first, Kelly, thank you for having me on. I think the conversation we're going to have on the Fed chair is very much related to the conversation you just had with Steve and Diane about what's going to happen on economic growth next year. And we do anticipate that GDP will accelerate. We have $400 billion of fiscal policy. Fed's cutting rates. It's expanding its balance sheet. I mean, this is shock and awe fiscal and monetary policy coming for 2026. And what we know is that when you go from the first year of a president to the midterm year, you get accelerating growth, you get rising bond yields, and you tend to get a much more defensive and declining stock market in mid-year. So all the ingredients are there. But what happens is once you get that growth, the Fed has to pull back on the punch bowl. And that means that you're going to have the new Fed chair appointed by President Trump facing accelerating growth and likely going to have to put the brakes on this. You can just see how this is going to play out mid-year. And the good news is that you have two very qualified candidates. You have Kevin Warsh And you have Kevin Hassett. I think even if you add Waller in, who I think is the best central banker in the world right now, you have three good choices that are on the table at this point. Both of these candidates, Kelly, both Kevins, believe that we're in a productivity boom, and that boom is going to allow the Fed funds rate to go lower. And if you look at some of the employment data that came out today, the higher unemployment, wage growth down, that may argue that the neutral rate has to go a little bit lower rather than just being right around that neutral rate. Maybe you got to be a bit stimulative here. And the reason is that we're in an air pocket. And that air pocket is that we're getting all the spinach from the tariffs without that fiscal policy sterilization. But as you go into 26, you will start to get that sterilization happening. That timing difference is making data look weaker. And it's also showing that the Fed probably should have been cutting rates a little bit sooner. So I tend to think that the difference between those two are going to be more on the balance sheet than it will be on the rates. But maybe, it's like one rate cut over another. It's really not going to make a bigger difference on the rate side. But it's the balance sheet where you'll start to see some of those differences show up.
For what it's worth, Nancy Lazare had a big note over the weekend where she details the productivity boom and agrees that we could be in the middle of one. We've had strong data for several years now, so you can certainly make an economic case for that. What do you think, then, are there differences on the balance sheet?
Yeah, so Kevin Horst has been very hawkish on the balance sheet. Doesn't believe the Fed balance sheet should be where it is. You just heard from your other guests, there might be a case for that. But what's happened is that this is intricately linked to financial regulation. When we regulated the financial sector, we closed off a lot of bank reserves. So right now, there's not enough bank reserves in the system.
Right.
It's why the Federal Reserve is expanding its balance sheet. This is not a one-way case. What the Fed is doing right now is that they are expanding their balance sheet to fill in the gap until we get to financial deregulation in 2026.
It's not too out of the way, you figured, until you found a rental car with airport pickup on Kayak.
I don't know how much QQQ moved today. Can someone do the math? How much did QQQ move today up and down? Somebody do the math, please, and let us know how much QQQ moved today. Thank you very much. This shit is so fucking goddamn moving up and
First
down.
guest today might agree with that. He's been saying on this show for a while to diversify beyond just big tech. So let's see what he has to say about that, what to buy, what to own next year. Joe Tanius is Chief Investment Strategist at Northern Trust, and he joins us now. I know that's not you. You're not Bank of America, but
I'm not surprised.
Okay. Are you seeing similar types of data at Northern Trust?
We are. I think there's genuinely a lot of excitement about the opportunity ahead in 2026. I mean, you can just rattle off the list. You have a meaningful amount of fiscal stimulus as a result of the One Big Beautiful Bill Act. You have more accommodative monetary policy. There's a lot of discussion and hems and haws about the Fed and what they're going to do. But by and large, we know that we're going to see more accommodative monetary policy. You have earnings which are expected to grow at a double-digit rate, a decent clip. And you're also expecting to see a broadening out, if you will, so more participation. It's not just going to be a narrow market like we saw in the earlier
But where is the wall of worry, Joe? The whole point is if everybody sees it that way, and now we have it so the fund manager survey is a classic fading sign, don't you think? So what does it tell you to see the excitement level this high?
Well, I think there's a lot to be nervous about. There's a lot to be worried about. And certainly you can talk about the client questions that we've been getting. There's a lot of anxiety about a bubble, about what's happening with tech and what's happening with AI, a lot of this concentration. Of course, inflation, just barely, touched on it. But the reality is inflation is likely to move higher, at least in the earlier part of the year. And that may certainly pour a little bit of cold water on hopes that the Fed is going to come out and cut monetary policy perhaps more aggressively than we'd like. So make no mistake, there are a lot of things to be concerned about. But I think about where we are today relative to where we were just a few months ago, and I think the risks have come down materially.
It feels like the biggest, and I'm using fear, air quotes, if you're on the radio, because the biggest fear is how much money people have made the last 3 years, Joe.
It's insane.
There's hundreds of thousands of 401k millionaires, folks. We hope you are one of them out there. And everybody that I talk to just at dinner parties, whatever it may be, is like, can this keep going, Brian? Because I've made so much money. I feel like I should sell some.
Some are moving